All right. Good morning. Good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday, the 11th, 9/11th. 9/11, 23 years. 23. It's hard to believe it's 23 years. All right. All the FANG stocks are up except for Snowflake and Netflix. Those are lagging a bit to flat. NVIDIA, Tesla, Amazon, Apple, these are all higher. Broadcom, just a little bit off the highs. Meta is higher, Google's higher, Microsoft looks good. All right, Supermicro, let's go take a look at Supermicro. All right, this is NVIDIA. I posted Amazon by mistake, sorry. NVIDIA, okay, Supermicro. Supermicro, okay, looks good. All right, Supermicro is turning the corner. So this will be something we'll be probably day trading. Yesterday we found out that it has a pretty decent range. What was it, like 12 points, top to bottom? And did get shaken out of some calls, only to see it rally right back up. So we'll be aware of that price action potential. Looking for a follow through, bullish bias today on Supermicro. Let's see, Microsoft looked good yesterday. In the evening session, Microsoft started moving. So we have a bullish bias on Microsoft. It's above Friday's high. And starting to retake some of these previous days' candles. All right. Microsoft, bullish bias today, Microsoft. Looks good. Microsoft. Looking for dips to buy. Okay, let's go take a look at the New York FANG. New York FANG starting off with New York FANG Index. Okay, New York FANG. Okay, let's get some commentary on here. Okay, Amazon's trying to take out the high today, Amazon. Could be a nice bullish day today. Let's see if they updated. Did Brett update? Okay, we got an update on Gamma. Let me do that real quick while we have 12 minutes to go. 12 minutes to go. Okay, he's late today. Brett is late. All right, I'm updating Gamma. All right, traders coalescing around a 25 basis point rate cut at the 918 a week from now. FOMC consensus forming suggests less rate uncertainty, which may allow for some retraction in equity vols. So VIX, look for VIX to pull back in other words. We don't think there's a substantial room for implied volatility decline. All right, so equities are one thing, VIX another. However, short-dated vols could contract with an S&P move above 5520. So we're looking for 5520, 5500 to be tested. Potential for 5500 to be tested. So watch the 0-day. SPY is already at the top Bollinger Band. So I would love to see a little pullback into the morning price action before taking off. New York FANG looks good though. Okay, Amazon's making new highs this morning. Amazon's still going. All right, so when we got the CPI, it dropped almost always. Whenever we see a drop on CPI, algos take it down, and then we come right back up. We've been higher since CPI has been drifting a bit lower over the months. It's updated every 6 months. We hear these announcements, rent is updated every 6 months. CPI, rent was up, I think, plus 0.3% or something like that, but way off of the highs that we saw in 2020. Okay, so Amazon breaching the 180 mark. Okay, Amazon looking good. Implied volatility is contracting. Okay, we'll keep an eye on that. 0 day is probably going to work today. I wouldn't chase it. Wait for it to come back a little bit because it's already up. SPY is up. Oh, what happened to my futures? Where's my futures? Okay. All right, futures up. All right, we've got 6 minutes to go. 6 minutes to go. As you know, first 15 minutes, I don't do much of anything except taking profits off the table, reassess the markets after 9:45, 9:50, looking for high relative volume, upward sloping VWAP with high relative volume, and some sort of catalyst, news, update, earnings, whatever. Upward sloping with high relative volume, looking for bullish trades, and downward sloping VWAP for bearish trades on high relative volume. Again, with caveats like news or announcements, like Intel, for example. Intel getting kicked out of the Dow. NVIDIA will replace. Thank you, David, for that update. Flat VWAP usually tells you you can do iron condors during the day, 0 day, or something like that. Or if it's individual stocks, that's probably not going to go anywhere. So go to the next stock, go to your next stock on your watch list. When you have upward or downward sloping VWAP, you're going to have more success than if you have flat VWAP, unless you're doing range bound trades. Then after 10 o'clock, we're looking for direction. And we'll be watching the number of stocks that are higher or lower. NASDAQ 100 and the S&P 500 monitored during the day. Presently, the S&P 500 has about 40 green, about 60 red, and the rest are unchanged. S&P 500, 40 green, 60 red, and the rest unchanged. So about 400 stocks unchanged at the moment. New York FANG Index stocks, we got Google pressing a bit higher, Apple starting to falter, Amazon seeing some profit taking into the open. Broadcom is trying to hold on. Microsoft, looking for Microsoft to do so. Let's take a look at Microsoft. Microsoft. All right, New York FANG looks good. New York FANG. Let's look at Microsoft. Okay, Microsoft is starting off with a bullish bias. It closed above yesterday's high. Closed above the previous day's high on Monday. Closed above Friday's high. Closed above Thursday's high. Closed above Wednesday's high, and now it just needs to attack Wednesday's high. Okay, it's definitely looks like a trend break. We got higher lows. Microsoft looks like it'll be something in play today. Don't chase it. Microsoft. Okay, a lot of stocks are seeing profit taking into the open. All right, Amazon rolling over. Okay, we got 2 minutes to go. 2 minutes to go. Watch your 0-day setup, the S&P 500 or the spiders. Let's look at IWM, small caps. Okay, trying to change direction. Got a hammer on IWM on the daily on the right. The Qs just off the highs. Hammer yesterday on the Qs inside of Friday's price action. Looks like we'll take out Friday's high. QQQ. Albemarle on the move. Okay. Okay, less than a minute to go. Less than a minute to go. Okay. What's going on with CNBC? No. Okay, no CNBC. I have to check that. Okay, Tesla, all the FANG stock. Netflix is taking the opposite direction. Netflix is gapping up. All right, we're open. First 15 minutes, taking profits off the table. Let's see what's going on here with the New York FANG Index. Mostly red at the moment, about 60% red. That's starting to drop off. Looks like more stocks are going green. ASML with a nice move on ASML. Tony mentioned that on the 9th, along right behind that. Susie was talking about it as well. ASML. Okay. ASML. Okay, it needs to hold up here in order to give us a bullish bias going into tomorrow. We got two hammers. SPY pulling back. All right, so that's what we want to see. SPY pulling back a bit. Okay, let me take a look at ARM Holdings. This is ASML, gapping up after two hammers. ARM Holdings. Okay, ARM Holdings following through. You know, yesterday I took a put credit spread looking for prices to move higher. It's a bullish strategy. Sell premium, look for prices to rise. Amazon dropping off now. Okay, NVIDIA taking off. All right, so let's keep an eye on NVIDIA. That one's pretty hot to trot. NVIDIA, hot to trot. There goes NVIDIA. There go. Wow, look at NVIDIA ripping higher. NVIDIA's ripping. I have NVDL. All right, I have NVDL shares. All right, so there goes Apple. Amazon dropping. Amazon. All right, so Apple. All right, what's Amazon looking good? Zscaler. I want to go take a look at Zscaler. I got to do something with Zscaler. Okay, Zscaler just sitting there. You know what? I'm just going to close this. I'll wait for a bounce. I'll wait for a bounce first. Rolled Zscaler last week for an $80 debit. All right, so Apple, Amazon still dropping off. Apple running into, let's see, 222.50, I believe, was the Money Magic lower strike call wall. 222.50, 225 are the strikes for Apple. 222.50 or above 222.50, so it looks like they're headed for 225. Apple. Okay, Apple above 222.50. So 225 is the next level.
Yeah, not exactly the best way you want to start at resistance. That's like rolling out of bed the wrong way, spraining your ankle to start your morning.
I don't know what it is about this guy. He just really bugs me. His commentary. He's talking about all this crazy stuff instead of the markets. All right. Stop being so critical, Vinny. NVIDIA. I got haters out there. I go. The S&P's pulling back now. All right. So important to wait and see what happens. All right. So the algos took it down to pre-market down to 545.50. We're down to 547. All right. So algos took it down on CPI down to 245.50. All right. So this is going to be a good setup. If it bounces and starts to grind higher, we might have an S&P 500 big cap 0-day play. Okay, up down volume is mixed still. It's still early. Apple above 222.50. Watch it to see if it stays up here. Okay, NVIDIA seeing a little profit taking. NVIDIA, I might do the same. Let me take a look at NVIDIA actually before I do anything. NVIDIA, let's take a look at the New York FANG. We want to see the majority of this moving higher. Okay, so we have rejection. RSI still drifting a bit higher, but flat. MACD's turning. Stochastics is starting to fire. But you can see what it did over here last time back in late July. This ran up to the upper trend line, forming a triangle pattern over the last few weeks. All right, so we're oversold on stochastics, trying to turn back up. We could get embedded again, so don't get tricked yet. Wait for it. Wait for it. Tesla pulling back. Okay, these dips, if we manage to follow through, these dips are going to help give you better entries. Amazon. Amazon starting to turn. I have call credits. I'm going to take those off for a profit. Amazon's been testing that upper range, so making me a bit nervous there.
Something that definitely stands out here today. Crude oil up 2%. S&P still dropping 54.73. So minimum we got to hold 54.
Okay, Amazon, I'm out. The call credits. Amazon.
The big concern that you're going to have here, Oliver, is if we kind of cross below 54.40, that's where you make exactly. That's where you start making a lower low on a relative basis. So we have a lot of work to do. The selling activity is not really surprising. Once again, that shelter component came in very hot. Transportation services came in very hot. Markets really try to digest it, and opening up at a resistance range level is just something that's not conducive for a huge breakout for the day. But we still have a long time to go through this session.
Okay, watching NVIDIA. NVIDIA doing really well. Okay, so the New York FANG Index stocks, watching NVIDIA. NVIDIA just cruising higher. All right, not a bad morning so far. Remember, Microsoft has a bullish bias, so we're looking for dips to buy on Microsoft. Ooh, I'm going to try to wait a little bit longer. Okay. Yeah, I took Amazon off. Rick, thanks. Okay, NVIDIA. Okay, sustaining this move. Look at the daily over there on the right, NVIDIA daily. This one could just keep going. Okay, let's look at the daily. All right, New York FANG. Let's update that. New York FANG. Okay, still a doji resistance right at the 100 period moving average. The 21 days right above that. And then the 50-day. I think we have enough energy to get back up to that upper trend line, complete this triangle. Okay, MACD's turning, stochastic's turning. This looks pretty good so far. RSI yet to come down to 30. Maybe it hits 50 and comes back down. I don't know, but it looks like the odds are for a move back up to that upper trend line. That would mean that we need some of these stocks to continue. Amazon's been showing strength, so I exited those call credits. Maybe we pull back a little bit more. Yeah, we are pulling back a little bit more. Okay. NVIDIA, though, NVIDIA looking really strong. Reminds me of the Beatles. Carry that weight. Okay, NVIDIA back to 110. NVIDIA has a bullish bias. You can see NVIDIA has a bullish bias. We close right at the Friday high. Okay, right at it, just above it. During the day, during the trading day yesterday, we moved above Friday's high, NVIDIA. Now we're opening up above yesterday's high. So that's good for NVIDIA, and most likely will continue to show us bullish bias. Okay, so NVIDIA looks really strong. NVIDIA, just stick with your stay on the train. Okay, next station is that candle. What's that? That Tuesday high. The next high is right around, let's see, 115. Oh, man. Damn. Okay, Scott with a big position in NVIDIA. Okay, looking good.
Whole lot of disappointment from the analyst community, unwilling to break on the sales floor, still hoping.
Okay, Amazon's starting to turn the corner. Okay, Snowflake rising. NVIDIA.
Integrated all the internet. They're going to really concentrate on making efficiencies, making money out of their sales, but market just still punish them. So Oracle also day two up 1.3%. Oracle is extending its strength. So
Okay, NVIDIA. Nice move on NVIDIA. So let's take a look at NVIDIA again. Okay. I'm going to remove some of these months here. Let me go to 6 months. 6 months so we can see a little bit more detail. Okay. So you can see the bias here. Okay. Each day we've made higher highs over the last 3 trading sessions. We took out Friday's high. We took out Thursday's high. Now we're attacking Wednesday's high. That doji. If we can take out Tuesday's high, we'll be above the 21-day. 9 and 21-day will turn up. So what I would expect for price action to do is get up to the high, pull back a little bit over a couple of days, maybe into Friday. Then next week, follow through and potentially take out 117.50, the 50-day overhead. RSI is rising. This is what you want to see. Stochastics is turning rapidly. We got MACD turning. Let's go take a look at the triple MACD setup, triple MACD. All right, the short term should be crossed, if not getting ready to cross. Okay, it has crossed. You see that? So this is a good setup. I love using this setup. Gerald Appel, the creator of MACD, the Moving Average Convergence Divergence Index, wrote an entire book about it. And the synopsis is use 3 time frames. Use 3 time frames, both for bearish setups, take your positions off, start to scale out when the upper short term turns down, put positions on when the lower turns up, crosses over bullish or bearish, okay, and then follows through with 1226, which is what most people use. So you're ahead of the game here with 1226. Traders will look at this as well. NVIDIA looking pretty strong. Okay, and then the long term, which is your swing time frame. These two are swing time frames, adding to your potential. So the short time frame, day trades, short-term swings, setup, stochastics is firing. So that's telling you to look for closes in the upper half of the daily range. On an average, over the next week or so, you should see more closes in the upper half of the daily range. And that doesn't mean every day will be a close in the upper half, but it does tell you by design. This one was designed by, what's his name? I lost track of my, Zane, not Zane. What the hell was his name? Traded cotton futures, created the stochastic. Lane, right? Lane? George Lane. George Lane. Gerald Appel, George Lane. Okay, so know what your indicators are telling you. Okay, so you can look for the reason why stochastics is important is very key to the way we trade. Okay, so if you take NVIDIA, okay, the fact that stochastics is moving higher off of oversold, the fact that it's doing that is telling you you don't need to chase this. You might want to take some profits off in the strength. Why? Because you know it's going to more than likely close in the upper half of the daily range. So what does that tell me? Well, that tells me don't buy the A pivot. Don't buy the A pivot. Anyone in the trading room has been here for any length of time knows you don't buy the A pivot. You buy the B pivot. You buy the B pivot. You wait for this to pull back. People will take profits. People out on the West Coast got up at 6:30 for the opening bell, 3 hours behind us. They'll trade for an hour. They'll exit the trade. Maybe some of these are already taking profits. They can go to work. They made their money. Maybe they bought overnight like Scott did. And they can sell into strength. So that's what they're waiting for. So you look for B and C. You don't want to buy A. Sometimes it'll just keep going, in which case we look for an A pivot around 11 o'clock, 10:30, 11 o'clock. Okay, so Apple fading again. Apple's fading from the highs. Okay, that looks good. Tesla's starting to turn. Tesla might be a trade. Netflix bounce. Okay, watching. All right, so we're still moving lower. So the indices right now are giving us the most bias at the moment. Okay, so you got a little turn there in NVIDIA. Yeah, that's good. Trim some. That's a good idea. And look for BNC pivots. If the BNC pivots show up on NVIDIA, excuse me, if the BNC pivots show up, then we'll have a nice setup later around 11 o'clock, 10:30, 11. Watch for that bounce. It's just like the algos when they came in with CPI. We've seen what algos do. CPI came out in the previous occasions where CPI was sold and algos took it down. What did the markets do? They bounced. But right now we're revisiting the low. We're right at the low now. We just overshot it a little bit, but we're at the CPI release lows on the futures. Let's see if we can turn back up. Okay, Netflix fading. All right, so Netflix was a fade. They popped it up. People bought into it. Novice or amateur traders bought into it. And they faded it. Okay, so let's go to Apple. Let's go to Apple. Apple fading the high. Okay, you can see there's some, not a lot, but there's some shorts up here, those red bands. Okay, let's go to the 4-hour chart. Want more data. Okay, you can see where most of the resistance is overhead, north of those call walls, 222.50 and 225 on Apple. Looking for Apple to bounce, looking for NVIDIA to keep going. Let's keep an eye on NVIDIA. Okay, look at the volume at the open. NVIDIA, look at the volume. Okay, there we go. Look at that volume at the open. Okay, we got buyers towards the end of the day. We had some more buyers. Scott bought after hours last night. Good job there, Scott. Okay, NVIDIA. Okay, we got day 8 coming up. Day 8, we're at day 7. Okay, also, don't forget all of those options. Don't forget all those options that were traded on NVIDIA. 2 days ago. Okay, those are the 10-4, the 10-4 NVIDIA. Been doing really, really well lately.
Fact, we got NVIDIA up almost 3%, Tom. So far, not enough for us this morning. We're fading anyway. Apple will start up higher, and that's been rough the last 2 days. It closed positive the last 2 days, but it started off red. So this is a bad start.
Okay, so buy dips in NVIDIA. Don't buy the high of the day. Okay, TTM has turned dark blue. So whenever it's dark blue, that's telling you the momentum is slowed. We're looking for TTM to go from red to yellow like Tesla is showing us right now. Tesla. Okay.
I'm sure he's not going to say anything negative at this point. Right? They still got a backlog of orders. Orders are great. Your growth is slowing, but his commentary on earnings, which was very, very positive, right? On Blackwell and everything. So I looked at that. If you think the stock's going to go up, or maybe you're comfortable buying it at a lower price point, I looked at a strategy that takes advantage of that. Where, hey, you can buy a dip if it does go down, but then you take advantage of all the upside shares too. Look at a combo here on the October monthly cycle, so 37 days to expiration. I'm going to buy the October 115 strike call, and then to help finance the purchase of that call, I'm going to sell the 105 strike put. Roughly about a buck for that.
All right, so we're at the lows of the day at the moment. NVIDIA, Apple. All right, we're starting to turn the corner in these. NVIDIA starting to turn the corner, starting to bounce. Let's see, this is the, I'm going to go to the 5-minute. By the way, if you have TradingView and you have a pay account, you can add TTM. They They have TTM. Somebody wrote a TTM Squeeze Pro version. Okay, so you can see when we got cyan bars, you're looking for more bullish action. Okay, let me change this to regular hours. Okay.
I'm wondering if you're tongue in cheek when you say you're looking for one indicator on when to sell Nvidia. I don't know if it's how
Okay,
serious
Nvidia.
about this.
Okay, we have a bullish bias for today. It doesn't mean we got to go straight up at the open. It means that we should close above yesterday's high. Maybe we retest the wick, yesterday's wick. There were some sellers there. Okay, let me go take a look at what's working. Let's see, the S&P 500. S&P 500 is majority red right now. Okay, so the S&P 500, mostly sellers. Okay, S&P. You don't need to do anything when you're facing mostly selling. Okay. Okay, 456 stock, and only 50 stocks are green. Okay.
So for me, it's Apple. I think Apple, outside of NVIDIA, is going to be the big winner when it comes to AI. It's going to take a while, but imagine AI on every single iPhone. Your iPhone knows everything about you. Put AI into that. Of course, I mean, they've got to.
All right, Taiwan Semi is what you're looking at. Okay, Snowflake pushing a bit higher. All right, NASDAQ 100, we only have about 25 stocks green. Okay, so just chill. Let's just wait for the cavalry to show up if they do. Okay, S&P and the NASDAQ. 28 stocks green. NASDAQ.
Because Google, Google knows everything about us, and they're not executing, and you see that in the stock price. They're the only one of the Magnificent Seven below the 200-day moving average. So we're still in the first innings here. So much has yet to happen. So we can look and see, hey, there's potential, but these companies still have to execute, and they're trading at such levels that if they don't, you're going to see it in the stock price.
All right, wait for this selling to dissipate. Okay, Snowflake on the move. Snowflake had a nice little bounce yesterday. Snowflake, Amazon pulling back and starting to base now. So I'm not too far off of the low of the day. Taking those off. Okay. Apple.
A lot of haters in this stock. I don't like betting against Elon Musk.
Fair enough. Alphabet the weakest. Apple favorite. Buying dips in Nvidia.
Okay, Apple. I'm out of call credits of Apple. Apple.
Appreciate it. Couple good thoughts there and looks at the charts. You're trading Tesla. What do you think, Tom?
October 10th, Robotaxi Day. That's going to be the big catalyst. Robo Day. And I think that's why you're seeing this thing outperform as far as the tech.
Okay, Apple. I'm out those call credits for a small profit. I could wait, but these stocks have just been acting too strong. There goes Snowflake. Snowflake pushing a bit higher. Snowflake. Don't chase. Don't chase. Look at Snowflake. You can see it's moving above, trying to get above Monday's high.
So just about 23 days to expiration, you're going to avoid the event, but you can trade it ahead of the event and see what happens there. But I looked at selling an on-the-money put vertical, a little bit neutral to bullish stance here. Where I'm still going to give myself a cushion to the downside, but it's still bullish directionally. And looked at selling the 210 strike put, then buying the 200 strike put, $10 wide short, neutral to bullish.
Okay, Nvidia trying to bounce.
About a $3 credit on it, and that takes my break even all the way down to 207.
Okay, what is the S&P doing? S&P is still pushing a little bit lower. Snowflake, all right, a little profit taking on Snowflake. Okay, we're watching for these to give us a more bullish bias. We need to get above Friday's high. Snowflake.
Put spread, sell the downside. I feel like that's a solid trade. Tesla has had enough outperformance to get it to break away in a positive way now for about a month running. So not bad for Tesla. All right, thanks for the trades, Tom, and that's all for the thoughts. When we come back, hour two, watching stocks.
Okay, Snowflake, you can see overhead, there's some supply. We need to get above 111.50 or so. We got immediately rejected at that point. All right, so NVIDIA still consolidating. NVIDIA. Okay. Bitcoin, big drop in NVIDIA, Bitcoin taking out yesterday's entire move. Bitcoin. Okay, let's look at Super Micro. That was one that we were looking for a bullish bias. Bullish bias. Okay, so this little dip going to give you an opportunity on Super Micro. Thank you, Jason. Yep. Some of you trading Roblox or BLX, Roblox, still hanging out, trying to break out. Okay, Roblox, if it gets above 45, 45.10, should go. Okay, live screen. That's Roblox. Okay. And then above that, you've got 46 to 48. AQST you're looking at? Okay, let's look at AQST for Jason. AQST. Yeah, looks good. I like it. I like it. AQST. All of these therapeutic related names, therapeutics, I don't want to say biotechs, but those type of stocks that are on the edge of using AI and different things to boost price action and profits. This one looks pretty good. It's only a $4, almost a $5 stock. Tight Bollinger Bands. RSI is leading the right way, Jason. Stochastics MACD. MACD is trying to turn up. Okay, let's look at the triple MACD setup. Always look at that before I do anything. And the weekly time frame. Okay. So the short time frame has crossed over. These two are trying to turn up. I like these better when they're below zero and turning up. That gives you a better pop. You can see what it did the last time. It from 224 up to 470. When we're below zero and we get the crossover, much more powerful than if we're already up there and trading at highs. But nonetheless, it looks pretty good. What else did I want? Oh, the weekly time frame. Let's take a look at the weekly. Okay, weekly looks pretty good. Okay, daily, weekly looks good. Okay, Netflix still fading. The FANG 10 stocks are up for 2 days and now they're fading. So more than likely people are thinking, oh boy, I bought the high of the day yesterday or I bought the high of the day this morning. And now I'm going to sit here and suffer. So where do institutions get the liquidity? I mean, there's only a finite amount of shares out there. Where do institutions get the liquidity to pick up shares? They don't want to buy it at the high. They want to get dips to buy. So what they do is they form these barriers, these supply zones, and they'll let prices drop. Okay, they'll let prices drop, and then most people will get scared. They'll sell at the low, and then what happens? Institutions come in and pick up shares. That's what happened with Supermicro yesterday. Okay, we got shaken out of Supermicro, but it's turned the corner, and the daily is looking better over there on the right. Supermicro. Okay, we got a bullish bias. We're above Friday's high. We're above this week's highs, making new highs. Okay, so we're just looking for that histogram to turn the corner on the daily. Apple's still drifting a bit lower. Snowflake. Okay, Broadcom having a break, taking a break today. All right, so the New York FANG stocks are taking a break. So let's go take a look at what is actually working. Let's look at what's working. Okay, so Albemarle, that was mentioned by Sundog earlier. Albemarle up 10%. Don't chase it. It's probably going to stay below 93, 94 for now. And base, if it's going to follow through. There goes First Solar. AES following through. AES Corp. Let's go take a look at their earnings. AES. AES Corp. Okay, they missed expectations last time around. This looks pretty ugly from the earnings standpoint, so I'd probably pass on this one. AES. Okay, I want to see all four of these green. Okay, let's look at ASML. ASML, hot topic. ASML. Okay, looking for that to turn the corner. ASML beat expectations. Only two. Okay, so earnings growth and earnings revenue. Earnings revenue growth is not that great on ASML. People are trading it though. Let's look at ASML. Okay, so we got a gap up, mean reversion on this one. ASML. ASML doesn't have that great earnings growth or revenue growth. They beat expectations. There was a revenue surprise, so maybe they're changing direction. Okay, we're just waiting on the S&P. S&P just grinding a bit lower at the moment.
Not necessarily what stocks wanted to see, it doesn't look like, but again, we're not taking out key levels that we've already tested and have come off. Now, again, we could take out yesterday's lows, that would be significant. Yeah. But you still have Monday's low below and Friday's low to my earlier point. I mean, this is not a market that's just...
Jensen is speaking at 10:20 a.m. Goldman conference. All right, so that should be interesting.
Multiple attempts to get through 55 and fail. And so the little springboard we got from Sunday night futures up until basically yesterday late afternoon looks like it might have just hit a wall there as we fail now 3 times at 55. Okay, hit a wall at 55, but also holding the line at 54.50. Yeah, and holding some of those other areas that we talked about to the downside. So again, a digested trade, a market that's waiting for more information. We were talking about how the jobs data would be significant last week. It didn't really tip the scales. Today, in the CPI, kind of a similar situation. Watch out. PPI sometimes have been the sleeper tomorrow, right? You kind of feel like you got all the jobless concerns in the rearview mirror, and then jobless claims, right? Don't forget about that because really a weak number there could, or a strong number, higher than expected, tip the scales one way or the other. But again, here, Oliver, take out those lows from last week, and then we can even push those August lows are more significant. So that's when it starts to get real juicy. But the beauty of this is that's what we were talking about. The high conviction trade.
Okay, so right now we're just we're at a pause. We're waiting for the indices to give us direction. Right now we have a bearish signal. We only have about 25, 30 stocks green on the NASDAQ 100. We have about 45 on the S&P 500 that are green. The rest are red. So when the majority is red or selling, you don't want to jump in feet first, all right? You want to wait for the buyers to start showing up. We'll see that in histogram, TTM. Tesla, watching Tesla. Broadcom, a little bit more selling. Super Micro. Okay, Albemarle. Albemarle, a little profit taking in Albemarle. Okay, First Solar, very strong price action in First Solar. First Solar. Number 2 on the S&P 500. First Solar. Let's see what AES looks like. AES is number 3. AES as well. Enphase. Enphase.
Right now in determining what the Fed does, that tomorrow might be even the heavier, hammer on this market, depending on what jobs is going to do. Because look, you take out the odds of 50 bits earlier this morning after inflation, but if equities tank and bonds start rallying again, then you're going to get that 50 bits starting to get priced in.
Amazon trying to hold this level. There's a very large area of liquidity down here. Okay, you see that large area of liquidity? Where do you think they're buying? You think they're buying here or up there at the highs? I think they're selling up at the high. Just a guess. Sarcasm aside. Let's look at, let me go to the hourly chart over here and see where the short-term resistance. Yeah, short-term resistance is right overhead. Amazon. Let's see what Supermicro is doing. Supermicro. Supermicro, okay, you can see if Supermicro manages to get through this 423 area, we could see this launch. We made the mistake of buying too soon yesterday. Okay, so let's keep an eye on this. If you use TradingView, someone on TradingView created the TTM Pro or TTM Pro squeeze indicator. What's his name? Fred. Beardy Fred. So that's good to have. So it just takes TTM and it gives you colorized bars, histogram. So you can sense when the trend is starting to change. You can see on the hourly chart, getting a little overbought right in the middle of supply. So you don't want to buy there. You want to wait for this to taper off a little bit. All right, you can see that super micro, that dark blue, starting to show up on the 5-minute. That just means there's a little bit of profit taking. That's the way I would read it. CNC, nice pop, and then ABCD pattern early. Molina Healthcare, same thing. Oracle looks like it wants to go. Don't forget about Oracle. Basing. Okay, Oracle, don't forget me. Oracle basing at highs. Okay, Oracle. There's a day, the hourly chart on the right looks like it wants to break out. Oracle has good prospects, I would believe, given the exposure to AI and the partnerships it's putting together. Many of you mentioning yesterday. Here's Oracle earnings. Survey says all 4 metrics are green. This is what you want to see if you're a swing trader, okay? So always check Earnings Whisper. This is a free website. All you have to do is give them your email. But if you're going to take something swing long and it's a quality company, make sure all 4 of these are green. Okay, the statistics over the last 20, 25 years, I forget how long they've been doing this, but I think it's like 15 years. But they've used statistics over 20 years. Whenever all four of these are green, your prospects of a better swing setup are much better. You just want to make sure that you're taking the trade um, at a good area, a good base, a good support level. So right now we're still basing up here. Oracle's still basing. I'm not telling you to go ahead and buy it right here. What I'm saying is keep an eye on this because this is more than likely going to flesh out in your favor. All right, we're already in the wick. You know what looked like this a few weeks ago? Was what was it? RTX, Raytheon. See that open right there? After earnings, it went sideways and then it started grinding higher. Okay, right now it's basing at a higher level, but you want to watch for a few days at least for a base. Okay, so Oracle doing what it should do, and all of those metrics are green. So Oracle probably pulls back in a little bit. Okay, it's right at supply. Okay, let's look at the 4 hour. Okay, actually, there's no supply up here. Come to think of it, because it hasn't traded up here in a while, right? Let's look at the weekly on Oracle. Oracle. So let's say you are an investor time frame and you're not interested in day trading. What you're interested in is, long term. Okay, you can see we're pretty extended. That doesn't mean we can't go higher. Okay, it reminds me of that it reminds me of the William O'Neill quote about the paradox about stocks being at highs. Okay. The great paradox of the stock market is that what seems too high in price and risky to the majority usually goes higher, and what seems too low and cheap usually goes lower. So, what was he talking about? He was talking about cheap stocks are usually cheap for a reason, and stocks that are at highs, trading all time highs, are pushing higher. Why is it pushing higher? Because institutions are buying. Do you see the volume? Yes, I see it. That's yesterday's volume. Let's see what today's volume has in store. That said, I'm not in a hurry to buy Oracle. I would like to buy a little bit of a dip, but I would like a position. Okay, so you got everything working for you, just a little bit extended right now. You got volume, you got institutions buying, you got a base probably forming up here. You got all four metrics green. Okay, that one right there, earnings growth is a big tell, 46.3%. Okay, they beat the top expectation. Okay, and they're partnering up with a lot of companies that are more than likely going to continue investing. Okay, so right now you got Amazon, you got Apple, you got Microsoft, you got who's the other one? Buying NVIDIA products. Okay, speaking of NVIDIA products and partnerships, let's take a look at Dell. Dell needed to get above the 50-day, right, or the 200-day. Still sitting at the 200-day. What's Palantir doing? I told you the other day, don't chase Palantir. Okay, and that's why. Okay, so think of Palantir and then put your Oracle cap on. Okay, so look what Palantir is doing. Okay, it was added to the S&P 500. Do you want to chase it up here? No, you want to wait. Okay, same thing with Oracle. Do you want to chase it up here? No, maybe you wait. Now Oracle, maybe a better opportunity because it's a quality company that's been around since 2000. The 1990s, right? It was around in the dot-com days. Remember that? Oracle used to shoot up like 20, 30 points and it dropped 20, 30 points. Anybody that was trading dot-com knows what I'm talking about. Intel was in there. Intel when it was at the top of its game. Poor Intel. Okay, S&P continues to move higher, move lower. You're not doing anything right now. You're waiting for the markets unless you're short. Bitcoin pulling back. Let me make a little alarm here. All right, so watch for a reversal around 11 o'clock. Okay. Okay, let me see what my daughter's schedule is. Okay, she gave me her schedule. So my son had a good time taking photos of the girls' volleyball game yesterday. It was funny because they know his name already. I was like, geez, it's only like the third week of school. They know his name. Hi, Antoine. Junior varsity. Junior varsity. They won. They won like 25-4, 2 games in a row. Girls volleyball. They were really good. I was like shocked. Anyway, we're sitting here waiting for the markets. Market's still drifting lower. Don't mind me. I'm just looking for something here. Okay, where's your schedule? Monday, Tuesday. Today's Wednesday, right? Wednesday. She's got 9:30. All right, she's in class right now to 10:45. Okay, 10:45. Daughter is enjoying Duke University. She's going to Duke. She said it's really hard. I said, no shit. It's like Ivy League of the East. Duke, North Carolina, the Research Triangle. Anybody go to the schools over there? Okay, Oracle. Oracle looking okay. Okay, let's look at Oracle volume on a 60-minute. The other thing you want to look at is a 60-minute. Okay, look how far we are extended from the 60-minute. Can it come back? And then the 60-minute 20 EMA catch up? That's probably what's going to happen. Look at the volume. See how the volume is tapering up? This looks good. So I'm very keen to do something with Oracle. Frano was in before earnings, so that was great. That was a good one.
And there's some support right here in the 50 and a half to 51 area. If it breaks through there,
Yep.
really 48 and a half or so is the next spot. And I just think that in this report,
it has a pretty big range, pretty sizable range on SMCI. Watch for a bounce after 11, Jason.
And I don't know how they're going to do that without compressing margins. So if we hear that at all in the rhetoric in the conference call, you're going to see a big downdraft here. So I'm pretty bearish. I'm pretty negative on the print.
Okay, let's look at Supermicro one more time. I just want to show you something, Jason. Okay, so Supermicro is coming off the lows. The markets are pulling back, so it's going to take a lot of things with it. It's making higher lows. So what I'm watching for, see, is a tighter range day than it was yesterday. But it looks like it's going to take out the low first and then reverse. So look around 11 o'clock. That's probably going to be your better entry. Okay, understanding what a lot of people come in, especially new traders, and the first thing they do is, oh, everybody's talking about Supermicro. Let me buy Supermicro. And then it pulls back on them. That happened to us yesterday. I got stopped out. No big deal. It closed higher on the day. So it's starting to get used to its price action. I've only traded Supermicro a couple of times. First couple of times was with shares. I think I played options about a year ago on Supermicro when it started running up. And from the recent price action, understanding that the low will probably be in somewhere between, say, 10 o'clock and 11 o'clock. And then we'll look for a bounce. The buyers that were present yesterday will most likely show up again today. They're probably thinking the same thing. Let's buy on the dip. Okay. Now, Glasshouse came out and said that, was it Birkin, Bilderberg, or whatever the name of the short is? They came out and said that their metrics they were using, talking about, Bilderberg was talking about SMCI. The reason why they're delayed is because they have some faulty record keeping or some shit like that. Glasshouse came out and said, the metrics that they use were not accurate. And we are long into the foreseeable future that this represents a good risk reward. Okay, so that said, it needs to get above that 9 EMA, that dotted blue line. All right, so Supermicro will most likely follow through, but it's at the low of the day right now. So is that a bad thing? Well, the S&P is also at the low of the day. So watch the S&P. If that starts to turn, and then look at SMCI. If you're only watching two things today, super micro and S&P, that's what you want to keep an eye on. Watch the Qs maybe. Let's see what the Qs look like. Okay, Qs also could be producing an outside day. We have two bullish days and a bearish day. Okay, let me set an alarm. I have to take the son, of course, to school at 10 after 11. Okay, so that's there. Okay. Okay, so Oracle's not giving it up. Oracle's not giving it up. I'm tempted, but I know better. But I know better. Oracle probably runs a little bit higher. I'd really like to buy some super micro. NVIDIA. Okay, NVIDIA looks like it's about to turn here. Watch NVIDIA. Okay, let's take a look at NVIDIA. Let's study this for a second. NVIDIA. Okay. Okay, NVIDIA. All right, so we have 4 days in a row with wicks at the low. For the past 3 days, we've had higher lows and higher highs. Okay, we got a move down to the low of the day. So let's take a look at the 1-minute chart. We're getting a buy signal. Okay, we're getting a buy signal. So I'm going to buy some NVIDIA. I have NVIDIA shares. Let me buy some verticals on NVIDIA. It might be too early. We'll see. Trade NVIDIA, NVDA. Let's go for, I'm going to go out to the 27th. And where am I? Okay, there I am. I'm going to buy right at the money, the 115s. No, that's not at the money. 109s. Okay, let me go. Oh, this is jumping around. No wonder. Okay. Let me go to a vertical. Buy a vertical. We buy at the money. We buy at the money. And what? Let's see. It's trading 109. Let's see. I'm going to have an open order. I don't have this yet. So let me go 110, 115. I'm going to do 110, 115. I'm going to go out 2 weeks to the 27th. 110, 115. That's $2 debit per contract. All right, I'm going to watch this. I'm going to watch NVIDIA. Okay, NVIDIA. Okay, watching NVIDIA. Okay, so we still got blue blue TTM bars. The yellow bars on the 4-hour chart indicating what we were talking about. Higher lows, higher highs. Just watching. All right, so I got an open order on the 110, 115. I'm not going to press the buy button yet. I'm going to see if I can get it. I'm going to put a limit order down at 175. And if I'm not paying attention, I'll get filled. 175 seems like a good area. Let me go 180. 180. Okay, so I'm looking at the NVIDIA 110, 115. Oh, shoot. This looks like it's going to turn. Let me save that one. I might add to it later. Okay, NVIDIA. Okay, buy vertical. Okay, it looks like it's going to turn, NVIDIA. Okay, let me go over here, put NVIDIA up here. NVIDIA, Oracle just fading a little bit, NVIDIA. Okay, NVIDIA, still red histogram bar on the 5-minute. I'm going to wait. It is only 10:26. Wow, that last 20 minutes went by really fast. NVIDIA. Okay, so you could put an order in here with a stop underneath 108.90. That's the PMZ, the pre-market zone. Okay, looking for a follow through. NVIDIA, looking for this bounce on NVIDIA. Okay, NVIDIA. Okay, the risk is 43 cents, NVIDIA. Okay, risk is 43 cents. So we'd like to see more buyers. Okay.
With the ability to potentially write covered calls against those companies as well. So acting as an additional hedge should markets decline. And we have our Devo ETF, which is our flagship fund at Amplify, that really focuses on those high quality names that pay dividends, but also because it's actively managed, the manager can step in and actively write covered calls on the individual.
Okay, let me show you what I'm looking at here on NVIDIA. Okay, NVIDIA looking for a bounce. Okay.
So you're really going for income here. You're going for security, but staying within the equity asset class. So I assume that for many, that is a way to stay within their mandate.
Yeah, if you really need equity exposure, but you want maybe more peace of mind, this is a hedged way to participate in the equity side. Because this is a robotic covered call strategy, you still are.
Okay, we're looking for a bounce, and we still got the only caveat is we got a red histogram bar on the 5-minute. Okay. Okay. I got a limit order in at 180. Maybe I'll adjust that a bit higher. I'm thinking we could make a little bit more downside. The S&P is starting to hold right here. S&P is trying to hold right here. You can see this area of supply right below. Where is my volume? Volume. Gotta have volume. Okay. Okay, no follow through yet. Okay, those order blocks are right below. Supply or liquidity down below on NVIDIA. Okay, I'm trying to get filled at 180, $1.80, 110, 115. S&P 500. Okay, NVIDIA. Okay, NVIDIA 5-minute. All right. Yeah, Zscaler. I got to take that one off. Zscaler's not doing anything. Zscaler. All right, let me take a look at Zscaler. All right, NVIDIA is not moving yet. Zscaler. All right, Zscaler, I'm out. Okay, that was from a roll after last week's earnings. Zscaler, I'm out. Okay, a loss there on the roll. I did a roll for 80-cent debit. I just got out for 25 cents. So a little bit less than what I paid to roll them. Got out of trouble from the week before because they were down quite a bit. But we did have, that was on Broadcom. Broadcom, we had puts. Zscaler, we did not. Okay. NVIDIA not doing anything yet. So we're still seeing lower lows on the S&P.
closed-end funds tend to use leverage. They leverage up to 33% of their portfolio.
Yes.
So as interest rates kind of climb downward, you can actually benefit in decreased leverage costs, which turn into higher income potential for those closed-end funds. So, you know, you can do a 5% kind of equity.
Yeah, John, that was earningswhispers.com.
And benefit as volatility spikes because you get more option income from covered calls. Or you can look over at the bond alternative or that bond.
Yeah, set it and forget it.
Yeah, exactly. So kind of two ways to, I don't want to say hide out, but maybe sit the fence a little bit during choppy market times.
Yeah, I mean, look,
Okay, so a lot of stocks that everybody was bullish on yesterday. Seeing a little bit of more profit taking. Nvidia, I'm trying to get a fill at $1.80 for the 110, 115 for the 27th of September, a couple of weeks out. Okay, let's take a look. Okay, the S&P 500 only has about 10 stocks that are green at the moment. The majority of stocks are being sold again, so I guess people are worried. Maybe institutions are taking the opportunity on the little bounce that we get to get a little bit more off their books. CPI, initially we dropped pre-market down to 545. We're at 540, 5 points below that. So we're down 70 handles on the futures.
Participation as well. This year, you know, certainly the fund has benefited from kind of what's happened with the S&P and with treasuries.
Okay, so nano-nuclear was mentioned yesterday. Nano-nuclear, Frano mentioning, a few people mentioning it. Okay, nano-nuclear is working.
Portfolio, but then also, you know, potentially positions the S&P side of the barbell to do well as well. So this is a product that is, I think, great for, you know, the people who say, well, what if I'm wrong? You know, if I'm wrong about
RBLX, RBLX.
you actually are in the game either way.
All right, so Roblox seeing, okay, right at liquidity. Let's see if we liquidity.
Especially shines, but again, in a flat market to maybe a declining market, this is probably our ETF that offers the most hedging ability, and certainly has had a good year this year due to rates kind of seemingly being cut here going forward.
Yeah, it's an interesting approach, and the more the market pulls back, the better the flips in comparison. It's now almost on track with the Nasdaq on the year. It's only like less than 1% away. And the S&Ps, as they've come under pressure, obviously the gap closes here too. So it seems like the last couple months has been generally good. You get to bounce back with the S&P options, and then right now Treasuries are just unstoppable. So the bottom part of that barbell is doing some pretty heavy lifting, I imagine, right now, right, Christian?
Yeah, that's right. And, you know, for those who are maybe owning buffer ETFs or, you know, some of those products that have a capped upside or downside.
Yeah, you're kind of stuck.
Yeah, you're not stuck. And that's where Swan really, I think, makes a lot of sense. Certainly, we've seen a lot of interest in the buffered side. This is a nice alternative to not necessarily be stuck in these artificial caps.
Got it. All right. Thanks, Christian. Appreciate it. Good ideas. Good to catch up.
Take care.
Likewise, Christian McGoon, CEO of Amplify ETFs, right? Triple Y for the income, Devo for the dividend, equity exposure.
Okay, Roblox, looking at these areas, liquidity for Roblox. I see you guys ladies are looking at this. Okay, futures, looking for, okay, so NVIDIA coming down to an area where I'd like to buy it if it can bounce. Roblox, I just posted a chart with notes.
Even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab. trading the trending names every day. It's fast market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on fast market.
Okay, looking for roadblocks to bounce off of this area. This is an area of liquidity. We'll see if we TTM can turn as well. All right, NVIDIA, no turn yet. NVIDIA. Okay, so what I'm anticipating is that we're going to make a low probably around 11 o'clock. If it doesn't happen, then, you know, it could be just a bearish day.
Schwab investing themes, 40 customizable themes up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free.
What happened to my... What happened there? Something happened to my chart. Is it here? No, it's not there. Where is it? I lost the chart. S&P 0-day is still dropping. Future's still dropping. Okay, so probably going to scare the crap out of a lot of people. And they buy the dip. If that doesn't happen, then, well, we'll have to reassess at that point. But all right, NVIDIA pulling back a bit more. NVIDIA.
Signature picks. I've never heard of signature picks.
I always love, okay, this is like
NVIDIA pulling back a bit more after a nice run up this morning. Zscaler, Super Micro.
Signature picks is like
Okay, tech is off a little bit.
signature stick.
Amazon.
Signature, you know,
signature entree. Signature, like, yeah.
what is
The pick on, yeah. This is like totally like some deal
What's
you're
up?
getting
say
in.
your favorite stock.
Their favorite stock. So yeah, Wells did say that they're adding Shopify, Spotify to their signature pick portfolio.
Is that,
increasing Vertex pharmaceutical position, removing actually this week. So start off here. Shopify,
yeah.
I mean, I know it's modestly lower today, but this has been like.
Great stock.
I mean,
Okay.
I think that this is
Okay.
the banner of all three of them.
This is all the signature picks.
Okay, so most stocks are lower. Okay, you've got
Because to me, there's an element of like
pretty
like fear of missing
decent amount of selling here, so I wouldn't be doing much of anything. Okay.
They just win like a pretty major like long running lawsuit that actually had to do with like streaming Eminem's music, which I thought was really interesting because I'm an Eminem.
Okay, S&P. So it's a sell.
These major deals.
The strength morning. We got 18 stocks on the S&P. 500. 17. All right, so fewer and fewer stocks are green.
This is to me like the most important app I have out there. I mean, we were raised in the era of paying per each song, which was just a disaster. So I feel like raising price.
Doing it above ground.
Well, that's true. Or like crashing your computer on like LimeWire or whatever we used to use to like download music, which was always a disaster.
Hey, every time you and I talked about Spotify for years, we've always talked about like how it seems that they were.
Okay, NVIDIA with a gap fill. Okay.
They're appreciated.
You know what?
First Solar holding. First Solar. Okay, First Solar. FSLR. First Solar. Okay, so I wouldn't be chasing First Solar. So I guess the Democrats were talking about solar. I mean, they've been talking about solar since Obama's years, right? Remember Solyndra? Was it Solyndra? Was that company that went bust that the government bought so much interest in? It's kind of like the Intel investment.
Yeah, I definitely have some music on there. The app, you know, the chart is actually a little bit confusing over here, Oliver. You know, I understand some of the positive sentiment when it comes to the application itself, but the stock has been kind of breaking down here a little bit in some respects. Now we had a nice little trend to the upside. You could actually see that.
First Solar. Okay, so what are you guys looking at? SMCI. SMCI. Okay, so long as it stays above yesterday's high skier, you should be fine.
Now, once again, the chart looks really bullish in a sense. We're looking at the past, but going into the future, we also look at that value profile, and it's a little bit light if we do break these levels. The first area of support is going to be the $300 level. That's the first major node within this chart. The next area of support, 272, which matches up with that 200-day moving average. And if we actually fail both of those, then gapping all the way down.
Okay, long as Supermicro stays above or closes above yesterday's high. Okay, we made the high of the day. We're pulling back. I wouldn't be surprised to see a lot of people get shaken out this morning. So wait a little bit longer. Amazon, much lower. Amazon. All right, so I could have waited a while. Probably got out at even instead of taking a small loss. VIX. I added to it. So I had a portion that was a profit and another portion that was a small loss. Net, it was a small gain. Amazon. But Amazon continues to drop off pretty quickly here.
Okay, let's talk the Shopify of the advise. I think this is the shop version is a little bit less convincing.
So Nano Nuclear having a good day so far. Nano Nuclear. Okay, so we got in at $8.80. You guys got in it earlier. Nano, still going. Where'd you guys get in? And who brought it up? Okay, Nvidia continues to drift lower. Nvidia, so I'm gonna move my limit buy lower.
Significant growth, and I think that they're continuing to solidify themselves as like the go-to really e-commerce platform for like small and mid-sized businesses. Puts them in an interesting position. You have to find your niche. Competing against the behemoth that is Amazon.
Totally. I feel that still it gets those sellers are going to get.
All right, so this looks good. It's creating a bullish bias, Frano. Each time it closes above the previous day high, we're adding to that bullish bias. 50 days overhead at 14. The Bollinger Bands are at 12. I would expect prices to stay between 1150 at the high, where we are presently, 1150, 1160, and maybe the upper Bollinger Band at 12-ish.
We had that fail, that gap down back in May. We continue to retest it, failed it, and then we actually had that break higher.
NNE continues. Nice look to it. NNE. Let's see what the news is here. Nano Nuclear contracts with, you said this earlier, right? What's going on? Nano Nuclear to join the Russell 3000. Okay. NNE to join the Russell 3000. So you know what that means.
Right now, and then you should be expecting either a break up or a break down. Area of resistance 7706 is going to be the point of control in the volume profile. Obviously, that's going to be the most volume traded at that particular level here. And we have this gap to the downside, pretty much trading or sitting at around $48 to around $55.
3,000, not 300. Sorry.
You could actually see us retest that gap or try to go back into that particular range.
Okay, so do you want to buy the high? Probably not. Probably want to look for a dip on Nano Nuclear. NNE. NNE is one that people mentioned in the trading room. Frano's been in it a while. Supermicro. All right, so most of the tech stocks are pulling back. Tesla pulling back. Zscaler trying to turn up. Nvidia pulling back. Okay, Nano. I might add to this one actually. Nano Nuclear.
lucrative for a name like ESPN Plus and Disney. I will say, I think I did. You can still stream. I watched a game via my Disney platform. So great.
Nanonuclear pushing higher.
Like Hulu, one of them. So
All right, just added to it. I just added shares.
that's the thing that there's like that should be notoriety, and we're on like what is the most like widely viewed sports season of the entire year. So that's at least a positive catalyst. But yeah, gosh, Disney.
Okay, that's the high of the day, so it's a little tricky. All right, so I'll probably add some more if it drops back down to 960, 980. But the news is that the company is being added to the Russell 3000. That was yesterday. Yeah, that's true. As long as it works, yeah, buy high, sell higher is better. Yeah, for sure. Institution's going to have to buy, so I'm pretty comfortable with this one so far. Nanonuclear being added to the Russell 3000. So you know that institutions are going to have to add shares.
When we come back, time for market meetup. We'll look at the session, the unwind of early strength, tried the rally, didn't happen.
Okay, looking for a bounce in NVIDIA. Okay, looking for that histogram to turn yellow.
Now a big red candle when it lows of the day. Bonds are back to where they were, almost full circle from the inflation-driven sell-off in bonds this morning.
Okay, some profit taking there. Profit taking. So you've got people who, like Ross Cameron over at Warrior Trading, they'll hit this with like 10,000 shares and they'll take it for 10 cents, 20 cents. Okay, so we got lower highs, higher lows, higher highs. Sorry. I'm just looking at NVIDIA while I'm talking about NNE. It's coming up to an area of supply where it had some resistance before on the 4-hour chart. Let's look at the daily. Okay, so the daily shows the same area. So if it gets above 1175, okay, should run to the highs. Let's see, Nanonuclear. This is an IPO. $37.50. One ultimate all-time high.
Welcome back to Morning Trade Live. Stocks hit. We're at the lows of the day. Joining me, George Tilson, Caroline Woods, our senior markets correspondent. Caroline's in New York. George Tilson.
Okay, 1175 on this one. I don't like taking a lot of risk. Okay, so I only have 600 shares. I just added 100 shares. Only have 600 shares of this one. But if it continues, I can add to it. Is there any options trading on this? Maybe I can sell some covered calls. This continues to ramp higher. Okay.
JP Morgan only down about 1% right now. Obviously took a hit yesterday on some kind of downbeat commentary in terms of the net interest income from the COO and Jamie Dimon basically saying that stagflation in the form of inflation and recession, kind of the worst case scenario, wouldn't take that off the table. Goldman Sachs down about 1.5%. Morgan Stanley, Wells Fargo down more than 2%. And then some of the regionals I had mentioned are lower as well. M&T, KeyCorp, Zion, Truist, Western Alliance. I mean, Zion down about 4% right now. And Ally, which I know was a big loser yesterday, is continuing its losses as well, down a more modest 1.1%. It was down 17% yesterday after it.
Okay, I just posted on Twitter. Okay. X. I just posted on X Nanonuclear. Let's see if anybody's interested in joining us for the ride. Let's see if anybody's interested. You guys are in already. Frano's been on a while.
Seemingly unstoppable, George. As soon as equity started looking weak, bond bulls just stormed back into the picture. I feel like that's speaking volumes to us right now about where we're at in the cycle and how real the slowdown risk might be.
Well, I mean, obviously things are slowing down economically speaking. Bonds are a safe, liquid place to be when it comes to some of the risks that right now, especially in the equity space. It looks like if you look at the federal funds futures, which I just a moment ago, we're back to 25 basis points cut expectation. Obviously, we're selling off as a result of this because the perceived panacea of this, larger rate cut.
Okay, it looks like NVIDIA is trying to reverse, move higher.
Seasonality, we know that seasonally speaking, this is a weak time.
It's below the pre-market zone, right before the open, 9:15. Between 9:15 and 9:30, that PMZ chart setup gives you a little green shaded area. It gives you a risk reward. Okay. Okay, looking for NVIDIA to change direction. So that means we'd be paying attention to the futures as well. Futures are sitting here not happy with the pullback. Okay, Nanonuclear, SPX, S&P. All right, starting to get yellow bars. Okay, on TTM. All right, so this might be a short-term low. Could also be just a bear flag. So be aware of it.
You saw really some strong strength in large mega cap banks, JP Morgan. You saw strength in the energy complex. Now you're seeing weakness. I don't look at this as very good, to be honest with you, especially with the banks, coming out and really just declaring that they're not as strong as they once expected, just going back not too long ago. So
Nanonuclear. Okay, let's look at the 60-minute. Okay, so we want the odds in our favor. Odds are in your favor when price is above the 20 EMA. That's the green line. 20 EMA on the 60-minute. This time frame is the 60-minute. Above the 20 EMA 60-minute, the green line, you're bullish. The red dotted line for reference on the 60-minute. This is a Crimson setup. Crimson set this whole chart idea up. You reference the 20 EMA and the 20 EMA on the 60-minute with the daily, the dotted red line. When you're above both, that's a buy signal. When this crosses above, that's a secondary buy signal. We're looking for this kind of action over here, 13th through the 20th, to continue to propel this higher. Above 1175, we clear resistance. You can see right along this area, 1150, 1175, 12 is where all the supply is. So if you get above that area, we're going to clear supply. Right now, that's where it shows up. Right in here. Okay. That's your supply zone right there. Clear that, we could go to the IPO highs. That would be something. Get 1,000 shares that go 20 points. Wouldn't be, that would be bad, wouldn't it? $20,000. I only have 600 shares at the moment. Only have 600 shares. Just posted that on on StockTwits and X. Yep. What are you looking at there, Corey? You're looking at what are you looking at? You're looking at NVIDIA? Okay. Futures are starting to turn. ES starting to turn. Maybe some SPY calls. Maybe SPY calls for Friday. Okay, NVIDIA turning. Okay, let's switch Super Micro. Super Micro holding.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading the price of a lot of the best and smartest students because it is this enormous data set.
Okay, so if you're a new trader and you've been following what we've been doing this morning between 9:30 and 11 o'clock, you're looking for an 11 a.m. pivot. You also didn't buy the high, got excited and chased NVIDIA at the high and have it pull back on you. 2-3 points. Okay, you didn't do that. Good job. Now we're waiting for histogram to turn yellow. Give us the best opportunity. I'm looking at the 110, 115 call vertical for at least 2 weeks out. Nano, we're watching Nano as well. S&P. All right, we're starting to get yellow bars. What do you guys think of the dark? What do you think of the dark? Is this good, bad? What do you got? What do you guys think? Is this better? Okay, I'm gonna just leave this on just for the TTM so you can see it a little bit more clearly. And when we start to move, I'll turn it back to white. Okay, I'm getting ready to drop the sun off here. Oh, that gets in the way. Oh, well, you know what I'll do? I can do that, and I can pull this over. Pull that over so you can still see it. Okay, that's good. Okay, we're starting to turn the corner. Maybe some SPY calls. All right, you should be already up. SPY calls. All right, the Friday calls are already making money. If you bought just now. Okay, turning the corner. Mm-hmm.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange with a big show for you today. Of course, we'll focus on the
Thank you, Rick. Are you back? Are you back from Hong Kong?
Inflation data today at the lowest. It's at the lowest point in 3 years. Stocks are lower, by the way. Again, our disruptor today is AppLovin after B of A increasing its price target on those shares. Our 360 round will break down.
Ricky, you back from Hong Kong? Okay, NVIDIA turning. All right, so better entry on NVIDIA if you're still looking at the 110, 115 call vertical. Okay, you get a better entry there.
So that's the big picture here. 54.14 is the level on the S&P 500. Oil and gold. Oil is pulling back up
Okay, turning the corner, SPY calls. Yeah, where did all the yesterdays go? Yeah, that's a good one, Mondo. Okay, NVIDIA, nice bounce on NVIDIA. So super micro, okay, super micro turning. NVIDIA. Okay, these are turning now. What happened to my... I must have closed it by accident. Let me pull this back up. Oh, you know what I can do? I can clone this. Let me clone this. What do you call that? Detach it. You detach it and then you change it to... Okay, let me change this to the 10 grid. My grid of 10. Where are you? Okay, New York FANG 10. Okay, there we go. New York FANG 10. Trendy. There we go. Okay, so I got you back. Must have closed this by accident. Maybe it's minimized. Maybe I minimized it. No. Okay, so we got the S&P 500 turning. Okay, so you can see we're turning. So buy some SPY calls. Most likely will do well into Friday. Okay, we're off pretty good. The Fed is definitely going to cut rates. So it's what, 83%, I think, 83%. Looking for a... All right, the super micros on a buy. Super micros on a buy. Okay, nanonuclear is at the high of the day, 1075. We got 1 point to go to get above 1175 supply. If we do, look for 3750 ultimately over the next several months on nanonuclear. Maybe by middle of next year, we can see nanonuclear at all-time high. IPO high is 3751. Don't bet the house and the kids on it, though. On risky stocks like that, maybe take 2-3% of your portfolio, maybe up to 5%. If something gets going like that, use a good stop, of course. Let's see. What do I want to do here? SPY. I want to buy calls for Friday. Let me see. I should have bought it when I said to buy it, not 5 minutes, 10 minutes later. That's okay. Looking for a dip anyway. SPY. SPY. Okay, let's go to Friday. That's the 13th, Friday. All right, let me go Friday. Okay, the 542s. Okay, we could definitely get the 542. Okay, let me take a vertical. Let's see. Let me buy this. I'm taking Friday a vertical. I'm going to take at the money. We're at 5. Let me do SPY 5. Okay, 542. Definitely be able to do that. 542. I'm going to take $5 out. 547.50. I like the liquidity of these. Okay. So I just took some SPY 542.50s, selling the 547s. Didn't get filled. What's the deal there? This is SPY after all. Okay. Okay, I took 542.50 and 547.50, $5 wide. Vertical. $542.50, $547.50 vertical.
But lower rates are coming, and that's going to change the ground rules for a lot of sectors. For example, dividend-paying stocks all of a sudden are going to become much more interesting and more desirable because as rates come down, the rates have
216.50, 216.50. Okay. SPY. Okay, I'm gonna go back to the S&P. Okay, this looks really good. I'll put a limit order. Ooh, I gotta go. All right, I'm out of here, folks. Let me go drop off my son. Okay, at school. We were late yesterday. I'll be right back.
That's really the sector to watch. If they remain weak, I think it's problematical for the overall market. If they can somehow start to turn around and act better here, I think it's potentially a positive for the overall.
You mentioned tech. Meta was a name that you liked from day one. Still like that? Do you still buy it on the dips? What levels do you watch and say, right now, today, Meta, for example, is trading at a level. We know there's been a lot of regulatory scrutiny on some of these names lately.
Yeah.
498 is where Meta's trading today. When do you step in and buy? What kind of
I don't know. They banged it down to 450 a couple of months ago. Maybe that's the level where you want to look at it if it gets there. But I think in the case of all these, let's keep in mind that there's nothing rational about stock prices. Stocks either get overbought or oversold. And obviously, if you're going to be a buyer, you want to be able to buy stocks when they're oversold. What does that mean for Meta? I mean, your guess is as good as mine, but certainly a lot lower than where it's trading now. But if the opportunity presents itself, I think that's a name you want to buy. Another name that we talked about recently is Oracle. Now, Oracle had a fabulous day
new
yesterday.
all-time highs for Oracle. You've loved that. You mentioned that recently. Good pick again.
And I think it's up again. I think, thank you. Even a blind squirrel finds an acorn every once in a while, Nicole. But I think it's even up. It's even up again today. And another stock which we haven't talked about, another old tech name which we did refer to, which is Big Blue. And for those that have been doing this for a while, they know Big Blue is IBM.
Yeah.
And IBM made a new high today. So clearly there are some bright spots. It's not all bad news, but generally speaking, I think the markets are probably in for another, for at least in the short term, a difficult period.
Yeah, you always have Chubb on the list too. That's been another winner. Tell me a little bit about this story.
Well, about the Chubb.
Yeah.
Well, I have this theory.
I mean, I'll double check it now. And then it made me question myself. Yes, that's a new high. I mean, I knew I was right. Okay.
Well, yeah, but I have this convoluted theory about Chubb.
Okay, bring your stops up on SPY.
Buffett has taken an interest. Berkshire has bought into Chubb, and I have no way of knowing if this is just me just thinking out loud about Chubb. But I don't think Berkshire has any interest having a passive interest in another insurance company.
Oh, right.
And so I think if you want to read between the lines here, there's a possibility that perhaps Berkshire is going to buy Chubb simply because number one, it's a fabulous company, but number two, maybe Warren wants Evan Greenberg to come in and run Berkshire Hathaway for him. And that's the only way he's going to get him because I suspect Evan Greenberg's got plenty of money and he's already got a pretty good job running Chubb. So he doesn't need a job.
He doesn't need to get on there.
Right.
The FOBs, the friends of Buffett, probably know what Buffett's doing.
Yeah, well, we're just guessing.
Yeah. Well, that's an interesting concept and not too far-fetched. Right? It makes some sense. We were just talking with Jenny Horn about the top holdings of Berkshire, which include Apple, American Express, and Bank of America, which he's been selling off, but still he holds a lot.
You should ask about Chubb.
Last but not least, what about precious metals? We had, I read a Mark Faber report yesterday. Remember Gloom Doom report from Mark Faber, who called the 87 crash? He said that everything's overvalued. The Mag 7 is gambling. You should consider precious metals. What do you think of that?
Well, we do own some gold stocks, which is a hedge, Newmont in particular. But quite frankly, we've owned it for a long time. It's a very small percentage of our holdings. I just think we probably have to have a little exposure to gold. But precious metals, I think I think it's a semi-precious metal, if even that.
but I would want to be long copper because copper is in relatively short supply and will continue to be in big demand for all the build out of the electrical grid. Anything electronic, it's copper, 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 and there is a limited supply. So if I had to pick a metal to be long, it would be copper.
Yeah, and look, it's down. I mean, I just looked at Freeport McMoran as a copper indicator. Right, that's fair. 3 months down, almost 18%. So maybe there's a buying opportunity there.
But see, here's the problem with the markets today, Nicole, and you know this as well as your viewers. You know, we live in a world of quant trading, computer-driven trading, and the problem is when we get in markets like this, the computers and the quants are agnostic when it comes to fundamentals. So basically, when they start selling them, they sell everything.
Yeah.
So it makes it very, very difficult for folks. On the other hand, if you've done your homework and you know your companies, this volatility, especially the negative volatility, does create some very interesting buying opportunities.
All right. Well, good to see you. Ted Weisberg, thank you so much, of Seaport Securities. Ted, thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the technicals. Don Kaufman, Theo Trade, takes us through the trades for Baidu, consumer staples, and Apple. Schwab Network. We'll be right back. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you are with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman of Theo Trade. Great to see you both. Don, we've seen some serious selling. Of course, last week we sold off in a big way, and it looks like right now, after a couple of days of selling, another lagging week here. Some of your thoughts?
Yeah, I mean, look, right now in the week, we're basically massively unchanged in the week overall in terms of the S&Ps. But, the financials, it's rough right now. The financials are taking a fairly substantial hit. And effectively, we're seeing, the broader marketplace now obviously take a hit in what is a much higher correlation. That is, things are just, in the S&P 500 are heavily correlated. Markets are down. Everything is basically down in accordance with that.
Okay, so we have Baidu as your first name. Tell us a little bit about this story and why you like Baidu.
Yeah, right now, it's for me, it's often less about the individual stock and much more about the market. And Baidu, and really any of the Chinese large caps, I'm looking for a bounce right now, which ironically, even in today's down marketplace, we're seeing a little bit of a bounce inside of Baidu. Two factors come into play over here. Number one, I think we're actually seeing a kind of a short-term, like possible bottom here at the 80 level, like a double bottom, actually come into play right and around again this 80 level and a bounce. The other aspect is I think there's anticipation already of the Chinese regulators coming in and stepping in and stimulating the marketplace. As such, I'm going to take a bullish trade going out to the October 18th expiration. I'm going to be buying an 85 call, selling a 90 call. So I'm just going to do a $5 wide call spread, looking for a decent bounce off that 80 level. This one's done for a $1.45 debit.
Okay, let's see what Ben Lichtenstein has to say about the charts, please. Ben.
I think we're in a longer term downtrend here, Nicole, but I like Don's take on potential to see some upside on the shorter to more intermediate medium term, because there has been a bit of a bottom that's been established, and we are in a bit of a balance again on the longer term, which lends itself to kind of random price activity. So we could see a little bit of lift occur here, even amidst this longer downtrend, which we'll get into in just a second. But first and foremost, Baidu on the move higher on the short term with that broader market weakness. Taking a look at shares of BIDU all the way up to $84 today, and not far off that level right now. You can see we're kind of holding on to the middle of the range, I guess, is the best way of looking at it in terms of what we've established so far today. Now, as we move away from that more granular look at some of the more intraday price activity and add a little bit of time on this, what we're doing here, we're going back to when the stock, well, if you remember, it was trading all the way up around 100, 105, and that's on the left side of your screen, going all the way back to the middle of July. You can also see some conviction that came into play as we sold off. Again, a 60-minute candle chart now, so you can see big move lower from that 100 level I mentioned mid-July all the way down to lows around 79, sideways consolidation since. So really no rejection of this lower level, and as I like to think of it, value right now, which is forming right around that $85 level. So again, step away from this chart with me one more time, away from the hourly candles. We're going to add some time on. You can see it's not just on that short term, but on this longer term, as I mentioned, a well-defined trend off the July 2023 high that was up around 157. This week, back to near $80 to retest that year low that we saw. That's what Don's talking about in terms of this double bottom, currently in balance, forming value around 87. So again, you've got this double bottom that occurred here. You can see it, and that's where we're trying to get a little bit of a lift off of right now, but still balancing around 87, still holding below 105. That retest of 105, if you remember back in July, failed, and that's the move that we just looked at on that hourly candle chart, that high conviction move lower, and then this consolidation. So value forming at a lower level as it has and continues to be. Bears are in charge on this chart. The longer term daily candle still could see some lift again and remain within this range, but longer term here, it looks like they're behind the wheel here still, Nicole.
Yeah, and I was checking out the Chinese stocks because often people say I don't touch them. I get nervous, or I love the Chinese stocks for opportunity, but we did see Baidu down 30%. Pinduoduo has been under pressure for the year. Baba is actually one that's doing better. Final thoughts on Baidu, Don?
Yeah, in terms of trusting it, look, this is just an option spread. We're in, we're out, we're on with our life after, the October 18th expiration. So this is, this for me is, it's an easy shot to the upside, looking for a nice bounce. But a large part of really this trade that plays into my logic, though, is I'm often looking for Chinese stimulus. And that is something that has played out quite considerably in those markets over the last couple of years. When they come in and they do stimulate that marketplace, get these large caps, they get a good bid under them, and that definitely makes the trade a bit more worthwhile at this point.
Yeah, that makes sense, actually. That's an interesting point. How about we get to the consumer staples, which has been running from 65 up to 84 when you look at the ETF. Obviously, a winner here for the year, about 15%.
Yeah, and that's exactly why I'm going to get bearish. Ben and I are going to get into it, I think, on this chart. But I'll tell you what, so I put together this trade right pretty much as the market was about to open. And obviously, there's some sell-side activity in XLP. So consumer staples, let's talk a little bit about them. really the consumer seems completely like fractured. If you look at stuff like Dollar General or Dollar Tree versus maybe Walmart and Costco, it's a tale of two totally different retail marketplaces. Nevertheless, with a quarter point rate cut in store for us, I think that's actually going to have negative implications to some of the retailers. So my trade is a bit less about some of the technicals here, and it's a lot more about the consumer is beaten down, bludgeoned. Inflation has not necessarily gone away just yet, and we're probably only going to get a quarter point cut. As such, nice bearish trade here. I'm going all the way out to the December 20th expiration. I'm going to be buying the 82 puts, selling the 77 puts. Again, this is XLP. This one is done for a 95-cent debit.
Okay, let's see what Ben says. Ben, what do you think about the chart? So he says that's it. It's had a great run up. It needs a little pullback now.
Yeah, well, it looks like
back and fill.
It looks like it is pulling back as we speak right now, right? I mean, this one's been coming under pressure here today. To credit to Don's trade here, and I know he had this in earlier this morning as well, so it didn't just happen. But I'll also say that that $82 level I think is key. That's going to be the first indication that we're starting to lose some of the momentum to the upside. Don's right. The trend is still up, so he's trading counter trend, and that's why we're kind of at odds on this one. I like to kind of participate with the trend, hope it continues, rather than get ahead of it thinking, okay, now it's about to change, because I've had difficulty trying to do that multiple times. I don't have the ability to read the crystal balls clearly, but just taking a look at some of the price activity we've seen as of recent, bullish type pattern playing out. Migration of value to the upside, a pretty well-defined bottom left, top right. Now, we are seeing some price decay come into play. It's a 5-minute candle chart I have behind me, and you can see how we have come off. But here's that $82 level again. And so as long as we hold above that, it sort of looks to me like this is just one larger area consolidation that's forming, testing lower extreme of. Hey, take out 82 and things start to change a little bit, at least on the 5-minute candle chart. Let's step away from that more intraday time frame, add a little bit of time on. We're looking at an hourly candle chart here now. So we can see on a 60-minute candle, 82 is significant on the 5, but once you've added some time on, you got to get below 77.50 before you've really versed what we've seen in terms of an uptrend. You get a really well-defined area of value to form, high conviction move up. To me, it looks more like just balance kind of forming in this area here. Again, 77.50, kind of the line in the sand per the hourly charts. Now, adding time on, similar pattern, bottom left, top right. So this is why Don knew I wasn't going to be supportive of this short-sided activity, because most recently, look at this high conviction trade. We were in a very wide range area balance that was formed. This is value after a high conviction move up. We're talking a spring of 2020 after the pandemic. Throughout the year, most of it occurred into the beginning of 2021. Went a bit more sideways, 72. But this is a high conviction trade. We're seeing a bull trend with a breakout. Basically what the bulls want to see, and establish a new area value at a higher level, right? Because that's solidifying the working assumption that trend is to the upside, Nicole.
Okay. And that's the whole thing about these trades. I mean, you try and get in and out of these pretty quickly, right, Don?
Yeah, no, I mean, look, this one's all the way out to December 20th, but, in this, again, it's less about the technicals. This particular trade is much more for me about asking the big question. Why is Fed cutting rates? Like, why is nobody asking that question? They're just, let's talk about a quarter point. Let's talk about a half point. Why are they cutting rates? Because we're heading into economic weakness. That's why the Fed is actually lowering rates. And I think that that's going to have an impact, obviously, to the consumer. And that's, consumer staples over here should take a degree of a hit, especially between now and that December expiration.
Okay, next up, certainly not last, but least, right? Not the least, Apple. What are your thoughts here as we got the Glow Time event? The new phones are out. The 23rd, I think you can start to pre-order them. Anyhow, let's hear your thoughts.
I'm not lining up for this one, and I am a big Apple fan. I mean, I wear the watch, I got the phone, the Mac issued underwear here, but it just look. At this point, it's a little bit underwhelming and possibly a bit overpriced. I'm not going into the new cycle like waiting in line for my phone to trade it in. There's going to have to be some spectacular deals. This is not going to be a super cycle for Apple. I think people are going to realize that very, very quickly here. So we're also in a period of time. It's an election year. We're going to be cutting rates. The consumer is going to be a little bit destabilized. It's a little underwhelming over here. It's bearish on Apple. I'm actually going to go out to the November 15th expiration. I'm going to be buying the 210 puts, selling the 200 puts. So I'm going for a full $10 wide spread. This one's done for a $2.40 debit. As I said, I'm a little underwhelmed of the recent cycle over here. I don't need my watch to be slightly thinner, or maybe I can just take it out there and paint it black. It's not doing it for me right now.
All right. I have to correct myself. I said 23rd. The pre-orders are the 13th for the new phone. Okay.
I know you'll be in line, right? You're going to be in line there for that one too, standing outside the Apple store.
No way. No way. I still miss my BlackBerry, but I do like my Apple phone very much.
Don mentioned, Nicole, that he's underwhelmed. I'm still getting over the underwear comment. I actually went on the site, Don. I don't see those listed anywhere on the Apple website. I'm curious how you got a hold of a pair. But, okay, sticking with the stock, as I take a look, not a lot of conviction one way or the other on the short term, well-defined bull trend on the longer term. And we'll identify exactly that in just a minute. But first and foremost, we always look for that staircase type pattern, right? In order to participate, you want to be able to have not only a structure that helps you determine which way trend is going, but also structure that helps you determine when that working assumption is no longer a valid one. So basically the idea is if you're able to establish trend, you could participate with it, kind of close your eyes, hope it continues. If it doesn't, have an area where you know that that's no longer a valid position to be in. Here it's sideways. There's just not a lot of conviction one way or the other. 1 minute candle chart, just a chop trade. But this also feeds into this kind of wave type pattern that we talk about. While you're in an area of sideways consolidation, there's just not a staircase type pattern, right? Because value is being formed. So you have a meeting of the minds between the buyers and the sellers where it's basically, again, efficient market activity and value forming. Stepping away, you're going to see it's not just on the 1 minute candle chart that we've been forming value. In fact, 220 is a key area right now. Well-defined lower extreme, August lows, well-defined upper extreme, 237, those highs we saw earlier this summer. Since then, again, it's just been mostly sideways, random, limited in terms of real conviction, but holding, again, in this bull trend because value's been performing at higher and higher levels. That low around 190, look, we always talk about the prior area of value relative to the one that you're currently forming, that prior area being the line in the sand. Look at where it traded right down to. I mean, that just screams and speaks to the validity of these areas of value. They're kind of like footprints in the sand, the path that the market's taking. It's sometimes more clearly easily identifiable than others, but in this instance, you can tell the direction we're headed, right? It's up. Not only on that intermediate time frame and that move we just looked at, but this one as well. Look, I've now queued up a weekly candle chart, Nicole, going all the way back to, we're talking spring of 2018, areas of value that form at higher and higher levels. You can see that process playing out multiple times where we retest key areas and hold each time on the way up. It wasn't just back in August when we retested that 180 area. So simply put, bull trend here across multiple time frames, a bit of a chop on the intraday, but this is exactly what we look for when we're talking about that staircase type pattern. It's clearly to the upside.
Okay. Clearly to the upside, he says. Don, final thoughts.
Yeah, I like the contentious nature over here. Ben, we're going to see in the next 2 months for sure. So this is a spread that hopefully we'll keep our eye on over the next few months. Again, it's out to the November 15th expiration. But again, maybe some of these pre-orders might be a little bit underwhelming, as I was mentioning, and we're going to find out here in the near term.
Thank you both so much. It's great to see you for the big three today. Don Kaufman and Ben Lichtenstein. A great look at Baidu, the Staples, and Apple in our big three today. Thank you. Coming up next, we'll spotlight those airlines, right? The latest on Southwest Airlines. It's continuing to make changes to the board of directors. Elliott Management now on board as well. So let's see what's going on, because this stock, by the way, up 15% in the last month.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Fedolides, live on the floor of the New York Stock Exchange. It's time to spotlight airlines. David Nelson's with me, Chief Strategist, Bell Point Asset Management. I was just taking a look at the Jets ETF, which really has seen a nice reversal of late. In fact, 1 month it's up 10%. But as you look at the headlines, you see, Spirit falls on disappointing earnings. Delta bleeds money after the tech disaster with CrowdStrike. And what's going on with Southwest Airlines? Is this group a good group or not so much? Your thoughts?
Every now and then, airlines have their place in the sum. But to start with, airlines have a long history of losing money for investors. Every now and then they seem to work out. And of course, the latest casualty right now is the board of directors at Southwest. What we're seeing there, it's almost unprecedented. You got 7 directors, including Chairman Kelly, that will resign. And of course, as you alluded to, all of this is being brought about by Elliott Management. The question now, is that going to be enough for Elliott?
Well, that's the whole thing about this company, right? So you have a big change that's happening. First of all, that you'll be able to get your seats. Kelly steps down. There's obviously the fight to keep the CEO in place. Which names, let's back up a little bit. Which names seem to have it right in the group? I mean, this one is a work in progress, it appears.
Well, if you put a gun to my head, and if there was an airline I was going to buy for doing things right, it would probably be Delta. I've had a good history with Delta. They're certainly more consistent. The problem with airlines as a whole, there's a lot of things they can't control. They can't control fuel. And right now, in particular, the consumer is challenged. That's a problem for all airlines, including Southwest. We saw that in the most recent earnings reports for companies like in travel, like Airbnb, Booking. The consumer is stepping back, and overall, you have an economy that is suspect at this point. And we seem to have lost, one of the legs of the stool, and that's the consumer. That can't possibly be good for airlines. And that fuel is a wild card. That's always out there, and it doesn't take much to throw the business models off a kilter.
Why do people like cruise lines then? Isn't it some of the same fuel and what the consumer is willing to spend?
Yeah, it's a lot of the same things. I think for me, the problem and the distinction with airlines is kind of the history of management, what they've done over the last couple of decades. Even when things start to get better, and they will, the consumer will eventually repair, the economy will repair, and airlines will start doing well again. They'll start making the same mistakes they've made for the last 20 years. They'll start buying back stock. They'll start buying back stock to prop up management, to prop up earnings, which in turn props up management pay. But then they're not prepared for that ultimate setback, the pandemic that hits them from out of the blue, the war that breaks out in some part of the world where you have to shut down your routes. They make those mistakes consistently, and Southwest and all of them have done that.
So at this point now, what would say to you buy Southwest Airlines? I mean, it's a work in progress. How long does it take to turn around a company? Does it seem to be going in the right direction in your opinion?
Well, I would say that, given the fact that they're willing to, get rid of seven directors and the chairman, it tells me that they're willing to make some pretty big changes. So it's going to be interesting to see what Elliott management. I still question, though, whether or not they're going to accept this deal. They clearly wanted Jordan out. They still control, I believe, about 10% of the votes, so they could still push for a proxy vote. But there are changes that I'm sure that Elliott has identified, but I gotta believe it would take certainly a year or two to even start to bear some of that fruit.
You talked about fuel being the wild card for many of these transportation type stocks. Where do you think the fuel price could be headed?
We're going to need to see something better out of the economy. Fuel price could spike, from a geopolitical conflict at any point, sometime in the world. And given the state of affairs around the world, that could happen at any moment. But we can't predict that. Right now, fuel prices and certainly oil and the benchmark WTI and Brent, those are down in large part because of China is slowing, certainly a huge consumer of fossil fuels. Until we see the overall global GDP print a little better than what it is, I suspect that fuel will remain challenged.
Yeah, understood. And on the big picture of the markets, how are you feeling here after last week's big sell-off, David? And then we got a blip of green, but down again. In fact, the Dow broke below 40,000. The S&P's below 5,500, of course, trying to hold 5,400 actually to 5,439. How do you feel? Do you see buying opportunities here, or are you in a wait-and-see mode?
No, there's always buying opportunities. But for me, I'm fairly fully invested. So if I got to buy something, I've got to sell something. So how I position my book for the next few months is how we make money. The bigger picture for investors right now is a lot of investors feel the Fed is behind the curve. And now it looks like 25% is the number. I'm against that. I think they need to come out of the gate swinging. They should be at least 50. That's what the market would like to see, and I think the market is correct. The history of the Fed is to be incremental, and if you look over the last half century, they've only gotten it right once. There was only one time following the initiation of Fed cutting cycle that we didn't have a recession that followed. That was 1984.
Yeah, David Nelson at Bell Point, thank you so much. It's great to see you, David.
Great
really
to see you.
Appreciate it. Coming up, the disruptors, we will focus on AppLovin. Bank of America hiking the price target on the name. George Sillis is standing by. He will go through the note and have an example trade for us as well, right here on Trading 360. Stay with us on Schwab Network. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. The Dow down 450, folks, so you know. Developing stories this morning. Caroline Woods is with us, senior markets correspondent here on the Schwab Network, taking a look at GameStop selling off, price target cuts. Caroline?
Yeah, so we're taking a look at GameStop shares after earnings. They're down about 14%, and this is despite reporting a surprise profit, actually, but they did report a steep decline in sales, and that seems to really be weighing on shares today. They also announced an at-the-market stock offering of up to 20 million shares, which represent about 4.7% of the total shares outstanding. In terms of the actual numbers, adjusted EPS of 1 cent. That was better than the 1 cent loss that analysts were looking for. Sales, meanwhile, fell more than 30% to $798 million. Analysts were looking for $900 million. So big top line miss there. Didn't hold a conference call, didn't include any commentary on the actual earnings release. So, didn't really provide a lot of color on the situation, which is always difficult. I will say in terms of that at-the-market stock offering, GameStop said it intends to use the proceeds for the offering for general corporate purposes, which may include acquisitions and investments in a manner consistent with their investment policy. And then I was kind of scanning through the Form 10Q, and they did talk about how, and this is very in line with what CEO Ryan Cohen said earlier this year, that they're trying to identify stores to close, underperforming stores, but they did say it may result in the closure of a larger number of stores than they closed in the past few years. So it could be on the lookout for that. Not a lot of analyst coverage on this stock. It's a meme stock after all, but Wedbush did maintain its underperform rating, cut its price target to $10 per share. And if you take a look, GameStop is trading at $20 per share. So expecting the share price to get cut in half.
Yeah.
But yeah, today down more than 14% following this report.
That's a big move. Okay, thank you for all of that. Appreciate it. Caroline Woods on GameStop. Thank you. Now we turn our attention to the disruptors, easy for me to say, and George Sillis is with us, markets correspondent, taking a look at AppLovin. Now, this is a different story. This has an up arrow. Bank of America has been positive on this one. Let's hear more about that.
Well, I think in the larger context, Nicole, you have to consider there are always going to be stocks that are moving higher irrespective of some of the volatility we've seen in the market. And that's really been the case for AppLovin. If you look in the last year, the stock has made a tremendous turnaround after a 3-year sort of lull in its business. And it's really a company that's actually pretty profound in terms of technology and applications for software development, but also they help monetize marketing campaigns. They essentially have what Trade Desk has. We cover that stock, a very similar type of auction where publishers of advertising campaigns are matched up with buyers. And essentially, they have another division that helps monetize advertising, and that's their. If you look at the call from Bank of America today, I can see why they're increasing their price target on the stock. They moved it higher to $120 from $100, and they maintain a buy rating. They actually look at the higher monetization rates in terms of their mobile ad space. Their market share gains have actually improved over the last 1.5 to 2 years, and I think that speaks to the pronouncement of their technology. But at the same time, they're looking at market share gains in the mobile gaming segment, which, if you use mobile games, I don't, they seem to have a lot of advertising hits for users of those games. So essentially, if you also look at the fundamentals underlying the stock, they're quite profitable as a business, and they've actually improved their gross margins by close to 10% or 1,000 basis points compared to their 5-year average. But their EBITDA growth on a forward basis is expected to be around 38%, with the forward multiple only 20 times earnings. So I think if you look at that, it's cheap on a forward multiple basis, and that's essentially the context in which Bank of America sees some improvement in stock price. They actually see it not necessarily based upon earnings estimate, but rather multiple expansion, because the multiple is quite low, in my view, relative to the earnings growth rate, which is expected to be close to 40% next year.
Right. Okay. So with that, how would you go around and do an example trade?
Yeah. So we've been selling premium because volatility is high, and so we're going to continue with that narrative or that strategy. In this case, for AppLovin, I'm going to put on a bull call spread. I'm going to sell this for a credit. This is what we're doing to capitalize on high implied volatility. I'm going to go out to the October monthlies with 37 days to expiration. I'm going to sell the 85 put and then simultaneously buy the 80 put below that. So altogether, you can essentially earn about $1.50 a share in credit, or $150 a share, or a contract. So it's 100 shares. So essentially, the stock just needs to hold 85 or higher by expiration in 37 days. Your break even in case it falls below 85 is 83.5, and you're earning $1.50 in credit. That's your max profit, but your risk is $3.50. And that'll only happen if the stock trades below 80 between now and expiration in the third week of October.
Okay. George Silas, thank you. I see it up 7.25% today. We appreciate it. Good luck there at Apple, up in for our disruptor, George Silas. Up next is our 360 round. We will focus all about inflation. We have our CPI report. We're waiting on the PPI report tomorrow. And what could be the Fed's interpretation of this information? Let's have a conversation with our panel next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round, and we have got in our CPI print this morning. Tomorrow, the PPI, all about inflation. And today's print at the lowest levels in 3 years. Thomas Martin is with us, Senior Portfolio Manager at Globalt Investments, and Steve Colano, Chief Investment Officer at Integrated Partners. Thank you both for being with us. So things seem to be going in the directions, clearly, when we think about our highs on inflation. What stood out to you today, Thomas?
Well, the report was mostly in line, and the headline still remains to be year over year. It remains lower than the core, but the core maintained. It was the month over month that was the so-called hot part of it. There were parts of it and the components that were a little bit, I guess, head scratching to some folks, particularly the cost of housing, which was up, and airfares, which kind of goes against what people, I think, are seeing out there. But more or less an inline number. When you look at what the market, how the market is interpreting it, they took off really one of the 25 basis points out of 50 that the market had been anticipating. So that's one thing. But then the 10-year yield has been fluctuating from positive to negative from yesterday's close. So I think that there's just a little bit of kind of confusion and backing and filling with regard to the number.
Yeah. Stephen, what'd you make of it?
Very similar. I think if you look at that core month-over-month number, what was interesting to me was that actually everybody says, oh, it's housing the blip up that caused the 0.3 versus 0.2 estimate. But actually, if you dig into that a little bit more, it's actually lodging. So consistent with the 3.8% increase we saw in airfares, we actually saw a 2% increase in lodging away from home, i.e. think of hotels, et cetera. So as the seasonality of vacation season kicks in, I think that put and against the previous 2 months of negative readings in both those categories. So I think you saw a surprise uptick in vacation-related travel, hence airfares and lodging, that caused a slight uptick in that core number. The important takeaway, though, is if you look at the 3-month annualized rate of core CPI, it's just 2.1%. So I think it still justifies the expected 25 basis point rate cut we'll see next week.
So with this, Stephen, what do you think the Fed should do?
You know, I think given today's reading and then the employment numbers we've seen, I think a 25 basis point cut next week makes the most sense. Not only is that what the consensus market is looking for now, it's Fed funds futures probability went to from 70% before the CPI report to 85% after the CPI report for 25 basis point cut. But the bigger reason I think 25 makes a lot of sense is I think a 50 basis point cut out of the gate would actually cause a little bit of jitters, as I think the market focus has shifted from inflation now towards growth, given the labor readings we've seen. And a 50 basis point cut would cause a little bit of nervousness to say, oh, what is the Fed seeing that we're not in terms of the slowdown that potentially is expected in growth? So I think it would cause some nervousness, a 50 basis point cut out of the gate. So I think 25 seems right.
Yeah. And energy and gasoline provided some of the tailwinds here today. What did you think here about, Thomas, about what the Fed should do here and how many cuts between now and December?
Well, I'm definitely in agreement that they should do 25 basis points. There's enough question about the positioning of the economy and the effect of rates and what the messaging is and what a policy mistake would be to at least start with 25 basis points. That gets the cycle going. It gets people knowing that the trajectory downward has started. And then if there's data that supports being more aggressive in the future, they still have a couple of more opportunities to go 50 basis points if they need to. But the Fed has always been gradual, and it's an open question as to how much their rates and the rates above the 2-year, in other words, the tightness, is really affecting the economy. So I think they want to be careful at first. And as far as for the rest of the year, if they can be, they will continue to be gradual. And so another 225 basis points, probably likely. And then it's always possible that we could get a little bit more than that.
Yeah, Barbara Corcoran was noting how folks are sitting on the sidelines and they are just waiting for that magic number to pull back in mortgage rates. So as rates come down, mortgage rates will come down. But then if everybody jumps in like wolves to get these homes, the few that there are, final thoughts, Stephen, because the concern is that prices for homes will go higher then.
Yeah, it's a great point. Actually, interesting data point there. The effective mortgage rate on outstanding mortgages in the United States right now is below 4%. And that's with, as of 2022, 95% of the outstanding mortgages in the United States being fixed. So despite mortgage rates coming down, we don't think you'll see a dramatic uptick in refinancing home price activity, specifically the refinancing activity in particular, because that effective mortgage rate is below 4% for so many of the locked-in mortgages that we see in the United States.
Sure. Thomas Martin, Stephen Colano, thank you both so much for being with us today, looking at the CPI. The PPI will be tomorrow, folks. Consumer sentiment on Friday. The market's selling off here, down 485 on the Dow Jones Industrial Average. We're back above 40,000, but did look below the 40,000 at one point. Thanks for being with me. I'm Nicole Pedalides. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging. The Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out.
Okay.
I'm very good at trading.
We're back. All right, a little bit of selling there into that strength.
It's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying,
Okay, nice follow through on SPY.
It's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector. Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
All right, I'm back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. S&P, nice bounce. If you have profits there, maybe you want to scale out a little bit into strength. You got 10 calls, maybe you take 2 off here. You look for a little bit higher, another 2. Always taking profits into strength. Looks good. All right, so NVIDIA, nice reversal on NVIDIA. If you took the NVIDIA 110, 115 call vertical, that's doing very well. Okay, that NVIDIA 110, 115 call vertical, if you took it, looks good.
Risen about 11% so far this year into their earnings ahead of the opening bell tomorrow. Now let's take a look at the major indices, which are off the session highs. Cut those losses in half, basically. S&P 500 down 0.8%. The Dow Industrial off over 475 points. NASDAQ 100 down about 0.4%. And the Russell 2000, the small caps down 1.1%. Let's bring in my co-host to break down this market action. That's Kevin Hanks. Kevin, pretty choppy session. I mean, this is a whipsaw right now.
Big B.
Yeah.
If you look at the 1-minute charts on the S&Ps and the NASDAQ, big depth, violent sell-off, and then a pretty violent recovery as well. Now we're in more of just a choppy range. But Tom, we've been talking about choppy markets now for a couple weeks. Identify the market you're in. But this market sold off based on that CPI number that came out and the underlying data that came out of that CPI number. Pretty violent.
Okay, NVIDIA, nice reversal on NVIDIA. That looks good. NVIDIA, having a good day, NVIDIA.
Shelter up 0.5%, food up 0.1, but food away up 0.3, apparel up 0.3. There's still things, airfares jumped 3.9%. A little bit of seasonality there, though. And again, like we mentioned,
Okay, NVIDIA back to the highs. You can see the bullish reversal. Supermicro, same thing, Supermicro. Dipped a little bit into 11 o'clock, reversed, moved back up to the highs. Seems to do that a lot. The daily bias over there on the right is bullish. Watch the TTM. That could turn in the next few days. NVIDIA looks good, though. NVIDIA.
I think that's the market's pricing in, basically the quarter basis point. And those people that want a 50 basis point cut, which they don't know what they want. Which we talked about. It's not going to be good if they cut 50 basis points. Because that's what Paul's scouting report. Right. He's not going to do that. But they still have 100 basis points of cuts priced in until the end of the year. So they're expecting a 50 basis point cut in November and then maybe a 25 in December also. So expectations are still there for 100 basis points of cuts by the end of the year. But if inflation remains level here, and you mentioned the owner's equivalent rent. Yeah.
NVIDIA.
Normal rent up 0.4.
Yeah, not coming down. That's over 5% gains year over year. Yeah. Why should that go down if there's a demand problem as far as or a supply problem? There's a supply problem.
Okay, Broadcom looks like it wants to keep going. Broadcom, that was one from yesterday.
There's been one of those for 15, 16 years. We've got supply problems in housing. So, yeah, now it's really coming into focus, though. The owner's equivalent rent, overall rent, just not coming down.
Right. Yeah. To extend this conversation, let's bring in our next guest. That's going to be Kevin Green, senior markets contributor here. KG, give me your take here on the CPI report because you look at core 3.2% year over year. That's came in at expectations, but the headline number went down to 2.5%. So we're still making ground on the inflation front as far as the Fed's dual mandate.
Yeah, and that's actually because of deflation in a lot of those particular categories that Kevin was kind of talking about, especially when you're looking at energy, really offsetting the pressures that we're seeing from shelter. Now, I think the move today, that downside move is the shelter component in general. If you actually kind of look at it, in June we were sitting at 0.2%, July we were sitting at 0.4%, now we're at 0.5%. And this is actually the hottest print we've seen on a month-over-month basis since January. So we're not going in the right direction when it comes to shelter. We also have to just keep in mind, too, some of that's basically survey data, and there could be some skew when you're looking at the national averages of certain geographic regions that might be seeing some pressure, and some others that might actually be seeing glut in inventories. And you're getting mixed data when you're looking at the housing market in general, right? If you're looking at existing home sales, might be flattening out, new home sales hitting some pretty strong levels here right now. So I think the market's just trying to find an equilibrium. But you do have a problem with the shelter.
Supermicro looks like it wants to go some more. Tesla pushing higher. Tesla, nice move on Tesla. Okay, NVIDIA looks like it's going to run here. NVIDIA, let me take another look at NVIDIA. Okay, so it's got a bullish bias on the day, NVIDIA. Let me just look at ATR, average true range for the day. Ooh. Where? I keep losing charts. What's going on here? Oh, there it is. Okay. There it is. Supermicro looks like it wants to break out. Supermicro. It's TTM is cyan, so you'd be buying the high of the day. Probably closes near the high of the day, I would think. NVIDIA, we got a little liquidity grab right there. You can see that liquidity grab. So they pushed it back up to the high. Took out some liquidity there at the high of the day. Let's see if they follow through or not.
NVIDIA up now it's like 3.5%. Jensen Huang, CEO of NVIDIA, and which was, the leader here in the tech space,
NVIDIA, looking for a follow through. Super micro. Okay, let's, we got a lot more stocks green on the day. S&P 500 looks a lot better now than it did earlier. S&P 500, we got 79 stocks green, still more bearish than bullish. 79 stocks green, building. 424 stocks are red on the day. That said, the SPY is working really well. If you took the SPY 542.50, 547.50 call vertical, that one's working really well. NVIDIA, if you took the 110, 115 call vertical, that's doing well as well. Okay, let's see if we can't get through 112. Okay, so we're at the highs of the day, yet the SPY and the futures are still lagging a little bit. We got another 28 handles to go to get back to even. So it's a good sign. I was thinking about this the other day. Actually, I was thinking about this when I was dropping my son off. I did have a call vertical, a call credit bear call spread on Apple, Amazon, and there was another one. I forget which. But they're not working as well, which is what you would expect to happen if the markets continue to show weakness. You expect these call credit spreads overhead to gain in value, not for the position to work against you, which they were. So I got a small profit on both because of the way I averaged in. But those two were doing really well. Let me see. What is going on here? Oh, there it is. Okay. Okay, so Apple looking the best from the standpoint of it's not extended. Tesla as well. NVIDIA looks like it's going to break out. Broadcom is already breaking out. Broadcom. So maybe these continue. Maybe these continue. Let's see. I like Tesla, like Apple. Let me take a look at Apple. Apple. So these call credit spreads haven't been working. Let me look at ARM Holdings. I have a put credit spread on ARM Holdings. That's doing exactly what you would expect. Put credit spread is a bullish position. You're looking for this to move higher. Your puts that you sold become less and less valuable to the person you sold them to, more valuable to you because your credit is now, you can also buy back at a debit that's much smaller than the credit you receive. So if you got like $2 credit, $200 per contract, and ARM Holdings continues to move higher, maybe you can buy it back for $1.50 or $150 per contract. You just made $50 per contract, or maybe it even sinks more as it pushes higher. So the idea of a put credit spread in a bullish market looks really good, especially on stocks that have just recently reversed. 4 days ago, ARM Holdings made a low, turned back up, and looking pretty strong. So that call credits, put credit spread on ARM Holdings is working that we talked about yesterday. Amazon turning. Amazon turning. Let me take a look at the Money Magic levels. Money Magic levels on these stocks. Let's see. Money Magic levels on Apple. Apple's 225. The ups. Okay, so 222.50 is the next level. Apple looks pretty good, actually. Apple, look at taking an at the money call, selling a 222.50, maybe something like that. Apple. I won't do the 13th. I'll go out a week beyond that. Let's see. Buy the at the money. Buy at the money. 225. Let's go 5 wide. 227.50, $5. Apple, looking for a follow through in Apple. Apple looking good. Looking for it to move back up to the high 222.50. 222.50 is the next level overhead. Apple. Histogram is cyan colored, so we're looking for this to continue. Along with the futures, futures continue to rise.
And if that is the case, then maybe we back out of those aggressive moves to the downside when it comes to yields, and that could also then lead to equities primarily.
So when I left for school to drop off my son, we saw all the New York FANG Index stocks turning from red histograms to yellow histograms on the 5-minute. Every single one of them are higher. Mitra, you asked me about Tesla. If you bought Tesla when you asked me about it, you're doing well. You can move your stop up to 220 now. A Tesla, $4 higher.
Keep your eye out on the yen. And yen move is going to be the same. Actually, when the yen bottomed out today, if you're looking at a 1-minute daily chart of the yen, when it bottomed out, the S&P 500 bottomed out. There's still that yen carry trade risk or concern that is out there, and that correlation has not broken. We always have to keep that in the back of our mind.
Okay, you can move your Tesla stop up +4. That's pretty good off the low of the day. We were talking about Tesla. Right at the low of the day, she was asking me about it. I said, yeah, this is a really good level. Put your stop around 216.50. You can move that up $4 at least. You should have a profit.
Overbought on a technical level. 70.2. That's kind of reflective because the inverse yields, inverse yields hitting those lows that we haven't seen for over a year. Not surprising there. But Kevin, when you look at this, we're rallied back. Nasdaq positive now. I mean,
Yeah, you too, Rick. Okay, so Apple, look for higher highs and higher lows. NVIDIA, supply overhead, NVIDIA. Okay. I'll just checking. Let's see if there's any supply there.
Which means market goes up and down. It can go up. Monday and Tuesday of this week were defined by up in the morning, then down, up later in the afternoon. That was Monday and Tuesday. So we opened up down pretty hard.
Amazon's on a buy signal for the last 10 minutes, 12 minutes. We need to see a push through this level right here, Amazon. Okay. Okay, we need to see a push, right? You see that little liquidity grab right there? You see this order block right where prices are? If Amazon gets above that, look for it to run to 180. Okay, that's $1.50 from here. Amazon. Move above 178, 178.60. Could see a dollar move. You guys see what I'm looking at? All right, so there's an order. There was an order block right here that I just took out. So this will disappear. The way I have the settings, it'll be resistance until we get above it. Once we get above it, you'll get that change in character, and you get a break of structure. Let me just go to. Okay, so you can see that change of character right there. I need to change the size so you can actually see it. All right, so if we get through this area, we could see $1.50, maybe $1.50 to the next level. What am I doing? I want to do the size here. Small, small, small. Okay, so that should do it. Chalk, you can see the change of character. Okay, we're starting to move through these pivots over here. So if we follow through, we are a bit extended. You can see the TTM. So maybe we get back to the highs, but more than likely we're going to see a higher low print. It is that time of day. Futures still pushing higher. Broadcom making new highs. AVGO making new highs. Okay, I don't want to buy at the high of the day, but I do like this bullish price action. We're at a order block. You can see that liquidity grab right there where it reversed, came back down. That little box around the wick. That's called a liquidity grab. It's where institutions, if they're going to short, this is where they can short. They can grab some liquidity right there at supply. If it pops above 140, 150, Broadcom should run. Let me get an order ready for a Broadcom. Let's see. AVGO. And we're talking 150. Okay. Maybe I'll do Fridays just really cheap. 150 calls. 150 vertical. Okay, vertical. 150. Okay, watching this really close. 152, 155. Credit spread gives me more upside potential. I'm looking at 150, 155 on Broadcom if it starts to break out. Okay, it needs to get above this level. I just don't want to get a move above it and then have it drop back down. I don't see any. Okay, I don't see any fair value gaps here. Actually, this is one right. No, it's not. Maybe it is. Maybe I have fair value gaps turned off. Let me turn it back on. Fair value gaps are areas where there's an intermediate candle like this big one right here. You have a candle before and a candle after, and there's an area right between. This is called a fair value gap. A lot of times prices will come back and test it between here. Whoops. Between here. Shoot. Between here. Damn it. Janet. Between here and there. All right, that's a fair value gap between the previous candle. Okay. So a lot of times prices will come right back down to that area. So we're watching this right here. Okay, this point right here. Okay. We don't want to come back and test it. We want to break out above this spot right there. Okay, we're starting to move through it. You can see how it disappeared. You see how that order block just disappeared? Okay, let's see if it, okay, there we go. We're going. Broadcom looks like it wants to go. Okay, change of character, breaking out. There goes Broadcom. Broadcom breaking out. Okay, go gadget. Go gadget. Broadcom. AVGO just broke out above its order block. Okay, there goes AVGO, Broadcom. Whoops, sorry about that. Okay. So we had an order block here. We pushed through it. We had a little liquidity grab prior to it. We pushed higher, and now we're going. Okay, this looks good. So that's a fair value gap right there. Let me just turn that on. I don't know why it turned off. Okay, fair value gaps, trend lines. There it is right there, fair value gap. And I want to change this to 2. I don't want it to be overpowering. Okay, see these fair value gaps? You see where I noted it right there? These 2 horizontal. That's a fair value gap. There's one right there too. Okay, so sometimes it comes back and tests that fair value gap. And then proceeds to move higher. This looks pretty bullish. Look at the daily chart on the right. Bullish bias. All the New York FANG stocks are pointing up and to the right. Futures are moving higher. This looks like a pretty good follow through. What's the police for? Police? Okay, Broadcom on the move. Yesterday we had a nice reversal. We had earnings. We had earnings that Iron Condor worked out perfectly, taking that Iron Condor off and getting long, the stock breaking back to the upside. I did tell you guys that I got out of Zscaler, right? And what happens? Zscaler rips to the upside. So I kicked myself in the ass right now. That's the second time that's happened this week. Second time this happened. I took off a Iron Condor, and an hour after I did it, what does it do? The market, the Zscaler takes off to the upside. That's okay. I mean, some of you probably did okay on that one. Zscaler moving higher. Mondo, Zscaler ripping there. Mondo. Oh, tourism? Where's tourism? Oh, okay. I see what you're saying. Zscaler looking good. Zscaler on the move. Broadcom moving higher. Okay, so we got a fair value gap there. Two of them so far. Okay, I'm going to change that to 1. So it's even less conspicuous. I know what a fair value gap looks like, so it's good to note it. All right, I'm going to go to 1 here. Extend the imbalance only 1. Can I do it 0? What if I do it 0? What happens there? Doesn't like that. Let me do 1. Okay. 1. Okay, less conspicuous at 1. Okay, so that's good. Fair value gaps tend to come back and get filled. So the ones at the high, the ones at the upper half of the daily range tend to be less important than the ones down below. So we're already way past the ones at below 147, 148. So this looks like it's going to keep going. Broadcom. Sorry about that. Got something stuck in my throat. If you guys want, because I have a subscription to order blocks over at Lux Algo. You don't need to spend the $280 per year, $290 per year. Just follow what I have on the screen. So if you're interested in the stock, looking at their fair value gaps or looking at the order blocks, just watch the YouTube videos that are out there on Lux Algo. Fair value gaps, FVG, fair value gaps, and order blocks. If you just watch those, you'll understand how these work. And it really increases your understanding of where supply and resistance is, and support and liquidity. Okay, and it'll help you a great deal in being on the right side of the trade. Like we didn't take any longs until we waited for TTM to turn. If you put TTM or momentum indicators together with fair value gaps and order blocks, you can see this order block at the change in direction at 11 o'clock, how this took off to the upside. All right, so there was 1 million shares traded there. That was 52% of today's volume was traded right there at that low. You see that? You guys see that? That green band? Okay, you can see that 52% of today's volume traded right there on that low. That's a big advantage to understand what's going on there, because that's institutions picking up shares on Broadcom. That's not Apple, sorry. Let me just change. Broadcom, doing well. Taking out the highs and pushing higher. NVIDIA taking out the highs. NVIDIA. Okay, NVIDIA, Zscaler doing well. Kind of ticks me off that I got out of that Iron Condor. Supermicro about to go too. Tesla, nice move on Tesla off the low. Congratulations, Mitra, one of our new members. She took a long at the low of the day. She called it right at the low of the day. NNE, that's a good one. Yeah, I have it. I have it.
cash secured put combined with a call spread, which that could actually lock up a fair amount of capital. So that's the reason for the put spread, and that's also once again trying to get exposure to the upside.
Yeah, I have it, Jason. Moxie. Yeah. If you have success with it, use it. If you have success with it, all right. Broadcom. NNE. Nano-nuclear continues higher. Nano-nuclear. I only have 600 shares of this one. Okay, you got a fair value gap there. You see that fair value gap? See what happens? You got the previous candle, which is red. You got a big move, a break of structure, and now you have a red candle right there. It doesn't, these two wicks on the two red candles don't touch each other in this big move. So that's called a fair value gap. A lot of times those come back and get retested. The fact that it's in the afternoon session, it's in the upper half of the range, creates a less important fair value gap. The ones that happen at the low are more important at the start of the day, but we're not even coming close to coming back there. So look for any kind of pullback. You can see the order blocks right there on the dip into 1150. We got a dip, and then markets took off to the upside. 36% of today's volume traded on those candles right there, that green candle at 1150. You can see it very clearly. This picks up on institutional buying and selling. You can see on the right, nano-nuclear. If that clears 1150, 1170, if it clears 1150, 1170, forget about it. This one's going back towards the all-time highs, and most likely it will take a couple of months to get there at least. But it's being added to the Russell 3000. That's a big plus because funds that that follow small caps will need to add shares of nano-nuclear. Good. Good. Yeah, you always want to use what works. Don't listen to the people that are naysayers that think they know everything about what's going on in the markets. The percentage of the percentage of people that actually know how to trade are not that good. Not that good. It's like 10% of the traders out there actually make money trading. The whole rule, 90% of traders lose 90% of their accounts in 90 days, 90% of their account in 90 days. Those 90% a lot of times are, non-professional traders. They're people who just come into the markets with money and they think, oh, I just put money to work. I'll follow somebody on StockTwits or Twitter X and I'll make money. 90% of those people don't make money. You have to have a strategy. And you have to have a strategy that if you use back testing on it, works most of the time. If you use the proper entries and exits, that's how you make money. And only about 10% of the people out there that actually do that. Okay. I like to say that many of us in this trading room do make money in the long run. You got to temper your risk. You have to use good risk management. Just because Supermicro stopped us out yesterday does not mean Supermicro, for example, doesn't mean that Supermicro can't go on to make good gains. I'm thinking Supermicro is going to get back to at least 500 in the short term. That gap is up there north of 485, 485. You can see where it's headed. Once that histogram bar on the daily starts to turn, that's going to tell you the momentum has shifted. Intraday, we've got these ranges that we have to deal with. Yesterday was a pretty nasty range. Got to the low, back to the highs. Today, same thing happened yesterday, but now we're in the top part of the candle. That's pretty cool. So tomorrow it's going to be a bullish bias. Okay, the way that the candle closes, whatever you're looking at, whatever the candle does, sets up either a bullish or bearish bias. I can show you what I'm talking about here. As nano-nuclear continues to move higher. Okay, this one is, this is looking pretty good. Nano-nuclear. You see the 20 EMA, the green line on the 60 minutes, about to cross up through the 20 EMA on the daily, the dotted line for reference. Okay, we got to get through this band. Once we get above 1150 or so, the chances of getting through 1250 are much greater because a lot of people are seeing this. Look at the volume. lot of people see it. Fund managers are adding it. Just don't buy the high of the day. That's the only thing I would ask you to do. So if you're thinking you're going to miss out because you didn't get in when other people got in, like Franos been in it a while. Some people mentioning Nano Nuclear yesterday, got in then. I bought some shares yesterday to track the shares. I only have 600 at this point. But don't buy the high. Wait for the next dip, okay? And you'll be fine. Okay, you'll be fine. Okay, all the New York FANG Index stocks are moving higher. So that's what we want to go look at. We want to go look at the New York FANG Index, okay? And we want to see what it tells us. What it tells you is we've got this is going to be 3 white soldiers. You see that? This will be a 3 white soldier pattern. If we can manage to push a bit higher and get above that 21-day, I want to see a more full candle. Now, I don't know if because we took out the low of yesterday and we got that wick on today's candle, I don't know if that negates the 3 white soldiers. Somebody might want to take a look at what's his name, Bukowski's site. I don't think it is. I think if it just overlaps, the overlap is the condition you need to see. The fact that you got 3 white soldiers indicating all of these New York FANG Index stocks are bullish. Look at that Broadcom. Broadcom is gone. There goes Broadcom. Okay, Broadcom, 3 white soldiers here. Okay, so this is starting to look really interesting. 3 white soldiers on Broadcom. Technically 3 white soldiers on NVIDIA, but a little iffy, Let's look at Apple. Apple overlapping wicks. Look at all the wicks along 217.50. I believe that's probably a Money Magic level. Those wicks down there. Let's take a look at Money Magic. Let's look at Apple. If you're not using Money Magic's levels, you're missing out. 217.50. Oh, that's beautiful. You see that? 217.50. Where did the Apple bounce? Oh, that's beautiful, Money. That's beautiful. I love when your graphics set up a great position. Okay, so all right, where did annotate? Okay. Where do the buyers keep showing up? Where do the puts get monetized? More importantly, that's puts being monetized as well. You know, there's puts monetized. There is new money coming in. 217.50. Okay. Apple. 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 Oh, that looks beautiful. I love it. All right, beautiful, beautiful. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 12:36 on the East Coast, the best coast, the coast with the most. It's Wednesday the 11th. Next week, we'll get the thumbs up, thumbs down, quarter 25 basis point cut expected by the Fed next week on the 17th on Wednesday.
Really shows that Kroger is beating its competitors. But Megan, as you know, Kroger wants new competitors. They want Amazon and Walmart and Costco to be their competitors, and that's who they feel they have to compete with, and that's why this merger with Albertsons is so important to them, because it gives them the West, it gives them the Northeast where Albertson hangs out, it gives them the scale, it gives them the synergies to save money and be more competitive. Or if they can't, these smaller grocery stores really can't compete with the three big box groups. So I think this merger, though the knee-jerk reaction is no, 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 they have to have this to be able to compete with the Amazons, Walmarts, and Costco's.
Yeah, if you listen to Kroger comment and if you've been following the court case, Kroger says, okay, this, while opposition says that this reduces competition, this actually allows Kroger to be able to be more competitive.
Okay, let's see. Leaderboard, Apple.
It depends on, where you fall, but certainly if you're Kroger, this is what you want. You want a wider reach. You want to kind of increase your moat even more versus some of those smaller competitors that really it's tough to even put on the same chart as Kroger. But, the reason that you didn't see the Walmart, the Amazon, the Costco, even the Costco on the same chart as that Kroger chart with other grocers is because, whenever you look at Walmart e-commerce, the visits to Walmart.com versus Kroger.com, it's not even in the same ballpark. And so I think that Kroger has a lot of room for improvement there. And if there's positive news on this proposed merger, that's certainly positive news for Kroger and stock at large.
Yeah, Megan, if you look at the chart on this, it's sitting right at its 200-day moving average going into earnings. It's pulled back from highs that we saw earlier this year, about $58. Do you guys have an earnings score on this one going into the report?
Yeah, so our earnings score on this is in the high 20s, so we're slightly bullish. We think that, we do see a bit of a lower bar for Kroger. We see some nice traction in its digital traffic. We also see some signs of a spark with its Boost membership, especially in July. It had some specials, and I think that consumers really kind of latched onto the value that it was providing. So we are playing this one cautiously to the upside.
Digital sales last quarter grew 8% year over year. So seeing some inroads there. All right, great stuff, great data as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at Lightfolio. Pretty positive on this one. Grocery store stocks won't have a lot of option premium in them, Kev.
Yes.
They're steady movers.
Different ways.
But because of this merger in there, it's been choppy over the last several months. How do you want to look at it?
It's what, $8, almost just shortly under $8 off its highs that it hit, last spring. It's sitting, like you mentioned, right at the 200-day moving averages, which is 51.10. So, and the other thing is, Tom, it has a dividend. It has a 2.5% dividend that if they pay it, we don't guarantee that, but if they
Okay, everybody having a good day? Good.
What I tried to do, Tom, here is do like a hybrid trade where you do the covered call and then you turn that into a hybrid butterfly where the long end of the butterfly is the stock. So I bought 100 shares of Kroger. I sold 2 of this week's 54 calls, and I bought 1 of 56 calls. So I basically did the underlying 54, 56.
Apple.
Kind of a hybrid.
Apple looking good.
Except the risk is to zero on the stock. Remember, it's not just the risk of what you pay for it. But the other is you've got the dividend. You can capture the dividend by using this strategy.
Yep. Let's break this one down. Complex trade here, and it's 2 separate trades. You got to remember that on the platform here. For every 100 shares of stock you buy, and we'll use that $50.95 is where it's trading currently. Buy 100 shares there, and then you sell two of the September 30th weeklies that expire in just a couple days here. Sell two of the 54 strike calls, and then you wrap it up by buying one of the September 13th weekly 56 strike call. So short $2 white, where you've got an extra unit on that 54 strike. Now you're collecting about an 85-cent credit there. So overall, your debit's going to be about $50.10. So what does that mean? Well, we've got the risk profile up here to kind of give you a good overview of what this looks like as far as risk reward. Now, you pay $50.
Nice. Having a good day. For those of you having a good day. Buying dips, selling the rips.
That means that your break even to $50.10. So about 80 cents below the current share price in there. But you've got risk on this trade. And that's, if you're paying $50, you got about $5,000 in risk if the stock were somehow to zero.
You can look at it as a hybrid butterfly. You can look at it as a covered call with a short call vertical added to it. Using that same strike, the 54 strike, that's where that spread peaks out, Tom.
Yep, right at that short 54 strike. Option market's pricing about plus or minus $2.60 move. So that fits into that narrative. But I think the key here is the 6 strike that you bought in this strategy. This
Nice day.
You still are going to be profitable.
I don't want to use the word surprise, but I am very pleasantly surprised that the markets bounced this week. You remember, we came into the week, we had 18 bearish indicators. So we had capitulation, it seems like, because the way we opened this week, we saw buyers come in midday, and then the markets just continue to follow through every day this week, Monday, Tuesday, Wednesday. We've been seeing wicks in the bottom of your candles and closes in the upper half of the daily range, or a higher high being put in. So many of these showing potential 3 white soldiers patterns. Oh, sorry. Don't mean to be whistling in your ear. Okay, futures moving higher. Okay, Broadcom at the high of the day. You get nothing for nothing? Isn't that Dire Straits? Money for nothing? Money for nothing? Who is that? Is that Dire Straits? Money for nothing, right? That's Dire Straits, I believe, right? Get money for nothing and what for free? Money for nothing. Money for nothing. I don't know why I can't remember that. Money for free. Dire Straits, yeah. Money for nothing. Money for nothing. Chicks for free. Okay. The lyrics say chicks for free. I guess they say kicks for free too. Judas Priest does it? Okay. Well, I guess Dire Straits ripped it off from them.
short of taking out the highs from yesterday. NASDAQ, on the other hand, was able to take out yesterday's lows and then rally back 500 points to above 18,900.
Mark Knopfler, Sting as well. Mark Knopfler. Chicks for free. Yeah, see, Al knows what he's talking about. Al knows. Okay, First Solar, nice fall. All right, we're starting to stall. Futures are starting to stall. Maybe take some profits off. A, B, C, D. A, perhaps. Consider some profits. Yeah, me too. Yeah, Dire Straits. I love, I like Mark Knopfler when they play with Chet Atkins. Mark Knopfler.
Keep in mind, we've got a 10-year note auction today, but yeah, yields have been coming off ahead of those Fed cut expectations following the CPI data today. Tomorrow, don't forget, we're going to look at
Chet Atkins. Knopfler. Atkins.
Volatility everywhere, Ben, even though that VIX is back down level, and I think so then he's the host of the future show here on the network. But let's bring in our next guest. That's going to be George Tillis.
Chet Atkins and Mark Knopfler. What did they play together? They played some blues songs. Poor Boy Blues. Chet Atkins is probably one of the best known guitarists at the time.
Yeah, obviously, what's happening with Tesla is the expectations of some breakthrough in technology when they have their essential robotaxi day coming out in October 10th, and of course, this is a couple months delayed.
NVIDIA doing its thing. Okay, we're at the highs, NVIDIA. Okay, NVIDIA. Maybe take a little profits off on NVIDIA. NVIDIA, where...
If you consider the investor base for Tesla, about 42% of the total share float is owned by retail, and insiders and, of course, institutions own about 58% of the underlying shares. So there's quite a lot of retail investors.
Okay, NVIDIA, I'm taking a little profits off. Day trades, NVIDIA.
In terms of momentum for the underlying stock, but the whole story also in the last year for Tesla is essentially what's going on with vehicle production as well as vehicle pricing. They've obviously cut back significantly their pricing of automobiles, really undercutting some of the competitors. They've actually, as a strategy in a business, sacrificed margins, which if you look at their gross margins, are down about 400 basis points compared to their averages over the last 5 years, looking at last year. But the company's actually been cutting back expenses as they cut prices for their vehicles. And so the profit margins have actually improved quite significantly by 500 basis points compared to their 5-year average. But what's happening here for Tesla, it's not about vehicle production and delivery. It's all about software as a service. Tesla is expected to be the go-to company when it comes down to robotaxi, of course, autonomous driving. They'll be licensing, if all things work out for Tesla, their technologies to all auto manufacturers and all, even commercial manufacturers, for instance, semi-trucks, and anything that has to do with transportation. So valuation on Tesla, obviously quite expensive. It's really not priced as an auto company. It's really priced as a technology powerhouse, which I think, next month is going to be a sort of a monumental pivot point for Tesla. And I think this is essentially what the market participants are waiting for.
George, when we look at streaming companies, it's always about subscriptions. When we look at Tesla, it's always about EV sales. Is there an inflection point coming in the future?
Okay, so NVIDIA, nice little run up today. Broadcom, same thing. Broadcom.
That seem to be growing at Tesla. And where do we see that show up? Now we're seeing higher lows and higher highs.
Starbucks starting to get a move on. Starbucks, didn't look at Starbucks today, but Brian Nichols is at the helm. So one of the things that Brian Nichols is talking about doing is to bring back the remember the days when Starbucks was a place where you go hang out. They had the comfy chairs, and now they have these hard chairs that are like you don't want to sit in them for more than, I don't know, 30 minutes. At least I don't. He wants to go back to that. Yes, keep the gain, not keep the gains, keep the cash flow from the online ordering. It's turned into a company that 70% of orders are from people calling. They go, they call, they get their beverage or whatever, and they leave. Used to be everybody wanted to hang out. It was like a family thing, like hanging out with a group of people that you would see every Saturday. I remember there was one in New Jersey I used to go to every weekend on Saturday. I would do all my research there. I mean, it was a great place to hang out. You knew the people that were there. You knew the baristas. You knew the people who would sit around on their computers and stuff. Brian Nichols going back to that. So I think that's going to be a big plus for Starbucks. Okay, big move on Starbucks today. All right, so okay, Starbucks, SBUX. Brian Nickel.
If they have a breakthrough, it doesn't necessarily mean that they're going to have mass adoption immediately. The market really won't care about that. They'll care about this slow adoption over time, which again, like I said, the software that will be licensed will come from Tesla because all this time they've been selling vehicles, they've been harvesting data from all their vehicles, which they have, many millions of miles of accumulated data.
Yeah, and Deutsche Bank agrees with that. They do not see Tesla as an automaker. They put a $295 price target.
I think it's day 2, right? Is it day 2?
All right, great stuff. Thanks for Toast in the market contributor here on the network. Let's dive into the trade.
CEO Brian Nickel. Okay, that's a nice response. Nice tight Bollinger Bands. Look for Starbucks to continue higher. Okay, Starbucks looking good. All right, Nano Nuclear. That's a swing setup, by the way. Swing setup. Looking for that to make higher highs and higher lows. It's not going to go up every single day, but a lot of people will chase it, and most likely we'll see this higher. Big day. It's up 28% on the day. Nice volume. Has an ATR of $2 on the day, so we're up way up there at 28%. We need to get above 1150, so mark that down on in your journal. Nano Nuclear, NNE, we're looking for that to be above 1150 this week, hopefully. If not today, that'd be great if it was today. It's 1127 right there, trying to get above 1150. Get above 1150, this starts to get a lot different for the shorts. I'm not even sure how many shorts are in this, but let's go check. Let's go check. Shortsqueeze.com. Now, this is updated twice a month, I believe. Short Squeeze, Nano Nuclear. I'm not sure when the exact date. Okay, so it looks like Short Squeeze has changed. Almost all their data now is members only. You can get the shorts interest ratio, and that's it. That's pretty interesting. Short Squeeze changed. Short Squeeze has changed. I don't know if you can do it on FinViz. Can you do Short Squeeze on FinViz? I think you can, right? FinViz. Look at Short Squeeze. They changed their model. This used to be, you could have all of this information here. The number of days short, etc. Okay, I think that's changed. I mean, I know that's changed. Let's see if FinViz does it too. FinViz, let's go. Everybody's going subscription only. No more freebies. Nano Nuclear. Isn't there a Short Squeeze information on here? Let's see. Ideas short. Isn't there a short on here? Let's see. Shares outstanding, short ratio 0.46. Short interest, yeah. So FinViz still does it for free. Money for nothing. You're short FinViz for free. Okay, so that looks good. Okay, sorry about that. Okay, super micro at the highs of the day. So some profit taking. Look for B and C pivots. Look for B and C pivots. You're at the high of the day, so just be aware of it. If you have more time, you can buy options that are further out in time. If you're thinking about options, I would probably do options now. Or shares. I'd be looking for this to be in the 500s soon. I think Bilderberg is, I believe Glasshouse blindly. So do your own research. Glasshouse coming in and saying Bilderberg, who was short Supermicro, is telling everyone out there that they're long for the foreseeable future, and that Bilderberg's assessment or their analyzing their data, their analysis has been faulty, and that caused some short covering, I'm sure. The New York FANG Index still looking pretty strong, looking like a good day. Futures are still grinding up.
We have more special interviews coming up later today, 3 o'clock Eastern, closing bell from out here in San Francisco. Brad Gerstner sitting with us, Altimeter Capital founder and CEO, talk about his portfolio, of course. And George Lee, he's the co-head of the Goldman Sachs Global Institute. Get a great look at technology, AI, so much more. Can't wait for that, and I hope you'll join me in a couple hours' time on closing bell. Let's do some final trades. Josh Brown, I'm going to give it to you first.
I like how the trade desk has been hanging in there. TTD.
Carrie?
Broadcom, they reported a decent quarter. It's down 23%, sitting on its 100-day moving average, and it's a good buy here.
All right, Steve Weiss.
I'm staying with Goldman, just a little over 11 times earnings next year.
Okay. Joe T, round us up.
Act 11, 52-week high, more to go on the upside towards the November high at 111.
All right, we'll keep our eye on these markets because they're getting even more interesting as we speak. As you see, some technology stocks are being bid up today. Some of the chip names are doing especially well. See you in a couple hours. The exchanges now.
Indeed, an improving tone as we move throughout the day. Scott, thank you very much, and welcome to the exchange. I'm Kelly Evans. Here's what's ahead. Some data point disappointment this morning with that latest read on inflation dashing hopes for a half-point rate cut next week. But one of our guests says the size of the first cut doesn't matter, and the time to deploy cash is still now. He shares his playbook, plus those mixed messages from the banks and why subprime could be the new prime. Our guest explains what that means for his stock picks. And there's one group of consumer stocks that may not take off, even in a soft landing. We've got the story and the trends you may want to avoid as a result.
Before all of that, though, we are far off the worst levels of the market. Let's get to Dom 2 with the latest numbers, Dom.
Got downside triggered because people were thinking the first cut is the deepest, and it's not really the case right now.
The first cut is the deepest.
Currently down 253 points. It's 2/3 of 1%. It's pretty deep, but at one point we were down about 700 plus points on the Dow Industrial. So just kind of keep that in mind. And basically for the S&P 500 at 5482, down 14 points or 1/4 of 1%. We were actually up 1 point at the highs of the session and down 89 points at the low. So again, well off the worst levels there. And the NASDAQ composite, 17,094, up about 1/2 of 1%, 72-point upside for the NASDAQ composite.
Okay, there go the futures. Oh man, look at this. This is going to be it's going to be one of those days. SPX, ES futures.
Technology overall up about 10% there, at least for the SPDR ETF, and the XLE is only up about 1/2 of 1%. At one point today, energy was the only sector of all 11 in the S&P that was down on a year-to-date basis. So keep an eye on that weakening energy trade and see if there is any kind of a bounce there. And
SPX.
if you're looking for some of the trading plays on what's happening with the election right now, check out some of these names like First Solar, Enphase Energy, and Sunrun among some of the alternative energy plays. Seeing some
Look at the markets. Oh, there goes in Broadcom, still going. Broadcom. Pretty cool when everything is working.
Relatively speaking, that we see Vice President Kamala Harris progressing in the polls. Albemarle is a lithium play for batteries, up 10% as well. So the clean energy trade, at least for right now, showing some signs of life. Cal, I'll send things back over. Did Trump make some supportive comments?
Yeah, that's a good point. I mean, it's kind of a weird way of saying it. If you do what the 10% won't do, your odds of success increase dramatically. Don't be discouraged that only 10% of traders are ever profitable. What does that mean? If you do what the 10% won't do, well, one of the things that the 10% won't do is they won't chase prices. They won't buy the high of the day. They won't buy if the markets are dropping dramatically. There's a lot of things they won't do. So yeah, it's kind of a weird way of saying it. But yeah, I agree with you, David. That's a good one. Thank you. I'm going to save that for posterity. Okay.
Steve, in the past 4.5 hours, have we learned anything about what's going on with owner's equivalent rent?
It just remains sticky, Kelly. We can't seem to get that series to match what we think is going on in the broader economy, which is a decline in rents and even home ownership, home prices. It remains to be seen what happens as the Fed reduces rates and mortgage rates come down, whether or not that brings more buyers into the market and perhaps pushes it up. But this series should have gone down, I don't know, 12, even 18 months ago relative to what's happening with other series. So I think the Fed will tend to discount this and maybe just see it as a snapback from some lower numbers that we had previously.
Well, that's exactly why I wonder if the Fed were to discount it, Steve, wouldn't that actually maybe take the impetus off of today's report, pushing them towards doing 25 instead of 50, for instance?
I think the report overall does sort of, as you said, nail in the coffin for 50. I don't think this is a report that says we have a real deflation problem the Fed has to catch up to. I think the Fed wants to do 25. I think it will do 25. And I don't think there's much in today's CPI or tomorrow's CPI that would suggest the Fed would do 50. I would also note that the market increased the probability of a 25 basis point cut.
DL, bring you in here, and you are expecting, correct me if I'm wrong, 25, maybe a series of them at the meetings to come in. How do you expect the Fed to talk about these rate cuts as well?
Right, so for now, we think the Fed is going to talk about the rate cuts as being somewhat gradual. I don't know they'll explicitly use that word because they don't want to pre-commit to a pace of cuts, especially when they know how quickly things can move around turning points. But at the same time, they do want to stress that the base case is for a soft landing, and a soft landing means that you cut relatively gradually to get back to neutral. So, they'll express some concerns around the labor market, as they should, but at the same time, they will express confidence that the economy is holding up. And so these are not rate cuts that are bringing you
deep into accommodative territory. You're not yet saying, look, there's a recession, we need to accommodate the economy. What you're just saying is the time has come to get back to neutral, and we can do so fairly expeditiously, going 25 basis points per meeting.
So, Paul, we're looking at the Dow intraday, which was down more than 500 points, kind of in the aftermath of this report, and these 50% cut odds going, smaller. Now we're recovering. Why do you think that is?
Yeah, we've seen this happen so many times. I've lost count since 2022, the middle of 2022, expecting rate cuts, hoping for rate cuts, praying for them, and then they don't materialize quite as quickly or in the magnitude that the markets are expecting. I think that's what you've seen in the knee-jerk reaction to today's report. We want to stay kind of focused on the future. It's really an academic question, 25 or 50. We think they cut a full percentage point this year and more into next year. We see that soft landing. We agree with that scenario, and we think that now's the time.
Okay, look at the future. Jesus. This is great. This is good stuff. Where did that go? Oh, that went in my downloads. Let me go to my downloads. 10%. Yeah, that's a good one. I love that one. That's great. That's great, David.
The market opinion thinks is warranted, and the fact that we could, we're down almost 200 points right now, call it almost unch. That feels like it's the financial system giving permission for a smaller cut on the hopes that maybe we can have a soft landing.
Well, I think the way to think about the market here, and I'll defer to other experts on it, but my take has been that the market thinks it can have its cake and eat it too. It can have rate cuts, and it can have relatively strong growth. Every time that growth story comes into question over the past several weeks, Kelly, it seems like the market sells off. And I think the market is right here in that sense that Fed rate cuts, if you do have real weakness, will not completely offset it. It'll be something of a salve, but it won't be enough to offset real economic weakness. And that would, of course, create the situation where the Fed would need to cut much more quickly and much more deeply.
Right.
But right now, the market baseline, I think, is a soft landing with the rate cuts. If that soft landing turns out to be harder, I think that's what concerns the market.
Let's get Rick's take on this too, which is perfect because we also just had a 10-year note auction top of the hour. Rick Santelli is out at the CME. Rick, how'd it go?
Terrific. Boy, oh boy. I'll tell you what, they were just rushing to the table to buy these 10-year notes.
All right, Santelli talking.
Kelly. It's a reopening, adding to an issue whose coupon was established about a month ago. So 9-year, 11-month securities, if you want to be detail-oriented, and the yield was 3.648, a basis and a half below the when issued market at 1 Eastern. What does that mean? Lower yields mean higher prices. The government was a seller. It was a very solid auction. And if you look at the bid to cover, it was the best since just June, so not long ago. But look at the other metrics. Indirect bidders, whopping 76%. That's the best foreign involvement since Feb of 22. If you look at dealer takedown, the buffet table was almost empty, 10.2%, the smallest takedown since August of 23. The only fly in the ointment why it was an A- auction is because direct bidders, just like yesterday's 3-year, mutual funds, pension funds, insurance companies, they were at 13.7%, the weakest since August of 21. Why? Well, most likely because there was interest outside of the country in many ways, and the auction takedown, well, many are saying it's the slowing economy, maybe it's the yield curve. Hey, maybe it was a debate last night. We're indebted up to our eyeballs. Seemed like there was a lot of programs and policies being thrown out there. How are we going to pay for them? That's one question. But then you have to question, if that is an issue, why did they buy so many 10-year notes? Most likely, slowing economy is having a big effect on long-dated treasuries. Tomorrow, we finish up with the $119 billion in treasury coupon supply with the reopening in 30-year bonds, so 29-year, 11-month to the tune of $22 billion. Back to you.
Rick, real quickly, there are a lot of people who have pointed to falling bond yields and falling oil prices, saying that these are screaming recession and that the Fed needs to react. Of course, now the CPI report this morning points in the other direction. But what would you say? What is the feeling from the traders that you talk to about what the declines in bond yields and oil prices mean as to what's happening in the economy?
The traders are all in on the Fed put. They're all in. Look at what types of trades they're doing in short maturities at the CME. Now, once again, we get into the argument. Market's wrong, market's right. Whenever I clap my hand, whatever the prices are, the market's right. But it doesn't mean that what they're saying today is going to be right down the road. I think traders are way over their skis. I do believe there's a Fed foot here. But on the other hand, we have a two-speed economy. And I really believe that those who need credit aren't going to necessarily benefit much from a quarter or half point. And I think much more than that is questionable. I still see a stagflationary outlook in slow motion. I think CPI, PPI, PCE are all going to stabilize between 2.5% to 3%. And I see growth as a downward trajectory, but a long, long runway.
Thank you very much. Rick Santelli, let me get some response to that from Aditya Bave, which is to say it does make a big difference in the long run, whether we get inflation below 2% or stuck in the 2 to 3% range. What do you think is taking place here?
I think it makes a difference in terms of the credibility of the Fed, in terms of consumer welfare. Being at 2.5 is not that different from being at a little bit below 2 like we were before the pandemic. So I don't think it makes that much of a difference in the long term. Wages important. I think this is really, really important and perhaps slightly.
All right, nice day. Nice day.
Wages since the start of the pandemic have cumulatively outpaced prices. And right now, wage inflation is still running stronger than prices.
Okay, we're still pushing higher. So I'd be taking profits off. And this is a perfect opportunity, especially if you got a bunch of losing positions. Hopefully, if you're in the trading room, you don't have too many of those. But taking profits off into strength, reassessing the markets because we just turned literally on Friday. Many stocks started moving higher on Monday. So we're very, very early in this reversal. Could still get rejected. The 50 days overhead. So what I've been doing is reducing exposure. I took off Zscaler, probably did it too soon because it did bounce just like Broadcom did yesterday. But jettisoning, getting rid of stocks that aren't working. Free up that cash, keep it in cash. Find a fat trade, a fat pitch that you can take into the next day. Look for. We'll be looking for bullish bias, like you can see on the screen right now. Nano nuclear energy. Look at that candle. Okay, so what does that tell me? Well, it's above yesterday's high. So if it closes up here, automatically, I have a bullish bias using the strategy. Previous daily high, previous daily low. In this case, I have a bullish bias for tomorrow if it closes here. Does it mean it's 100% that it's going to move higher? No, but it's the bias that you're looking at. So in the morning when we come in, the first thing we'll be looking at is nano nuclear moving higher. What about Nvidia? So Nvidia had a nice turn. Okay, you got three white soldiers. Here's Friday's candle. That's the reversal off the lower Bollinger Band. How many strategies do you need to be in alignment to get you to take a trade? Now, you don't want to buy it at the high of the day. That you definitely don't want to do.
That's exactly right. We have the overnight rate at 5.5% and the 2 years at 3.6. So that either means 2 full points of cuts are coming in fairly near term. I think that's one of the biggest questions in the market.
Well, hang on, Kelly, because it's actually bigger than that. I'm going to get a fresh quote, but quotes in the back, if you can put up the September 2025 Fed funds contract, it was trading 245 or 250 below where. So 1 year from now, the expectation is that number has a 2 handle on it, 290 or so. Sorry, 288 right now, Kelly. So there is a lot of cutting expected, and the 2 years seems to be maintaining that yield up here 3.5. So something's wrong.
Imagine buying it at 5. You could have done that on April 30th of this year, which is astonishing. Gentlemen, thank you all. Really appreciate it. Steve Leisman, Aditya Bave, and Paul Christopher. Because of the drop in yields, mortgage rates are at almost a 2-year low now. Diana Olin with those details. Diana? Yeah, that's right, Kelly. Mortgage rates dropped 11 basis points after the CPI report this morning. The average rate on the 30-year fixed is down to 6.11%, and that's according to Mortgage News Daily. The rate has been falling for 6 straight weeks, but mortgage demand seems to be waiting to come out of the gate. Refinance applications only increased 1% week to week. They were 100% higher than a year ago, and while that may huge increase. The numbers were so low last year that even with the large gain, refinancing is still really historically low. Most borrowers have rates well below 5%, and anyone refinancing today likely bought their home in the last 2 years when rates had moved significantly higher off of record lows. Now, applications for a mortgage to buy a home rose just 2% for the 3% 1 year ago, given sky-high home prices and low supply. A lot of potential buyers are waiting.
All right, so we've had a good morning. Maybe we want to take some off and take the rest of the day and go play golf or something. Okay.
You should, quote, look out because the market should take off. Kelly, wow, wouldn't that be nice? But if that pushes prices up further, I mean, and how much difference in the margin does it make? 6.25 versus 5.8. Well, it makes a lot. Every time you do a refinance, they look for 75 basis points. They say that's worth it. But if you're buying a home, depending on the price of the home, it can not only make it more affordable for some buyers, but it also makes them qualify for the mortgage. Because remember, mortgage lending is very tight right now. And a lot of folks think they can afford it. They want to put that money down, but they don't qualify for that loan at that rate. When the rate starts to come down, more buyers qualify for the loan, and of course, more can afford it. Thanks, we appreciate it. It's a big changes potentially on Make. Diana Oleg. Coming up, tech and communication services are both in the green today, but financials remain among the worst performing sectors and are extending yesterday's losses. When we come back, we'll break down the good, the bad, and the ugly in the space, with Ally Financial failing to rebound after its worst day since March of 2020. Plus, there was no mention explicitly of taxing capital gains, tips, or dividends during last night's debate, but we've got the biggest policy takeaways from what concurred and what both candidates are saying about fighting inflation and tackling the deficit. As we head to break, here's another check on stocks with the Dow carrying a 744-point loss. We're only down 187, and the Nasdaq is higher by 0.75%. We're back after this.
This is The Exchange on CNBC.
Yeah, that's a good one, David. I got a lot of responses already on X and StockTwits. All right, so Supermicro still going. Supermicro. All right, so this one, don't buy it right here. Whatever you do, I can't say that this is going to stop right here, that you won't make money, but the odds are we're going to pull back. You see these fair value gaps now. Plus, we're up big on the day. I would rather come in tomorrow and have the entire ATR to trade in. Start off. Hopefully, we're only like up a buck, or maybe we're down intraday or in the morning, like we've been the last 2 days. We've dipped early and we reversed around 11 o'clock. So look for that reversal. Look at the 11 o'clock reversal. How much better that would have been had you waited. If you learn anything from people in the trading room, including myself and other people who stop in every once in a while, like Mikey, you're looking at support and resistance. You're thinking to yourself, what is my potential loss if I take this trade? So that you're looking at risk management as well. You're not just taking a trade thinking that it's going to follow through. Plus, you're not taking the high of the day. You're looking for dips to buy. If you had bought the dip at 11 o'clock, you're up, 13 points. 13 points. Huge. So tomorrow will probably be another day like that. I'm thinking that we're going to be back up at 600 in the next year or so. It's probably going to take, it only took a week, 2 weeks to get down here, but it's going to probably take 5 times, 10 times as long just to get back up to the high. So if you're doing anything on Supermicro, buy dips. You don't need to chase it right here thinking you're going to miss it, because invariably it's going to pull back first, and you'll be questioning why you took it, and then you'll sell it, and then it'll take off like it did yesterday. Yesterday got stopped out. Some options I was, a little early getting in. I haven't traded it that much. I traded shares a couple of times and options once. So now it's following through and proving the point that Supermicro, buying the dips, is the way to go on this one.
defending yesterday's declines after commentary from executives. First, there was the good. Bank of America CEO Brian Moynihan saying right here on CNBC that the consumer is stable and not getting worse right now, but the shares kind of shrugged it off. Then there was the bad. JP Morgan Chase COO Daniel Pinto warning that net interest income next year is going to be a bit more challenging thanks to expected rate cuts. Those shares down as much as 7% in the session. And then the ugly, the Ally Financial CFO saying their borrowers are not just struggling with high inflation, they're now also navigating job market weakness. Ally mainly citing concerns in its auto loan segment that had the shares down 18%. So is this an auto-specific story or cause for broader credit concerns? My next guest covers the consumer fintech trade, including names like Affirm, which also has some exposure to autos. Joining us more for what he's seeing and where there's still opportunity, Dan Dolev is senior analyst for fintech equity research at Mizuho. Welcome to you. First of all, because you sort of are very front and center with a lot of these kind of consumer finance-y kind of names, especially the fintech ones, are you detecting a lot of broad-based weakness right now, such as what Ally reported?
Actually, it's really interesting. So to make the distinction, the lower end you are, the better off you are. So what we're seeing for, Firm or even Upstart, we're actually seeing them doing better now than the more prime consumer. So I think this is more idiosyncratic, Ally specific, the commentary, and not a broad-based delinquency sense for the Affirm of the world.
That is interesting and surprising. You think the fintech players with more exposure to the lower income consumer are doing better right now? How could that be?
Correct. I know it's counterintuitive, but subprime is sort of the place to be. And if you think about what happened, for example, at Upstart, that's the best example. The low-end consumer got
Okay, so we're pausing a little bit at the highs. Look at Supermicro, super strong. Holy smokes, there goes Broadcom. Broadcom is going.
That lowers delinquencies than anything else, and that actually causes a slowdown in the macro, but it's good for the borrower. And the prime consumers are actually experiencing the same.
There goes Broadcom.
Consumers experienced 6 months ago, and that's the disconnect that you're seeing. So that's the time to sort of
NVIDIA.
Start by Affirm because there's a disconnect in the delinquency.
This is surprising on a number of levels, but you think what Ally is talking about is actually more of a prime consumer.
Beautiful. What a great day. Arm rocking. Good. Cool.
It has to do more with the behavior of the consumer, right? So the low-end consumer kind of depleted their savings, like 6 to 12 months ago, and they started pulling back on spend. They spent more rationally, and I think what we're seeing now is that the more prime consumer is seeing the same thing. Obviously, jobs are not happening, right? Are not helping, but the job market is still pretty tight. So I think it's more about behavior than any outside forces.
So keeping all this in mind, what do you do with the stocks? Because I hear all this and I go, well, none of this sounds great. So maybe you just want to slowly back away from the entire space, but maybe you see it differently.
I mean, I see this differently. Like, let's talk about the firm specifically. They're going to be gap profitable by the end of next year, and then if you get like 9 cuts.
Okay, ARM Holdings on the move. ARM. ARM. So you know what I did with ARM. I showed you this yesterday. ARM Holdings. It's not too late to take a trade on ARM Holdings. You just want to wait for a dip. You want to wait for a dip. But what I did was I sold the 110, 105. Okay. This is making money as the stock moves higher. Why does it make money, Benny? Because I'm selling the 110. Think about selling a put. Let's say the put is $5. Let's say the put is $5, and you don't want to just sell a put naked. You want to have some protection. So what do? Let's say you sell the 110 for $5, and you buy the 105 for, let's say, $3. So you got a $2 credit or $200 per contract. Okay, that was yesterday. You have a $200 credit. Today, prices move higher. So what do you think those puts are going for? You think they're going for $5 anymore? No, they're probably going for about $4, maybe $3.50. So immediately, the cost to buy back this credit spread is much lower. So something I sold for $3 or $2, I can buy back for, say, $1. I'm just using an example. So I just made $100 overnight. Now, if I got 10 of these, which I do, I made 1,000. Actually, this is looking pretty good. I'm looking at the P&L. You made $1,000 overnight. Now, granted, this could pull back, but that's why we're looking for a bullish setup. How would I look for it as direction? Well, number one, I want to sell outside of the upper and lower Bollinger Bands. And because the stock is moving higher, I'm looking for RSI to point the way. Relative strength is telling me strength of trend is improving, and these Bollinger Bands are most likely going to open up. So as they open up, what do you think what's going to happen with this put as it moves higher? Well, probably by tomorrow, I could buy these puts back for like 50 cents, $50 per contract. So now I've made $1,500. You follow? So I'm also looking at volume. I'm looking at MACD. What's it telling me? Looking for stochastics. And if I look at the 3 MACD setup, you can see what we were thinking yesterday. 3 MACD setup was already firing on the short time frame, right? So short time frame crossed up yesterday. Stochastics turned up. So that's telling me look for closes in the upper half of the daily range. Okay, all 3 of these are turned up. So that the likelihood of ARM following through is pretty high. So by, what's today? Wednesday. By Friday, I'll probably take that position off or roll it out. Take some profits on it and then roll some out for even more gains. Okay, looking good. Looking good. Sing it, Janice. All right, I got to take a couple of minute break. Let me just make something real quick for lunch, and I'll be right back. Everything is rallying here. Everything is running. Broadcom is like off the chart. I literally, there goes Super Micro. Holy moke. There goes Super Micro. Look at Broadcom. Look at Broadcom. Ay, ay, ay. Broadcom. Fill the gap and is running. I got this yesterday. Charlie. Okay.
So this news was almost treated like an earnings event. What we saw was a giant jump up in the share price, and then it kind of resumed back to its regular trading activity, which has been sort of this choppy sideways range-bound trade. And so expect this newly established range post the nickel appointment to maintain, perhaps an iron condor surrounding it could benefit. So what we're looking at here, October monthly, 90, 100 strangle, so selling that 90 put, selling the 100 call, defining the risk with $5 wide wings. So in this case, it's an 85 put and a 105 call. Creating an iron condor strategy, again, surrounding the recent range post that announcement of Brian Nickel as the CEO. $1.60 credit, lean buffer, max stop at 160, $5 wide spread, net of the $1.60 leaves you with 340 or $340 in risk. If it breaks out of this range, goes through 105 to the upside or falls below 85 to the downside. Break even, simply take that credit away from the put, add it to the call on the short side, and you go ahead and you get those break evens 88.40 as well as 101.60. So you have a pretty nice window here of around $13. Where, you know, if you're talking about a $90, $95 stock, it's like 15%. So pretty nice little window just asking for this stock to maintain.
So many stocks moving, so little time. Super Micro. Wow, so many of these stocks are ripping. Did I not post AVGO? I thought I did. AVGO. Okay, Broadcom has just gone through the roof here. Holy smokes, look at Broadcom. Look at Broadcom. Oh, man. Oh, beautiful. Beautiful.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes is, we're customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live
Wow.
available anytime, anywhere, on any device for free, and available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades and full hours of trading. I'm Tom White. I'm Kevin Hinckley. Catch me on Fast Market. Weekdays at 2.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, NVIDIA. Wow. Wow, I'm just really impressed. These things are not going to go straight up, so I'd be taking some profits off in the strength. Broadcom, let's see. I got the Broadcom. Okay, those are Fridays, so we're going to take those off. Broadcom at the high. Okay, Broadcom out. Broadcom at the high. Could keep going. Broadcom selling into strength.
You're kind of in the minority now, and we're seeing that hit GameStop shares. The fact that people don't necessarily need to go to the store anymore, and that's like 30.
Wow, NVIDIA, you're looking beautiful, beautiful. NVIDIA, NVDL, those shares doing well. Susie, you bought right at the right time. Wow. NVDL, NVDL.
GameStop didn't hold a conference call, and they didn't include any commentary on the earnings release, so it didn't really give any color in terms of the turnaround plan or the strategy.
Okay. Take some profits into strength. Yeah, you might miss some more levels overhead, but so what? So what? Apple. Okay, what is Apple at? Okay, Apple. Apple. Tesla. Tesla. Oh, some of those TSLL. Tesla TSLL. My son has some of that too. He's going to be happy. Monitor. Equities. Tesla. TSLL. Zscaler. Okay, we're out of Zscaler. Starbucks. That looks like it's going to start cooking. Starbucks. Amazon.
Caroline, I know a lot of analysts just choose to not cover this name for various reasons, but I think Baird had some thoughts on it. Other than that, or including that, like, is this just kind of in the background now, or does it still have the same kind of
Amazon.
interest standpoint, even amongst traders on the floor or analysts that do cover it?
Broadcom, Starbucks, Rivian. Okay, SPY. SPY, that was a good trade on SPY. Do you still guys still got the 542.50s, 547.50s? Let's take a look at SPY because we're max profit, right? We're above max profit, so you should be taking those off. I got to take those off. So I'm going to exit those 542.50, 547.50s. Ooh, that's a nice profit. Ooh, that's nice. That's nice. Tesla climbing. Tesla. Okay. Tesla. Okay, went Tesla higher. Tesla. ARM Holdings is doing well. Tesla, we have put credits on Tesla. So we want Tesla to move higher. Have TSLL as well. Tesla. Okay, put credits on Tesla. This is making money, pushing higher. So I can buy these contracts back for about 20 bucks, I think. Let's see. Let me take a look here. Create closing order. Oh, not yet. Not yet. What? Let me take a look at Tesla. Something doesn't look right. Oh, I got two tranches. Okay. October 4th and October 18th. Okay, those should continue. All right, so those look good. ARM Holdings doing well. ARM just blasted in the other direction. ARM. I was supposed to take a break there. I completely forgot to do that. Okay. ARM Holdings continues. October 11th. Okay, NVIDIA. Broadcom's still going. Supermicro. What's Supermicro doing? Supermicro. Cleaning the deck. This is just taken off like gangbusters. Congratulations on Supermicro.
Jenny, I stand outside the store and order from the app and then walk in so I can avoid any line. And then I just stand at the end and wait for them to make it. But I don't know. I usually like people, but something about the Starbucks, I just want it ready when I get in, or I want it from the app. I totally get it. You're probably saving so many minutes.
Okay, let me take a look at Chipotle, CMG. Chipotle. Okay, it looks more bullish. It's starting to get above the 50-day Chipotle. I have a call credit overhead. I'm going to go ahead and take that off because, yeah, let me go ahead and take this off.
It still seems like a name that the reason it has interest is because of that meme-like potential. This is a stock that was sub $10 even just earlier this year and still
getting closer to my break even. So I'm going to take this call credit off on CMG. All right. So we're making a nice little move here, but I'm about $1 away from my $2 away from my break even. So I want to take that off. Basically a wash on the trade. I got a credit, but I'm giving it back. It's okay. It's a very bullish day, so I want to focus on the stocks that are just continuing higher. All these New York FANG Index stocks are looking very strong. Broadcom is a standout winner. Okay, on any dip, I'm looking to get back into some Broadcom. Okay, Supermicro, same thing. I'd like to buy some dips. Okay, what's Nano Nuclear doing? Okay, still holding very, very strong. ABCD pattern probably today. Okay, you got a B pivot. Somebody bought the B pivot. B pivot. Okay, we could drift a little lower, but we need to get above 1175.12 by the close. That'd be awesome. Stock is up 28%. You can thank Frano and a few other people in the trading room for mentioning Nano Nuclear. This one worked out, so you can thank them now. If it was lower, obviously I had nothing to do with it. Good job, though. Good job. Nano Nuclear. Nice job on Nano Nuclear. See the trade, take the trade, put your stops in, and let her run. Okay, SPY. What a beauty. We're still going. Okay, I need to take a couple of minute break. Let me make something for lunch real quick. Take me 2-3 minutes. I'll be right back.
tracking the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to bring in a special guest today, Logan Gillen, an analyst at Jewel Financial, to break down the entire Glow Time event from Apple for us, which was definitely headline news, I will say, Logan, but walk me through what you liked, what you didn't like. I also tuned in. I have my own mixed thoughts, so I'm curious your feedback here.
Yeah, I mean, there's mixed thoughts. There's some cool, interesting things, but for the most part, I think it was kind of boring, honestly. Like, they added a couple of these small incremental changes that we've been seeing over the last few big announcements from Apple, and it just didn't seem like there's anything flashing or exciting. And you introduced me what I said in my notes. It feels like Apple's kind of become Toyota and not a McLaren anymore, right? It's not exciting. There's no flashiness. There's no like, oh my goodness, I got to go out and buy this. No, you're probably just going to, be with your Verizon or your AT&T, wait for the next time that you have an upgrade, and you're going to go with that upgrade cycle. Now, is there some cool things that we saw? Yeah, some interesting things, but most of them seem pretty niche. Like, they're trying to target a specific demographic, and they're not necessarily a great thing for all users. So things like in your Apple AirPods now having some hearing tests that are going to go on, or sleep apnea devices for your Apple Watch. Those two are targeting demographics that are of the older generation, and it seems like that's not even really Apple's target audience. You don't see many grandparents having their AirPods in. So there's some of these different things that they're trying to implement and add on, and it didn't seem exciting to me. It seemed pretty boring. The stock didn't really have a big move either way on this news. It just kind of coasted after it.
Logan, I appreciate the sentiment because I think it echoes a sentiment that I've shared on this program a lot of times over the years, which is the iPhone's no longer discretionary, it's a staple. The quickest way to get me to buy the new phone is that I break the one I have. I need it to function in society now. We were just talking with our last couple of guests, the app ordering, everything goes through the phone now. However, I have the iPhone 11. It's still working fine. So I love the Toyota McLaren kind of conversation. What gets me to get a new car is the old car starts to break down. And so when I look at this going forward, there was so much hype that this was going to be the one that was discretionary again. What if it isn't? Is there risk to the downside as far as you see it in terms of disappointment going forward? Or is it still too early to tell?
I think it is based on valuation. I mean, just like you're talking, it's become a utility. Like, everybody has to have your phone. You need it for pretty much everything, but there's no excitement in order to go out and buy more Apple products, even some of the ancillary products like the AirPods or the watch or things like that. It's kind of coasting again. If you have that, if you're in the ecosystem, you probably buy a new one every once in a while whenever you need a new one, but there's nothing exciting there. But if you look at the valuation, you have a forward multiple of 29.6. You have expected EPS growth of 11%. It's not very strong. It seems pretty overvalued for Apple. I'm worried about that moving forward for the stock. I think that there could be some downward pressure. We're already seeing rotation in the technology area after these have really led the market for the last 2 years. These big technology companies are starting to slow down and starting to have some weakness. And I think Apple could be one of those. It is kind of this staple almost to a degree where it's just kind of chugging along, continuing to have those recurring sales when you have your 2-year cycle on your iPhone and then you get a new one or whatever it is. But there's nothing to encourage that growth. It seems like there's a lack of innovation going on, and I think that's going to hurt the stock moving forward. I mean, I don't think it's going to be going away anytime soon. We're still going to be using our iPhones, but that historic long-term growth rate that you've seen, I think that's slowing down significantly. I think the price will affect that over time.
I totally agree, and I think like you look at Apple with its valuation. I mean, it stretches. It's the most expensive it's ever been. So that's also somewhat, I think, confusing. But just curious your final thoughts here on the Apple Intelligence component, because again, this to me is the most inarguably like concerning part of this entire event is that we're not even going to get a lot of that rollout, I believe, in beta until next month, but then more and more of those features until the beginning of next year. So I'm like, how are we arguing this super cycle if the AI component isn't even coming to these devices until next year? I mean, to me, there's like a massive disconnect with like expectations for Apple's AI and then the actual reality of this timeline.
Yeah, I agree entirely. I mean, they're coming out and this whole Apple Intelligence is going to be the biggest next new thing. But you notice even in that call, they did sprinkle it in, but they focused a lot on the hardware that they're bringing out for different lines, because Apple Intelligence, who knows what's really going to happen? We're going to get the beta here in a month or so, and then probably have that final rollout sometime next year. But no one knows what that's going to do or how much it's going to be encouraged. I mean, if you look at most iPhone users, many people don't even use half the functionality that your iPhone has right now. To add this Apple Intelligence and act like that's going to be the next new thing that's just going to boost tons and tons of growth, I don't buy into it. It doesn't make a whole lot of sense to me. I mean, I know they had even like the feature of the new camera. Well, I'd tell you 50% of Apple users probably don't know that you can take a picture with your volume button. I mean, there's a lot of these different things that they're trying to implement and show that we're adding value, but I still don't think that's going to drive the bottom line, and that's what we're here to talk about.
I totally could not agree more. I mean, there's been such an expectation, I think, like a reset following WWDC, where this event to me just was disappointing if you tuned in, frankly. So I'm so glad to hear my thoughts echoed similarly, but we'll leave it there. Great insight, Logan Gilland, analyst at Jewel Financial. Thank you for breaking down that entire Apple event for us, the Glow Time event. Maybe we can finally stop mentioning as of now, but we'll leave it there. Now coming up next, it's time for Under 30. We're talking AT&T, as one analyst says there could still be room for recovery from here. So we'll dive more into that with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30, today discussing AT&T, those cell providers that you might use for your iPhone. Joining us now is George Tillis, Senior Markets Correspondent for the Schwab Network. George, what's the latest with T? The kind of dividend stock, I guess, is sort of what it's long been known as, but it's starting to actually stage some decent price appreciation as well.
It has. I mean, if you look at it over the last 52 weeks, it's been a remarkable move for AT&T. if you look at the price action over the last 5 years, the trading range was about $12 on the low side, about $22 on the high side, and it's made a complete reversal since about October of last year. And essentially, the business itself, which for the most part, about 40% of their sales come from wireless services. They're actually the third largest provider behind Verizon and T-Mobile, which we know has acquired Sprint over the last year. So AT&T is the third largest player in the wireless and also the fixed line and broadband fiber space as well from a broadband standpoint.
Okay, looks like SPY is up near supply. All right, we got 1.5 million up here. Supply. Okay, from that was from Friday, Thursday, Friday.
And I see this as well in the last year or so. The free cash flow for the business has improved tremendously to about $18 billion on about $122 billion in revenues. And as you mentioned too, Alex, prior to me talking here, this is a company that's been issuing dividends very consistently over the last 5 years, about $1.11 per share, which is close to about 50% of their total earnings. So ideally speaking, even though it's been trading sideways and it's near the high end of that range, close to $22 or $23, it's paying about
Wow, look at Amazon.
yield and dividends over those last 5 years. And
Holy
it's had
smokes.
a remarkable move, close to 45% increase over the
Microsoft.
last 2 weeks. Because if you look at it, like I said, back in late 2023, it was trading near the lower end of that 5-year trading range.
So George, I'm curious because we just spoke with Logan Gillen of Jewel Financial, an analyst, and he was saying we were talking about Apple, and we were talking about how we all basically, the three of us collectively agree we don't believe in the super cycle to the extent in which the street maybe does. But there is also the thinking, I was reading part of this note that says that the iPhone 16 upgrade could actually be a major catalyst for the telecom stocks. And I'm curious your thoughts about that, because I also have a hard time justifying, again, like it all comes back to, I guess, the extent in which this really is a super cycle.
Yeah, so, whether or not it's a super cycle, for instance, for Apple, I can't say, without doing a little bit more research, but I will say.
Okay, we come up against resistance that we saw back on Thursday, Friday last week.
Earnings for the telecom providers. That includes, Verizon and T-Mobile. Will AT&T actually get more new subscribers, if you will?
Okay, we got a bullish bias for tomorrow if this keeps up on SPY.
But again, they may end up getting some more promotional offerings that, in other words, consumers pay up for additional services once they renew towards a new product. So I think at the end of the day, I don't necessarily see AT&T increasing its total share, market share count, because AT&T is releasing a new iPhone. However, there still could certainly be additional dollars spent per customer once they do renew their phones. And if they're an existing customer, maybe they pay a little bit more for those updates, or maybe even add on an additional service provision associated with their new phone. So, but you also have to look at the market share context that these three providers offer. There really isn't more competition outside these three, at least domestically in the United States. So with that said, all of them provide some really great cash flow opportunities and stability versus growth. So this is more in the realm of, income generating stocks versus growth stocks. Apple, of course, still being a growth stock with a value oriented element to it, where you could also make the case that AT&T is a value stock that provides more income versus more growth.
One has to think too then, George, if rates continue on their trajectory, which has been lower, if they can maintain this similar yield, it makes them more attractive in the future. But we got to leave it there. Appreciate it as always, George Toth, Senior Markets Correspondent for the Schwab Network. Jen, that's going to leave us with a market that's turned green.
I was going to say, for once, we're leaving this show on a more positive.
There, everybody, all these talking heads are like totally oblivious. Where were they at 11 o'clock when we made a low? Were they looking at potential buys? No.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political
trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good afternoon. Welcome to the Watch List. I'm Nicole Pedalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. The market's changing, had been in the red. We're starting to see some gains now. Thank you, NVIDIA, at least in part. We are up off the lows of the day, and you are seeing some green. In fact, we'll get the pulse also of the IPO market, some trends and potential names that you can watch for in the coming months. We'll take a look at leveraged and inverse ETFs, a new calendar-based product to consider. And our panel focuses on solar energy, the segment seeing a big boost today. The industry certainly became a point of contention in the presidential debate last night. In the meantime, take a look. In fact, the S&P was at 5406. Everybody was watching 5400, right? And they were watching 5500. So right now, we're at 5506. So what a big swing it has been. In fact, it is up now 0.2%. The Nasdaq's up a 1 percentage point. The Dow was below 40,000. Now it's down 1/3 of 1% at 40,608. The Russell is down 0.1%. Oil and gold are both higher today. The VIX is at 1860. That's come off because that was above 20 at 1.6755 the barrel, 25.43 for gold, which is relatively flat, 101.65 for the dollar, and Bitcoin 57,920. And of course, the yields in focus as well. The 10-year 3.67 is the level right now ahead of the Fed next week. That's your setup and a lot to watch. Kevin Hinks is with us because we're going to be talking about everything, right? Inflation, the PPIs tomorrow, consumer sentiment. We have a lot But I'm going to let you go through some of this action. Kevin Hanks, great to see you.
CPI on Wednesday, PPI on Thursday. Nicole, let's go through the numbers. First and foremost, a nice surprise in terms of the headline CPI number, up 0.2 month over month and 2.5% year over year. That's down from 2.9% a month ago. Now, let's get to the core. It was a little hotter than expected, up 0.3% and 3.2% year over year. That's unchanged with a week ago. The dominant contributor to the headline beat was energy, down 0.8% with gasoline down 0.6%, energy commodities down 0.6%, and fuel oil down 1.9%. Those are the highlights from this number, Nicole. Here's the problematic. Shelter up 0.5%, with owner's equivalent rent up 0.5% and normal rent up 0.4%. Food up 0.1%, with food away being up 0.3%, apparel up 0.3%. New cars unchanged on the report, but used cars and trucks down 1%. Airline fares up 3.9%, and motor vehicle insurance once again up 0.6%. So a number that certainly locks in a 25 basis point move from the Fed next week.
All right, stocks at highs, looking really good.
Very violently too. Now actually a pretty modest update here for the market.
Modest.
Understood. How about the financials? Because yesterday, we saw sell-offs of 4, 5, 6%, even 7% at one point for some of those financial names. And now, of course, Warren Buffett's been reducing his position in Bank of America for some time now, for months, to the tune of over $7 billion, right? But it was the words from Goldman Sachs and JP Morgan. What are people saying? What stood out to you, Kevin?
Yesterday, we had news from Goldman Sachs and Ally Financial that took some of the financials lower. Goldman talking about lower trading revenues. Ally Financial talking about a weakening consumer and credit for overall auto loans, which is their specialty. That took stocks down, financial stocks down yesterday. Today, Bank of America and Berkshire Hathaway, you mentioned, in a regulatory filing, Berkshire Hathaway disclosed that it sold about 5.8 million shares of Bank of America, valued at about $229 million over the period of September 6th to September 10th. Also, Morgan Stanley, Goldman Sachs downgraded Morgan Stanley to neutral from buy with a price target of 105, down from $122. They're lowering the numbers for this quarter, Nicole, across the board. You're seeing it now spread throughout the financials. It looks like trading is overall going to come a little lower. And like I said, the consumer is getting a little weaker, affecting the banks. Remember, the banks have had a great run this year, all up double digits for the year, now in correction mode for a lot of these names, Nicole.
Yeah. All right. Kevin Hanks, great to see you. Thank you so much for some of the details on the market here today and what to watch. Meantime, a look at the bigger picture. Mike Horwath is with us, CFA, Chief Investment Officer, Diversified. Thank you for being here. So the market originally sold off in the morning, and now we're seeing some positive moves. I mean, we started off with all 11 sectors lower. What do you attribute sort of that sell-off and then turnaround?
Yeah, I think it's ultimately a microcosm of what that inflation report was this morning, right? On one hand, you just heard it. Core inflation came in a little bit hot, and when it comes down to shelter and transportation services kind of not being able to get back into line with what the what the Fed wants. And I think what we're starting to see though is rental prices coming back into kind of more manageable increases, and with that you will start to see these lagging numbers start to come through. But the good news on the other hand is if you look at the headline inflation, like you just heard as well, energy and food prices have come back down, and I think it depends on which way you want to look at these reports of one being at 2.5%, but even if you look at the core inflation numbers of 3.2, a year before that, August of 23, the same number was above 4%. So we are trending in the right direction. We know that it's going to be fits and starts, but I think the market is grappling with where this thing is headed, and if inflation is still an issue, and look, at the end of the day, was it 25 or 50 basis points from the Fed? And I think this starts to lean towards 25 basis points for sure.
25 basis points. Is there anything that could come out tomorrow that would change that 25 basis points when we get the PPI tomorrow?
Yeah, it's a great question. I don't think so. And unless there's anything that's really, really unexpected, I think as long as it's somewhat in line one direction or another, I think 25 is largely the direction they're going to go. You know, the hawks on the Fed chair or Fed board, they can point to the core numbers and really kind of lean into that for, you know, going only 25. At some point, though, I think 50 will have to come back on the table, and maybe it's not till 2025. But I think even tomorrow, as long as we're within range of what we're looking for, things will largely still focus on that 25 basis point number.
Yeah, and you're waiting for rates to come down then, right? Because we're already seeing the 30-year fixed rate dropping. In fact, it dropped to the lowest levels that we've seen in almost 2 years. So rates going, I guess, in the right direction, at least for home buyers, right?
Yeah, for sure. And, you know, it's an interesting dilemma people have. You know, rates have been high. Prices we just talked about, shelter costs are high. You know, everybody knows the increase in house prices over the course of the last couple of years. So, you know, it'll be good. You'll probably start to see some refinances start to pick up, mortgage refis. And, you know, maybe this can help home buyers who have these built-in price increases now afford them a little bit more. But, you know, we still have a long way to go before we're going to get mortgage rates down to where they were, you know, 2021, when so many people in America were able to refi at sub 3% numbers.
And a portfolio now, are there certain areas that you like better than others? You know, we were just talking about some of the weakness we've seen in the financials and tech bouncing back. Do you find certain sectors more attractive right now?
Yeah, we still look at a lot of the stuff that's been working this year, right? Technology is still something we're looking at. You see NVIDIA popping up and down, but I think that the semiconductor industry as a whole is still a very interesting place. You just have to keep an eye on valuations and just understand the growth expectations that are built in. If you go even higher level, I just think equities are still a place that you want to have exposure to. If you look at underlying earnings numbers for the S&P, you know, somewhere in that 220s last year, 240s this year, 270s projected next year. You're seeing earnings growth broadly still remain pretty strong. So, you know, we're still conducive on equities. Within equities, I still think there's pockets of technology, even though it is pricey.
Tesla moving back up to yesterday's closing high.
Financial, we talked about it on the show here. Utilities, staples, it had a good run this year, but quality dividend businesses, you know, high cash flow businesses, you know, they still look, you know, reasonable, and it's just something we have to kind of manage as this fluid situation continues.
Where does the election fit into being a portfolio manager when you're trying to set one up, right? Is there any advice that you give to investors during this time?
You have to check your emotions after doing it. One of the first things we tell people, it's extremely hard to do. It's hard to do personally, as any person who has, you know, their own beliefs. But look, at the end of the day, you have to look beyond the micro and kind of focus on your macro, at least from financial planning perspectives. You create these financial plans to last 30, 40 years. And we've seen it election after election, whether you go to 4 years or 2 years, it's the same thing over and over again. You know, it's an emotional time for everybody. It's a divided country in many ways, but, you know, from an equity and fixed income perspective, or just alternatives, commodities, we want to remain invested. We want to make sure we have a plan if you're sitting on cash to get it invested and not just on the sideline. But our focus is mostly psychologically and emotionally with our clients to make sure that we're getting them, you know, invested and reminding them of what we're trying to do over the course of decades, not months.
How about fixed income? A lot of folks were really enjoying, you know, short-term bonds, and maybe that needs to change, or does it? You tell me. What do you think about fixed income investing?
Yeah, two things I really focus on. One, you know, it's been hard to get people off the sidelines when you're looking at 5% plus money market yields, CD rates, treasury, T-bills. It is hard to get people to look beyond getting 5% or 5.25%, whatever it happens to be, to get off the sideline and invest, whether it be in equities or really adding duration to your portfolio. But overall, I'd really say we are conducive on fixed income, understanding that our expectations are somewhat managed. Meaning, you know, we're not expecting to hit home runs months. We're not expecting this big bull market in fixed income, but if we have yields in that 4.5, 5 rate that they or area that they were, they've tightened up for sure with the 10-year under 4 at this point. But duration can add value, can add protection to your portfolio from equity volatility. And I still think you can flip coupons, you can get income yields, and you have to just be able to manage your duration of risk and understand that short-term rates. There's been a lot of volatility. We've seen periods of time here in the short term where fixed income was more volatile than equity market, which is not a normal environment, but they can still add to your portfolio, and yields are still reasonable. They're not as attractive as they were a couple months ago, but there's still something that will be added to your portfolio at this point.
All right, Mike. Thank you so much. Good to see you today. We appreciate it. Mike Horlock, CFA at Diversified. Thanks. Coming up, Options Corner. Tom White standing by, and he will highlight unusual options activity from the day, how investors are looking to trade on recent news of Amazon, Starbucks, and Best Buy. Stay with us here on the watch list. Schwab Network. We'll be right back.
All right, S&P is kind of pausing, not making new highs, just sitting here. I would take some profits off the table. S&P. Been a good day, though. Been a good day. ARM Holdings. Okay, look at the TTM. We're starting to slow down a bit. There goes Snowflake again. Snowflake popping. Okay, we started off the day with about 10 to 15 S&P 500 stocks green on the day. Only about 10 to 15. Now we've got quite a few. Still not 100%. We got 139 stocks higher on the S&P 500, 367 stocks lower. $14. Okay, it feels like the air is going to come out of the bubble here shortly. Feels like the air is about to come out of the bubble. We've come quite a ways here. S&P 500 up against resistance. That's Thursday, Friday highs. That's the first initial resistance area that we saw on the 8th to start the day. We had sellers immediately coming in and selling. Okay, on Friday they came in and just started selling.
Throughout the day, we welcome in Tom White, host of Fast Market here on Schwab Network. And we've had a lot of news on Amazon. It's up 1% today. The expansion of its cloud business in Europe is something that we focused on as well. Tell me a little bit about the bullish trade that you found, Tom.
Yeah, I've seen quite a reversal today, not only in the overall market, but in Amazon also. Shares are up about 6% from session lows, trading down below.
Super Micros looks like it's going to keep going. Super Micro.
Nice pop in the shares. Stock's up about 19% so far on the year. Everybody focuses on the retail side of their business, right? Because that's
nice dip this morning. Super Micro.
Probably should focus on AWS. They own about 31% of the cloud business. In there.
Dipped from 425 down to 412 and then reversed up over $30. That's nice.
So the cloud businesses continue to grow. They kind of reversed it the last 2 quarters of fiscal year 2024 based on the fact they got a new head of AWS in there. So if you saw the growth rate in AWS over the last 2 quarters, 17% and 19% respectively.
Super Micro.
Kind of a reversed that trend over the last.
All right, let's take a look at
quarters, and that's what they should
Supermicro.
be focusing on. And then also the advertising side of their business continues to grow at a double-digit percentage growth rate. So that's a bonus.
They must be pissed over at Bilderberg, whatever the name of the company is. SMCI. Supermicro.
Come in and buy a bunch of calls in here. And this was on the October monthly cycle, so 37 days to expiration here. The October 180 strike calls, trader bought over 10,000 of those. Paid an average debit of about $6.15. So they're paying a pretty hefty option premium on those. Those have already.
Bitcoin still going. Bitcoin looking good. So maybe Bitcoin can follow through. Okay. We had a dip, big dip this morning in Bitcoin. Boy, that nice reversal there. Bitcoin.
From this trader earlier on in the session, scooping up some of those at the money calls here. Amazon.
Let's take a look at BITO. BITO. BITO was his name-o. BITO. Bitcoin. Initially dipped supposedly because, according to the media, Trump, I'm not starting a political conversation, I'm just saying because Trump was bullish on Bitcoin. The media, of course, coming out and saying that, oh my gosh, Kamala got the edge on Trump. I don't know, whatever. Believe what you want to believe. But that was the initial move lower in Bitcoin. Now it's moving back up to the highs. So again, I don't want to post a whole bunch of stuff in the trading room about politics, but that's why Bitcoin dropped. Okay, Bitcoin. And now it's moving back up. Supposedly.
And they said that they initially wanted,
according to the people who know everything.
Clean up some of their stores, maybe get rid of all the multitude of offerings that they have. If you look at the menu of Starbucks lately, it's gotten maybe a little bit too big for its britches, and maybe he wants to parse that down a little bit. And then he also made some comments on China, where they're losing market share to Luckin Coffee and other brands, and their growth prospects there. Maybe they're not going to open as many stores in China as they initially called for over the last couple of years. But he said in his first 100 days, he plans to spend time in the chain's cafes and offices, meeting with key suppliers, getting back to being Starbucks.
Yeah.
Basically what he quoted. Maybe that.
Yes, sir. Nice work there, Grover.
Today in the shares. We saw some traders trying to take advantage of that, buying some October 100 strike calls. Trader bought over 6,000 of these.
Supermicro looks like some profit taking at 440. This thing, it just hasn't stopped.
Break even at 101.35, where he starts profiting, is only about 5% above the current share price.
Can only buy Supermicro. Can only buy it on dips. You don't want to buy it right here. We do have a bullish bias if we close like this for tomorrow. Got a bullish bias going into tomorrow. Does that mean that we're going to open up and move higher? No, it just means that we could do what we did yesterday. We could do what we did today. We pulled back. Look at the price action in Supermicro. It pulled back, gave you an opportunity to buy. Let's go to the 5-minute. Let's go to 15-minute. 15-minute. Okay, for the past 2 days, it dipped first and then closed higher. Today, it dipped first, closing higher. So that seems to be the pattern in Supermicro. So you want to wait for the dips to buy. You don't want to buy up here at the high. Yes, it could conceivably continue higher. If you don't mind buying up here, then put a stop like right at 437.50, like $2 or $3 below where we are right now. This is probably going to keep going, but I wouldn't be buying up here. I'd be looking for a dip. S&P.
Nicole, still declined 2.3% during the quarter, compared with a 6.2% fall a year earlier. That drop in comparable sales was actually the best result since the fourth quarter of fiscal 2022. So I think a lot
Everybody having a good day?
Post earnings was based on the fact that, hey, maybe that decline in sales growth is actually starting to moderate a little bit. Now, we've seen the stock pull back from those post earnings highs. And I think this trader's taking advantage of, hey, maybe this gap to the downside gets filled, because you saw some put buyers out here in the October monthly cycle. So 37 days to expiration, a trader bought 4,500 of the 92.5 strike puts, paid an average debit of about $2.10. So the break even for this trader when it starts profiting is all the way down at $90.40 over the next 5 weeks. That's about 7% below the current share price. Put volume about 3 times normal daily average volume in there. Stock was lower initially on the day, but popped with the overall market. But yeah, this trader is definitely looking maybe for some weakness here post that earnings pop that we saw. And if you look at the chart, the short-term chart over the last week and a half of trading, we've seen a real big pullback from those post-earnings highs.
All right. Well, thank you so much. I mean, it's good to see you and talk about some of these big names, popular names that people love to hear about. In the options corner today, Tom White. So glad you're on the show each day with these trades that we find. These are real trades that Tom White is taking a look at. Thank you, Tom White. All right, coming up, we'll look at the timing of a potential window opening for the IPO market to heat up and some companies that you may want to keep an eye on. We'll be right back.
Okay, looks like they're going to keep it going. Looks like they'll keep it going. They're pushing it a bit higher. Super Micro looks like it wants to go some more. Wow.
So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Super Micro. Mm-hmm. Super Micro looking very strong. Super Micro. Wow, look at the move on this candle today. I'd love to get a pullback to enter a position. I have nothing right now on Super Micro.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern.
Super Micro pretty extended on the day. Waiting for tomorrow at this point. All right, so risk is about $1.85 per share. So I would be any longs at this point. I'd be looking for like $2 stop. I don't like it up here. I don't want to buy it up at this point. This dip here that we got at 10:15, 10:45, that was good. That was good. Got a buy signal. We popped. We got a nice buy order block there. And now we got resistance just overhead at 444. Given it's still September and maybe people are forgetting that September tends to be bad in the second half. That starts next week, second half of the month. Maybe people are forgetting that you should be considering taking some profits off into strength. I don't know what your personal circumstances is, but for me, I'm thinking reduce my exposure. Do we have another leg down? Still very possible. Next week on Wednesday, we've got the Fed decision. Everybody's expecting 25 basis points. Many people are pointing out that every time the Fed started cutting rates, that the markets fell afterwards, some 10, 15, 20, in some cases 30, 35%. So I don't think that's going to happen, but we have to remember what's happened in the past. So with that in mind, I'm taking profits off in the strength. I'm looking for stocks to follow through. Some stocks that haven't been moving, like Starbucks, I'd like to see a follow through. Push a bit higher. Starbucks. Look at that move in Starbucks.
There are so many companies out there, Nicole, that are just hungry to IPO. They're waiting for the market to get just right. We know there's some election stuff out there. There's
Starbucks. Yep, looking good.
lots of companies that are just waiting to go IPO.
So, do you think maybe is it the elections holding them up, or what do you think? Is it the Fed? Is it the geopolitical tensions? I mean, why don't they just come to market?
Yeah, that's right. It's those things, and it's just market conditions. It's just not the right time yet. They're just waiting for the market to be right, the valuation to be good, and then they want to take off.
I mean, a week ago, we saw some of those semis down 10, 15% in 1 week. So had a tech company come out, right? That might not have been good market conditions, right? And there is a lot of volatility. Let's get to some of the ideas that seem to be standouts in your mind. What names are you really keeping an eye on that you have high hopes for?
Yeah,
Yeah, look at this market. This is crazy, crazy.
Databricks and what they're doing. I'm seeing their ads everywhere. They're making a big push. ServiceNow, they've revolutionized the service industry. I think they're going to be big.
Well, ServiceNow, I mean, isn't that publicly traded already? Wait a second. No, come on. Am I losing my mind? ServiceNow is
AMD moving too.
Oh, they are?
Look at you. Back on your AMD. Okay.
You had Service Titan.
I'm sorry. Oh my gosh, Service Titan.
He said it before the break. In his defense, during the commercial, he said Service Titan. Go ahead. Service Titan.
You're right. I was thinking ServiceNow, but Service Titan. Well, hey, let's go to fintechs.
Yes.
Right, Stripe, Plaid, Klarna. Those are huge. And hey, lastly, Nicole, it's Fashion Week in NYC.
Yeah.
Right?
Yeah.
What about Shine? What about Skims backed by the Kardashians? And lastly, it's NFL season. Fanatics could be coming up down the pipeline.
Yeah, the CEO actually was here at the New York Stock Exchange recently doing some interviews. In the fourth quarter of this year and first quarter, you expect more companies to come to market, right?
Yeah.
Why is that?
Well, we're just hoping that interest rate cuts could be coming. That could be a big help. I will tell you, Q4 would be awesome. There's lots of companies looking for that, but we're really hearing Q1.
Yeah, more Q1.
More Q1, more back half of Q1.
Is it so? These are a variety of sectors, right? Other than tech, which of these names sort of stood out to you? And in size, which ones are the largest? I mean, I know the ones that I know very well because, we see them on the daily, like Fanatics. It's really big, right? I've ordered from them. Skims, I understand the product. I don't have any, but I understand the product. Which ones do you think are really big here?
Yeah, Stripe is going to be big.
Stripe is going to be big. It's been a long time coming, Stripe.
That's right.
And a day.
That's right. And Databricks is going to be big too.
That is true. When you think back to some of the names that went public, are you impressed with the performance of some of the names, or disappointed with how some have performed?
I think they've played out exactly how we thought they played out, which is kind of not doing spectacular, but they're doing fine, and that's why you don't have the big rush behind them. I would tell you, Nicole, I'm talking to lots of CFOs, and they're kind of scared to be the canary in the coal mine. They don't want to be the first one out. So if there are folks out there and there's a trend, there's going to be a lot of companies that follow.
Yeah, and when we think of the path to profitability, you don't need to be profitable to go public. I mean, we found that to be true, right?
That's very true, Nicole. You don't have to be profitable. But I would tell you right now, lots of CEOs and lots of CFOs, they're grinding their operating results as best they can. They want to have the best numbers possible, to have the best valuation, to set themselves up for a great IPO.
Did you feel like SPACs had a tainted image?
Look at Supermicro. It just won't stop. Starbucks won't stop. Don't stop. Okay, looks good. All right, S&P making new highs. S&P making new highs. Good job.
The numbers are much more solid, and people have something they can really grab onto.
Yeah, because we have IPOs, we have direct listings, we have SPACs. When you think about some of the current leaders now, do you see spin-offs maybe happening too? Sometimes from the major companies. I mean, for example, we saw from Johnson and Johnson, and then we had the spin-off of the consumer products, right?
Yeah, that could definitely happen. I think that people are looking at what are the businesses right now that can be platform companies that can really grow. And if there's a spin-off that can provide that kind of return, it'll happen.
Right. You know, I was thinking about Mobileye, for example, right? It was independent, and they were kicked off, and then they became independent again.
So you guys heard that VW has been closing, are going to start closing production plants. VW, Audi. Big problems over in Germany. I know Mr. Weiss was heavy into VW. I don't know if he's still in it, but he kept saying how VW is going to be the next big thing. Now, is Porsche part of that group? I don't know. I don't know the story there.
And do you think the banks are ready to spend more money on IPOs, mergers and acquisitions? I mean, M&A has actually been doing pretty well for some of the banks. Final thought?
Yeah, I think that we are on the verge. Whenever this happens, whenever this IPO happens, right around the corner, there's going to be an avalanche of IPO and M&A. I would tell you the market, there's so many companies that want to do this. We're just waiting for the right time.
Yeah, I'm glad. All right, so waiting on the time. Probably more the first quarter of next year, as you said. Dean Cuyambo, thank you so much of Armanino.
Supermicro.
Still ahead, we'll take a closer look at the leverage and inverse ETFs, a new offering in the space from the firm behind single stock ETFs that include NVIDIA.
Mm-hmm.
You want to hear more about that? We'll be right back.
Tesla going. Oh, wow. Tesla doing very well. What are you up? $7 there, Mitra? You up $6 or $7 on Tesla?
Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical steps. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. Everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute.
Supermicro is still going, pissing me off. Not giving me an entry, but that's okay. Some of you are still long Supermicro. I'm in the day trader camp. I don't want to buy at the high of the day. I would like to swing some Supermicro. Maybe that's going to be one of the big gainers for the year.
Seeing into the green. And you could say thank you to technology and the NASDAQ and NVIDIA in particular, which also has had a big run. Went from 107 up to 114 or so. It's up over 5% for NVIDIA, and that's helping the major averages. The Dow, though, still lower, down 68 points. The Kaplan down over 600 points.
So many things moving. It is a problem when you see prices continue to move higher and you're out. But you know what? I'd rather be taking profits off into strength when I can and not when I have to, when a stock starts pulling back dramatically. Now I have like 10, 15 positions I have to close because the markets are dropping dramatically. Don't forget, the second half of September tends to be the most volatile part. Will it happen again this year? It's not an exact science, but I'd be planning for it. I'd be reducing my risk. If I had 20 positions, I'd be cutting it back to 10 as quickly as possible. Take the ones off that are lagging first and then let your winners run a bit more. But yeah, I'd definitely be doing that. Look at Starbucks. Starbucks still going. Paticus, you still in Starbucks?
Relatively range bound and contained. We're about 140, 150 points off that all-time high of around 56.70, and now, as you can see, we're about 400 points off those lows that we saw back in August, Nicole. Again, kind of a two-sided trade here today. In range, kind of holding in this balance. But you know, in many ways.
Yeah, me too, Mondo.
In terms of a bit of recovery.
Me too.
Some selling over we've seen over the last few days.
Yeah. All right. And then what about the inflation data, the 10-year note auction? What stands out to you?
Yeah, there was the note auction today, Nicole, and also we've seen some movement in yields, right? So the bonds I've been watching, the futures, and the 10-year futures contract also. That's why I wanted to start.
Yeah, Supermicro just getting started. So if you don't sell at the high of the day and, you know, you're looking for, you know, follow through, you're probably going to get the follow through. Supermicro. Starbucks is kicking butt. Starbucks is doing well. Starbucks. Okay, Starbucks. Starbucks. Recall, I have January 110s. January Starbucks.
Concerns about employment conditions, and basically unknowns about what's to come as far as that September rate cut, 25, maybe 50 yields coming off here, and
100. Sorry, 100 call.
How to handle it, I think, how to
Edit.
adjust some of the recent decay we've seen as far as the 10-year and the 2-year short end as well.
All right, Ben Lichtenstein, great to see you. Thank you so much. It's time now to turn our attention straight over to ETFs and a new option in the leveraged and inverse ETF space you'll want to hear more about.
Yeah, boredom kills profits. You're absolutely right. Tesla's still going. Tesla.
You know, before we get into the nitty-gritty of the different ETFs that we're going to talk about, you know, how's the ETF market going?
Tesla's looking pretty good there. Ooh, man, look at this market go. Go, gadget. Go, gadget.
You do see a lot of international investors coming in to buy leveraged ETFs here in the United States because leverage just isn't an option for global account holders. And also, they're not able to short stocks.
Look at Starbucks. I can't even fit it on the screen.
A whole other world to express their view.
So it's inflows plus more people that are getting interested in this.
Yeah.
You know, it's 2 times, let's say, right? Why don't you give us an explanation of what you look at on the daily?
Yeah, so of the 200 plus leveraged ETFs that are in the U.S.
Captain, I wouldn't know that. I wouldn't know.
Meaning they give you a stated return or stated leverage for the day's performance of an asset, index, or an ETF or single stock on that day only. So
Hey, Goose. My baby cat. You're such a sweetie. You my good luck cat? You guys hungry or something? Yeah, they must be hungry. They're annoying me. Whoa, look at Starbucks. Just about everything looks like Starbucks. Most stocks look like this, super micro included.
Yeah, I mean, the use of leverage ETFs is primarily by traders and investors that have shorter term investing horizons.
Right.
And you use leverage to be more efficient with your capital. It's been a way over the course of time, quite honestly, to show
You bought yesterday, right?
risk adjusted way to provide higher returns.
Oh, you this morning? Okay. Because I knew you bought some calls at some point looking for that must have been Monday at the close.
It's kind of the same in the stock market.
And NVIDIA and Tesla are front and center, and these are two names people love to follow. And you have products that you want to tell us about.
Yeah, so last week we just launched the first non-daily reset leverage ETFs, meaning the products reset.
Yeah. Oh, look at the markets. Oh my God. Oh my.
Basis on the calendar. So, for instance, our weekly NVIDIA ETF.
Oh, look at this market. Oh my gosh, look at this. Man, if you don't take profits off into this, I don't know what to tell you. What a freaking move. What a freaking move.
You multiply that times 1.75 to get your weekly return for our ETF.
And then you have the short
Beautiful.
version of that as well, right?
Correct. We have NVDS as in Sam. That's the 1.5 times short, but that's a daily reset. So you're only getting that 1.5 times
And
multiple, Nicole,
the numbers were
each day.
not well received this morning, right? And then it took it to the opposite direction.
Launched last week gives you 1.5 times long weekly exposure to Tesla.
And then for the S&P 500, the triple Qs and the stocks, what seems to be most popular?
So far, since launch, we've seen the most inflows into our triple Q ETFs, the monthly ETF. So that gives you 200% the monthly return of the QQQ ETF. And that is for the calendar month. So your sort of return profile goes from the last trading day of the prior month to the final trading day of the current month.
And the next calendar reset for these names, I mean, some of them are weekly and some of them are monthly, right?
Correct.
Is it the obvious? Is it what it appears to be?
Yeah, so five of the 8 products are weekly reset and 3 of them are monthly. So this Friday at the close, we'll reset.
Nice.
Weekly ETFs.
Holy smokes, look at this market. Look at the market. Go, gadget. All right.
The S&P that had those tech stocks that made it take off. Do you have something similar that people want to have exposure but not get so jostled by some of the Mag 7?
Yeah, not yet. Obviously, we always marinate a lot of ideas as a trader, but
Okay, I just took some profits in the ARM put credit spread. I'm going to take that cash and I'm going to buy shares. Okay.
There's more risk. I mean, just so people understand, the leverage to the downside can be if there is a major sell-off, right?
Yeah, remember, our ETFs, the calendar reset ETFs are point to point. So again, they'll give you the performance for the month. So if the Qs are down 2% for the month, MQQQ, sorry, which is our monthly Qs, that will give you'll be down 4% for the month.
What I think is interesting, though, and it sort of saves folks the anxiety of the day-to-day, doesn't it? Because most of the months are higher. When you look at year over year and you look at over long term, and it's mostly higher. You're not mostly lower, right?
Yeah, and September, of course, is historically the worst month for the U.S. stock market, and we're seeing that now, right? The stocks,
Man, what I see in the trading room is lots of different tickers being posted in the room. That's a good sign. That's a good sign for breadth improving. So that's what I want to see. Still 189 stocks, 190 stocks green, 314 are red on the S&P 500. NASDAQ 100. Let's take a look at that. NASDAQ 100. 100 of the best stocks out there. NASDAQ 100. 67 green, 34 red.
The year since last spring. So right now we're having a winning week.
yeah, it was an unfortunate sort of timing for our launch. You can't time these things, but you know,
Okay, Starbucks. Nice move on Starbucks. Thank you very much, Starbucks.
Right. No, look, do you feel like
Wow,
you're
look
at
at
the
this
right place
market.
at the right time?
The bears must be pissed.
Again, you can't time an ETF launch, right? But I think, like as I said, I think good entry point here, October, November, historically very strong for U.S. equities heading into the end of the year. So I think the timing of our launches was good, and we also have a few products coming out October 1st that will give you quarterly exposure. So not weekly or monthly, but quarterly leverage on
Right.
key ETFs.
Right. You know, it's obviously a concept that people should consider if they want to diversify a portfolio.
Hope everyone's having a good day. I can't see how you wouldn't. What a hell of a day this is.
Just owning, let's say, the S&P 500 via an ETF.
All right, Matt Markevich, thank you so much.
What's Apple doing? Apple doing? Okay, 222.50, 227.50. Call vertical. That's doing well. That's okay. It looks pretty good. Looks pretty good. Starbucks. Jesus. Look at Starbucks. What a pretty chart. Starbucks. SBUX. Starbucks. Starbucks. Let's take a look at Roblox. Roblox. People were looking at Roblox this morning. RBLX. Okay, Roblox is still holding on to the high. All right, still holding on. All right, that looks good. Roblox.
Quick question, Carl. Can you offer me the same choices as Schwab? Choices? Yeah, at Schwab. Full service wealth management advice.
Starbucks.
You know Carl's the only choice you need, right? Neil, tell me you know this. Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street.
Wow. Wow, wow, wow. Starbucks.
Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with
Tesla, TSLL, still moving.
Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network.
All right, we're coming into the 3 o'clock power hour.
Schwab Network. Welcome back to the watch list. Solar stocks have been seeing some big gains today after it saw national attention last night during the presidential debate. So how could the race or maybe other macro factors really affect this industry? Because we saw up arrows for these names this morning when the market was selling off. Jason Britton's with us, President and CIO Reflection Asset Management, and Madeline Ruiz is with us, AVP Research Analyst at Global X ETFs. Madeline, we'll talk to you first. Some of your thoughts.
Yeah, so the U.S. solar industry has really been seeing quite unprecedented growth this year. You know, we're seeing strong growth globally, but the U.S. has kind of been one of the highlights, especially at the utility scale. As you mentioned, there's been tailwinds not only from some of those supportive policies, but also technological advancements and rising corporate interest. We've seen a lot of discussions in recent months around power demand from AI and data centers and the role that solar could potentially play there. So yeah, it's been an exciting time and things that we're really following closely.
Yeah, I mean, First Solar was jumping 9% earlier today. You know, you have several names that are obvious: Solar Edge, Canadian solar. These are some of the names. You have the ETF, TAN, which is also in focus in this conversation. Jason, anything jump out at you during the presidential race? So some people are saying this was a Harris bounce as she talked about alternative energy.
I think absolutely that this is the marketplace is taking a strong bet now on the Inflation Reduction.
She hates fracking. How can it be? Oh man, I don't understand the media.
My colleague mentioned demand on the utility side. I mean, we did 32.4 gigawatts of installed solar power just last year. That's 31 gigawatts.
Funny thing about politicians, they'll say anything to get into power.
Exact same level of capacity versus installation, which is a great find. I think with the falling rate environment, we will see the economic conditions get better to bring back solar on the residential side, but I think it's going to be slow and still challenged because most of that slowdown, in my opinion, was based on the net metering issue and how much you could actually sell back to the grid. So I'd say all in all for the marketplace and all stocks, great night last night. Average 20-day moving volumes up 300% on companies like First Solar. We talked about First Solar on this show back in May when it was traded at $175 a share, now trading at north of $234. So folks should watch this show if you're looking for good tips because that's 35% in less than 3 months.
Yeah, you're absolutely right. I mean, the group has had, I mean, if I look at TAN, which is the ETF, that is down year to date, but we're certainly seeing this jump. And Madeline, I wonder if now is the time for solar boom. You know, can we see growth? It's not going away.
ABGO, Snowflake. All right, so look profit taking. Russell timing that short pretty good there. Profit taking.
For context, here in the United States, forecasts show that solar could become the second largest generation source in our power mix behind only natural gas. But it's really not just a story about the actual development of these systems. We're also seeing the potential growth opportunities for those solar
Excuse me.
or solar component manufacturers as well. And this is where, you know, we think that ETFs can be quite beneficial because
All right, starting to fade from the highs.
potential growth across the entire solar power value chain. So from those manufacturers all the way through to those developers.
Yeah, and quickly, Jason, we try not to get too political here on the network, but the different administrations seem to have a little bit of a different view when it comes to solar. Can you paint the picture if one wins over the other?
So I think if you look at a Harris victory, that is basically the market expecting the IRA to continue to provide those subsidies. And you're going to see growth not only from the manufacturing, as Madeline said, but you're also going to see it in high-quality jobs onshore in the States because there are incentives in the IRA for actual foreign companies to build projects here. So a lot of the Chinese companies are coming and establishing a manufacturing base here in the States. I think there are something like 30 projects right now that are currently either in some form of a plan.
Okay, I got to change the channel. I'm so tired of hearing about politics and what Kamala and. Shut up. God, brain dead. Okay, I'm waiting for the CNBC to come back on.
Mechanism, and that's why I was awarded the Nobel Prize. I mean, congratulations. I mean, that's quite the feat. And for anybody that is unfamiliar about nitric oxide, I'm sure we'll get into this a little bit more. The format of this episode is I'm going to kind of bring our attention back to nitric oxide, what it is, why it's important, but really we're going to be answering quite a
Starbucks still going?
First video that people are so curious about in terms of why is it important, how can I create it, how can I get it, and a few other things. So just to kind of set the tone, just pull the definition from Google. NO, nitric oxide, is a gas formed by combining nitrogen and oxygen. It occurs naturally both outside and inside the body. Outside the body, nitric oxide is a colorless.
Most stocks are up and to the right. A little bit of profit taking there. Okay, a little profit taking. I got a nice bounce again. Oops, let me go check something here.
So my first question, or our first question is, how can it, NO, affect pre-diabetics?
Well, in a very favorable way. The thing to remember is that there are certain factors
factors in the body that lead up to diabetes or pre-diabetes. And one of the most important factors that leads to diabetes is a deficiency in nitric oxide. When your nitric oxide levels are low.
At night.
So if one of the two, at least
Welcome back to Power Lunch. We've been talking a lot today about the prices consumers are paying for things because of the CPI. Well, luckily, computers once used by Steve Jobs is not a component because Robert Frank is here with the eye-popping amount it is now worth.
We would have high inflation if it was, Kelly. It was one of only 200 of the first Apple computers. It was hand-built by Steve Wozniak back in 1976. It is only one of 70 that still exists, and this is the only one that came from the desk of Steve Jobs. Christie's selling the Steve Jobs Apple I for $945,000. That's way above the $500,000 low estimate, and it is a record for any vintage computer. And when Steve Jobs was fired, that was the first time, an employee retrieved it from his desk. It was then sold to get this Paul Allen. He's the co-founder of Microsoft, of course. He displayed it in his technology museum. Paul Allen's estate was the seller through Christie's. Allen's estate also during that auction sold a Cray 1 supercomputer for $1 million. You can use it for a sofa if you don't want to use it as a computer. And he sold a 1939 letter from Albert Einstein to FDR warning about Germany's nuclear bomb program. That letter selling for
Looking for pullbacks.
And this is my favorite, a lunch menu from the Titanic, April 14th, 1912. What about that day? Well, that was the day the ship hit an iceberg. That menu selling for $340,000. That was 6 times the estimate. For more on what
Supermicro,
the wealthy are buying,
AMD.
how they're spending, you can go to
Looks like profit taking. I would be taking some profits off into the strength. You can see that fair value gap up there at the high.
And it probably did about 1,000 of what you got on your iPhone. So I looked at that Apple I computer. It had 4 kilobytes of memory. So the new Mac Air is 4 million times more powerful. 4 million times more powerful than that Apple I would. So, but it just shows you, like, there are a lot of people, a lot of the wealthy now made their money in tech. So for them, that is like the holy grail in their world to have one of the Wozniak-built computers that was on the desk of Steve Jobs. As all these tech wealthy start to collect, they love these vintage computers. They love these pieces of their history.
If I'm remembering correctly, and I may not be, the Apple I was, what did you say, only 340 were built or something like that?
There was, I believe, 200.
200, because the Apple II,
that was the one
first
the Apple II
commercial release.
That's right. That's right.
It was a more
the
compact.
Apple I was really just a motherboard, and they sort of put a monitor and a keyboard with it, but it was really the Apple II that people remember actually being able to
having
buy.
on your desk.
Yeah,
and it had a littlest screen, as I recall.
Yes, and this Apple I, it couldn't even do Word today.
No,
it couldn't could
it's
very
like a
basic function.
calculator. 4 kilobytes.
That's right. And then the Apple II is the one that people
I
actually
had
might
this
have
cool
seen.
thing in my own. I guess I was a kind of early adopter at Time Incorporated. I had this thing called a portable computer by Compaq. And I had to walk with it from the Time Life building in Midtown all the way to the Port Authority. It was this freaking big. It weighed about 45 pounds. I would walk with this limp to the Port Authority, going to gate 412 to get on the number 66 bus. I remembered and I hated it.
Too bad
but
you
that was
didn't save
cool.
it.
All I can say is I once had a BlackBerry. You know?
Robert, thanks. Yeah, it was about this big. All right, thanks for watching Power Lunch, everybody.
Closing bell starts right now.
All right, guys, thanks so much, and welcome to Closing Bell. I'm Scott Walker, live today in San Francisco, the Goldman Sachs Communacopia and Technology Conference. Some big interviews are on the way. In just a second, we're going to be joined by Altimeter Capital founder and CEO Brad Gerstner. That's a big one. And a little later, George Lee, he's the head of the Goldman Sachs Global Institute. He's going to be here as well to talk all things AI, and we are excited about that one too. In the meantime, let's take you to the markets here with 60 minutes to go in regulation. What a different picture it is at this moment, because it was a rough open. It has turned around, though, thanks to some buying in big tech. NVIDIA leading the way today. CEO and founder Jensen Huang telling this very conference he is still seeing, quote, great demand for the company's chips. Financials have been the weakest part of the market today as well. Some of those have turned too, including Goldman Sachs. Chairman and CEO David Solomon telling us earlier in an exclusive interview that things look pretty good in the economy. right now. And that was a big deal. Look at that stock trending higher throughout the afternoon and now in the green by 0.5%. Let's bring in Altimeter's Brad Gerstner now. He is live here at Communicopia with us. Thanks for joining us. Great to run into you here and see you.
It's good to be here. Good to be here.
There were two moments, I think, today. You know, the markets were a little rattled, and Jensen Huang was on the stage downstairs and just continued to talk about AI and the great demand that he's seeing. David Solomon, as I said, sat with us and said things in the economy look pretty good. You were sitting in on the Jensen conversation. It's now your biggest holding, isn't it?
It is. It is. I mean, as you know, really going all the way back to January 23, it's been among our biggest holdings. It is our biggest holding today. You know, there's been a lot of concern over the last couple months whether or not there's an AI air pocket. You know, Satya and Sundar got on their calls and said it's more important to overinvest than underinvest at this moment in AI. But we heard a few things this week, Scott. Elon Musk and Sergey Brin down in LA earlier this week at the All-In Summit both said that the pace of AI is faster than any other tech development they have seen in their lifetimes. Yesterday, Dario from Anthropic was here. Kevin Scott from Microsoft was here saying that, you know, demand is continuing to outstrip supply. We heard the same from Thomas Kurian. So when Jensen took the stage for NVIDIA this morning, he said nothing's changed. Of course, there was some concern about a Blackwell delay. He took that off the table. He said Blackwell is on target for Q4 ramping of and scaling of production. So I think that as we look at 2025, we're at about $5 a share for NVIDIA. It got as low as $100. That's 20 times earnings for the most important company in compute today. So I think that, you know, people are starting to lean back in to some of this big tech ahead of the election.
Is that when you made it your largest position during that disruption a little more than a month ago?
We added a bunch to our position, almost doubled the size of our position when it was disrupted earlier, you know, in August. And again, it's been very volatile. I think we'll continue to be volatile while people await that print in Q4.
But how are you thinking about the return on investment, right? I mean, you alluded to the concerns in the marketplace about all the money that's being spent, the CapEx up 40 or 50 or even more % on an annual basis. At what point, though, do we really need to see the fruits of all of that cash?
A critical thing to remember is NVIDIA is not just in the business of generative AI, right? What Jensen has reminded us is that we're going to have to replace the $1 trillion of CPU-driven data centers. This is stuff that drives things like data processing, everyday workloads at, you know, in these data centers. And so you have $1 trillion over the next 4 years of generative AI workloads that we're going to invest in, and $1 trillion of CPU replacement that we're going to invest in. And so I think you're seeing incredible returns. He said this morning, for every dollar invested by the hyperscalers, they get $5 out of the generative AI workloads. He also talked about data processing. He said for a company like Databricks, they can drive down the cost of data processing by 95%. Their operating costs on a certain workload goes from 20 million to 1 million. So I think this, you know, the red herring about ROI here is one that Wall Street spends a lot of time thinking about. But when you look in the boardrooms of all the hyperscalers and the big enterprises, they're all leaning in and investing.
The other thing he talked about that I thought was pretty interesting was a lot of what we hear when folks talk bullishly about Apple. He talked about their installed base, not only on the gaming side, but on now the supercomputing side as it relates to AI. It got me thinking about the way people talk about Apple. It also goes to the question of moat versus first mover advantage, right? He implies that he thinks they have a moat because of that installed base.
Yes. Well, I mean, when you think about the stack, this is no longer a computer chip. Blackwell has 7 different chips in the system. The system is the entire data center. And so the advantage, you know, we also talked about CUDA. A lot of people point to CUDA as a moat for NVIDIA. But he said CUDA is just the beginning of our moat. We have 350 libraries that sit on top of CUDA. These are things like CUDA-IO and CUDA-DN that are specific algorithms targeting things like data processing or image generation or things like recommender models. And so I think that the width of the stack is one that is much greater than people think. And he said the only thing that really competes is Google's TPUs. And he actually gave a pretty good shout out for Google's TPUs this morning.
Are you as optimistic about the other companies in which you have positions in, whether it is still, the Meta? Obviously, you will forever be identified with Meta because of the letter urging them to get fit, in which they sort of pushed back at first, but then listened, and look what the stock has done since. But whether it's Meta, it's Amazon, now it's Apple, it's Microsoft, Alphabet.
Let's just take Meta as an example, because I think it's representative of the opportunity we're going to see over the next 3 to 5 years in large cap tech and in tech generally. I just got out of a meeting with a smaller tech company, and the question I asked them is, can you do more with less? Right? Over the next 5 years, are your margins going to expand? And they said, absolutely. Why? Because they're getting 30% more productive in terms of code generation. They're getting more productive in terms of customer service. They're getting more productive in terms of customer acquisition. Zuckerberg gave an interview last night to the acquired podcast guys here in the city. And I think that was one of the great takeaways. He said, I'm in founder mode. I'm sitting in the seat. I'm driving the big opportunities. He thinks that, glasses, which are going to be fully capable of doing everything an iPhone can do, is the next, computing platform. But I think the most impressive things is that, remember, when you and I sat there in the fall of 2022, about the time we wrote the letter, they had 87,000 employees. Today they have 65,000 employees, 20,000 fewer employees, and the company is growing as fast as it ever has.
The overall exposure you have right now to the equity markets, what? How you always give us a real-time update on sort of how you stand, what your scorecard is.
Yeah, that's right. What is it? We started the year with about 85% net exposure, so we had a lot of chips on the table. By this summer, where the markets had run up a lot, we were more worried about economic growth, some of the things that we're seeing in the election. We took our chip stack all the way down to 30%, and today we're back around 55%. So we're about half in terms of the market. We're not all in. We think there are some things the market's got to get through. It's got to get through this election, right? The election's going to have a big consequence on risk appetite, right? Do we have a split government? Do we have a government that's controlled, full stack by Democrats or full stack by Republicans? We don't think.
Looks like they're tricking the bears, immediately jumping in at the high. We are at resistance, but we're not stopping. It looks pretty good.
I think we're going to get 50 in September, but
we think we'll get 50 next week.
And the reason I think it, not because the Fed's worried about the economy, I think it's because the level of restrictiveness is greater than we've seen in 2 decades. We don't need this level of restrictiveness, right? When we see these CPI prints and when we see the jobs report, we should be more worried. And I think the Fed is appropriately saying, we don't want to be the cause of the recession. Let's hit it with 50 up front, and then we'll do our 25s. But whatever they do, I don't think it's not bailing out the economy. It's just getting back on sides. They're way off sides in terms of their restrictiveness at the moment.
Should they have cut already in July?
I mean, I think there's a case to be made for that. But listen, they wanted to show that they were going to put a stake in the heart of inflation. And so they, they're on a path here. Nobody would have guessed that they could have slayed, inflation the way they have without putting us into a recession. Remember when Mike Wilson was calling for the hard landing in the spring of 2023? The consensus was there was no way that they could pull this off. I think as of now, Jerome Powell deserves a bunch of credit. They were late in getting on the game. I was highly critical, as you know, but I think that they've stayed the course. I think now we'll see whether or not they're, get back on sides. I think they need to get on sides.
Wow. So sounds firmly in the soft landing camp at this point.
I would say that that's the fat part of the distribution curve. But there is, there are tail risks on both of these. If I was firmly in the soft landing camp, and I believe we were at the start of an AI super cycle, I may have all my chips on the table.
You wouldn't be 55%.
I can paint a scenario for you where between now and the end of the year, we're down by 10%. I think the market would not like, a full stack Democrats controlling, both houses of Congress plus the White House. I can also paint a scenario for you where we have a real takeoff. Right, where the Fed gets on sides, where we have split government, where we see these, AI tailwinds come through. And so I think, when you walk around this conference and you talk,
Pretty impressive price action. A little bit of dip there, a little profit taking, and then we just pop back up. Like a cork.
Exposure management. Are you leaning more towards the former or the latter, where you get because of what's happening in AI, inflation is conquered.
Everybody got so grumpy at the beginning of August. We took up our exposure, right? Price of entry matters. Buying Nvidia at $100, I think, was a layup this year. But Nvidia at 140 would be a bigger question, right? You would have pulled forward a lot of those returns. So I think for us, we're doing what other managers get paid to do. We've had a good year. The market's up a lot, and we're just managing our risk until we get some more of these cards turned over. The election.
Nvidia. Brad Gerstner talking Nvidia.
Before we go, outside of AI, the most exciting position you think you have, because you have a couple dozen positions, right? Is what?
You look at companies like Mercado Libre or a company like Coupang in Korea. There are a lot of companies that people have kind of forgotten about as they moved in to the Mag 7, right? I think there are going to be a lot of internet companies that are benefited by AI. Like I said, not only margin expansion, but re-acceleration at the top, where they can acquire customers.
Starbucks, a little profit taking at the high. Starbucks, we had some resistance up here before. We need to get above 99. Above 99, this should rectify.
Nobody would have ever thought we would see this reinflection in growth. And then I think, of course, the trillion-dollar question.
Okay, Starbucks, when it gets above 99, you can see on the live chart on the right that once we get above 99, that order block will be negated and we can go on to the next level. Okay, go on to the next level. What is the next level? Next level is looks like 116. Okay, so you can see very clearly that momentum has slowed. Now it's starting to turn again. Today was pretty big. Big move on today. We got Mr. Nickel taking over CEO. There goes the S&P. S&P, pow.
It's so great to catch up with you here, and especially now, just given the questions that are being asked, and you've given us some really good answers on perspective.
S&P is tricking the bears here.
Of course, he's the founder and CEO of Altimeter. Thanks so much. Great to be here. Let's bring in now Lauren Goodwin of New York Life Investments and Jason Snipe of Odyssey Capital Advisors. Jason's a CNBC contributor. Lauren, I'll go to you first. Just look, the price action alone today is a good place to start, and just what your thoughts are based on what we've heard here and your overall view.
So the inflation report that we saw today is confirming a trend that we've acknowledged over the past couple of months, where now that the Fed is, and I think appropriately so, focused less on inflation and more on economic growth, that completely changes.
QH, you're looking at QH? All right, let me take a look at it. QH, what is that? Technology. Okay, just dropped back down to $1.70. Okay, QH.
Any sort of data that comes in will be the opposite. I think we'll see tech lose leadership in those moments, as has been the case in the past couple of weeks.
I would just say on the note on the economy, let's play for you what Goldman Chairman and CEO David Solomon told me exclusively a little bit earlier today on the halftime report about how he sees things shaping up right now.
I think generally speaking, the economy is still in pretty good shape. I think we're going to get a couple of interest rate cuts here. They've been widely telegraphed at this point in time. And so, base case, I can point to things that are slowing a little.
QH, all right, what do they do? Software. QWho, what do they do? I know they're software, but what a QH probably doesn't show up on Earnings Whisper. They don't cover small caps. QH, are they Chinese, Korean? What are they? QH.
And what we always say to folks, I mean, the financial space is obviously very diverse. There's a lot of different companies. There's a consumer bank.
Oh boy, there goes the S&P ripping to the upside. All right, so they're not stopping this. They're buying like hand over fist.
Which I was excited about, and we've been hearing this from him for quarters already. They are exiting the consumer business, right? That is in full play. Yes, there'll be a $400 million hit to
okay. I think they'll get through that. And they did talk about a 10% reduction in trading revenue off a humongous base, right? So that as we look through the end of the year, and obviously we're 54 days away from the election, that ball will continue to perk up. So I'm not concerned about trading revenue. I think that will be solid for me. And then the capital markets piece, yes, obviously M&A, IPO, underwriting business has been anemic this year. We've been talking about it, really getting started in earnest in 2025. I think that likely will be the story as we watch Fed policy come into play and rates starting to ease somewhat, maybe 100, 150 basis points over the next 18 months or so. So I think there's a lot of good things that we see here in Goldman, and the price action has been very solid thus far this year, and I see it as an opportunity in the pullback that we've seen over the last few days.
Lauren, next week is the moment of truth, really. The Fed, we think or expect, is going to cut interest rates. Does 25 or 50 even matter?
It does matter, Scott. I think, first of all, the difference between 25 and 50 basis points really plays into that story of market reactivity, where if the Fed were to cut 50, signal maybe they're a little bit more concerned. That's more liable to be a defensive move for the market.
Okay. What are we looking at? QH.
But even at 25 basis points, it is so important for investments.
Gig economy, platform, local life services. Okay. Okay. Bitcoin bouncing, Bitcoin, Tesla bouncing, got a lot of bounces, some short-term profit taking for about 20 minutes, and then now we're starting to turn back up. Okay. Super micro, about the same thing, 20 minutes of profit taking, and now it's starting to grind back up.
Income generation opportunities change in a meaningful way when the policy rate or the cash rate starts to move lower. And so no matter what we think about market sentiment, the sector moves one way or another, the election volatility that we're likely to see, moving towards capturing the higher interest rates that we have while we have them, I think is pivotal for asset allocation in these next few months.
Jason, I'm looking squarely here at NVIDIA today on my computer up near 7%. One of the big stories of this market, and the commentary we got downstairs earlier this morning here from the founder and CEO of that company, Jensen Huang, who spoke about the great demand that he's seeing among other things. You're a holder of that stock. You heard Brad Gerstner here talk about the weakness that it had.
All right, Bitcoin turned back up. S&P back to the highs.
Your thoughts on that?
There's no doubt about that, Scott. Obviously, the stock has pulled back 20% over the last couple of weeks with the unwinding of the carry trade. But if you listen to Jensen and listen to obviously all that he said, there's no shortage of demand. And that was obviously on the earnings call. All we've heard from all the hyperscalers is all the CapEx that's being spent here. And I think I agree completely with Brad in focusing on really what's going on internally in these companies. What are the executive staff focusing on? How do we implement these AI solutions for our customers and our providers? How is this going to exclude? How does it really affect productivity? I think that's really what folks are focusing on. So the CapEx is there. Obviously, NVIDIA is right on the interstate as far as the demand for the actual.
Wow, what a move today. Yeah, Jason, above $10 per share and 300,000 shares per day. I like to see the stock trading at least 300,000 shares per day. That way I know it's not a thin trade. And I like above 10 because institutions generally won't touch anything below 5. So I just double that and look at 10. Looking at quality stocks in the past, most of them have been above $10 per share at least. Whew. All right, so it's kind of been an exhausting day, believe it or not. I've been just preoccupied with looking at all these different screens, what's moving, what's not. Market. All right, we still got mostly green on the NASDAQ 100. We're about 2/3 green, 1/3 red. 66 stocks are green. 33, 35 are red. So majority green on the NASDAQ 100. So the tech stocks looking good. Let's go take a look at the New York FANG Index. And first, we want to look at breadth. Let's take a look at breadth. Okay, these are all turned up. More so with the NASDAQ in the lower panel. Small caps turning up, mid caps. S&P turning right back down. So that's interesting. S&P. Let's see how many stocks are green on the S&P. How many are red? S&P 500. Survey says 193 stocks are green, 309 are red.
Yeah, 38 minutes left in trade with GameStop.
38 minutes to go.
Retailer reporting a steep decline in second quarter sales compared to a year ago. The company also announced an at-the-market stock offering of up to 20 million shares. New stock is up about 14% year to date. Let's talk Williams Sonoma. Added about 3% after Jefferies upgraded the stock to buy from hold. Jeffrey said that home furniture has, quote, hidden gems within its portfolio and could benefit from an even modest recovery in the housing market. Williams Sonoma up more than 30% so far this year. Scott?
All right, Seema, thank you very much for that. That's Seema Modi. We're just getting started. Up next, the co-head of the Goldman Sachs Global Institute, George Lee. George Lee right here on set. We discuss the future of AI, the sectors that it could impact the most. We're live from the Goldman Sachs Communacopia and Technology Conference today in San Francisco. You're watching The Closing Bell on CNBC.
Oh, boy. Hope everyone's having a good day. We're right back up, making new highs on the day. Tricking the bears, unfortunately, for them. We hit resistance. We immediately paused, saw some profit taking for about 25, 30 minutes, and then we resumed the trend up. Okay. So let's take a look at the S&P equal weight index. We want to see the number of stocks above the 20-day turning back up. Okay. Nice little dip and buyers showed up. Okay, that's cool. Number of stocks above the 20 and the 50-day have yet to turn. Okay, S&P 1500. Let's take a look at that. S&P 1500. All right, that's still turning down. So I don't know, folks. I'd still be taking profits off in the strength. This just seems a little too convenient for prices to be ripping higher. All right, so this is turning. A little bit of a lagging indicator. We are bouncing off the lower Bollinger Band. We're below the histogram is below zero. Okay, S&P. Let's look at the New York Stock Exchange. Okay, nothing there yet. Okay, number of stocks above. Advancing versus declining. Still got red sticks. This will turn green if we get above yesterday's high. Advanced decline, trying to make another higher high. We're making a higher low, looking for a follow through.
Inventing the next computer era. It's fun to see all these amazing applications
Jensen Huang.
It's incredible to see robots walking around. It's incredible to have these digital agents coming together as a team, solving problems in your computer. It's amazing to see the AIs that we're using to design the chips that will run our AI.
Well, that, of course, NVIDIA CEO
S&P at resistance, second level resistance. Several layers overhead. Doesn't mean we have to stop there. Notice the previous daily high, previous daily low. We're finally breaking above it.
I feel like Jensen set this up perfectly for my first question to you, which is, where are we in the AI cycle?
Yeah. I mean, first of all, it's great to hear Jen. First, it's great to have him at the conference, but to hear that sense of wonder and excitement that he brings to leading, what is arguably the most important company in this revolution, I just think it's inherently exciting, and the buzz after his presentation was terrific. So where are we? Like, the national anthem is finished, but we're in the very early innings. And I would emphasize this is a nascent technology, and Jensen mentioned this in his remarks. It's a new form of computation. And so that new paradigm takes a while to make its way into consumer habits, and more importantly, it takes a while to make its way into the enterprise.
Okay, we've got 32 minutes to go, 30 minutes to go on a stupendous reversal day. I'm not surprised. I'm just relieved, I guess you could say. I'm relieved to see how strong the markets are.
Very well known to our viewers because he comes on our program, and you said the following, and I want
Very
to
nice.
bring this up again. You said, quote, "The degree to which this technology just dropped on the face of the earth and seemed immediately consequential to people is quite unusual, and that degree of unanimity is building up rather than dissipating." Now, you could take that from two ways. I mean, you could say, well, that's incredibly bullish, or you can say, wow, everybody's on the same side of the same boat. Right? How should we take it?
Yeah, it's a great question. Per my comments, it is fascinating in the sense that there was this moment, November 30th, 2022, where the public at large got a sense of accessing and having a conversation with a machine. It was like a fundamentally new way to think about computation. And it attracted an enormous amount of attention. And yeah, I think the unanimity, the confidence that this is going to be transformative for businesses, for nation states, for our world, continues to build. That having been said, I think there's a healthy debate that's going on, a set of divergent views about how fast this is going to happen, whether or not the scaling laws persist into perpetuity, what bottlenecks and constraints we're going to face, the data wall that people are talking about. So I'm actually encouraged that while the enthusiasm's building, there's an enormous amount of investment, obviously, there's also a good two-sided market about the pace, timing, and ultimate scale of impact of this technology. I think that's healthy.
How quickly, though, do we need to realize the investment on the spend?
Yep.
The return on the investment, obviously.
Yeah, I mean, our investment research folks have done some really interesting work on this. And I do think we have to look at this in the sense of we're building a platform. The platform, it will take a while for that platform to translate itself into applications and use cases that create the kind of economic impact we're all looking for and waiting for. By the way, extremely encouraging early evidence of this. And you've had CEOs like Andy Jassy and Doug McMillan and others talk about tangible dollar savings and speed ups, reduction of latency. So I think there's real impact. It's just going to take a while to make its way through the system. And again, changing enterprise habits, fastening this technology into enterprise architectures, making it safe, reliable, authoritative, all of that takes time and effort.
The other point you made with Tony that I thought was really interesting was, as much as you travel around and you meet with different CEOs, whether older, younger, it's generationally unanimous, the excitement. Whether you're talking to an older CEO or a young founder of a company. I thought that was fascinating.
Yeah, I don't run into many CEOs who are older than me anymore, unfortunately, having been around the game for a while. But you're right. This is a multi-generational phenomenon. I think one of the fascinating things from the Apple announcement the other day was the adoption of earpods for, basically hearing essentially as hearing aid kind of thing. So look, this is a technology that is widely accessible. We've got this platform of billions of phones in the hands of consumers, the ability to just access intelligence, to have a conversation with an infinitely smart, patient, non-judgmental machine. pretty impactful no matter what your age or station in life.
I think we're trying, certainly the investor base is the investor class is trying to assess which sectors are going to be most impacted by AI.
How should we think about that? Yeah. Look, at the highest level, you could say,
Okay, really nice day. Take some things off just to give you, a positive disposition going into tomorrow. We do have a bullish bias. The way this is closing right here, you can see that previous daily high. Previous daily high is taken out. That's the Friday high we've been looking for. It's technically not the previous daily high, but this has been on here since Monday.
It might be easier to say what billion-dollar market is not going to be transformed at some level. So obviously the developer community, clear traction in that area, customer support, law, medicine, almost across the waterfront. There's real tangible impact.
What about your own firm?
Yeah,
how are you thinking about that?
Yeah, we knockwood, we're a firm that has been deeply engaged with advanced technology for many, many years. It's been kind of a signal dimension of our strategy. We have a great group of engineers. We have great leadership in our CIO, Marco Argenti. And so from the very beginning of this generative AI wave, we've been trying to be thoughtful about how to deploy these tools to create efficiency and allow our people to be more productive and creative. That having been said, we're a regulated financial institution. We have to move carefully, thoughtfully, deliberately. But we already have a handful of applications out there making a big difference, probably most friendly for our developers. And we're seeing kind of productivity and efficiency pick up there that today allows us to just get more work done. But the possibility of taking our best client-facing people and giving them access to that, salient, timely, and creative information right at the point of engagement with clients is very exciting.
You mentioned at the outset, which is not lost on me, in terms when I asked you sort of where we are in the cycle and those who are going to be impacting, those who are investing. You said nation states. Got me thinking, geopolitically, how we need to be thinking about artificial intelligence and the role that it's going to play.
Yeah, it's fascinating. I've been in technology for 30 or 35 years. This is, a technology wave that is distinctive by the fact that nation states view this as being highly consequential to their productivity, their culture, and their defense. And so one of the cool things about building this Goldman Sachs Global Institute that I'm doing with my partners.
Okay. Oh, wow. Wow. Just looked at a couple of things and just knocked me off my chair.
What the influence of this technology should be, how they should position their countries.
Roblox, RBLX, you're looking at? Roblox, you looking at that one? Okay. Yeah, I don't see anything holding it back, really, Crimson. Susie, you do have a major level of supply overhead.
TBD for us. We'll have this conversation again. Great. I hope. It's great to see you.
Okay.
Thanks for coming on our program. Always a pleasure. All right, Stuart Goldman joining us here at Communicopia. Still to come, we're going to break down the new data.
Oh, he was from Goldman, huh? Okay. Okay, Roblox trying very hard to get through this area. Okay, we had some buyers midday at 44.60, 44.50, 44.65. Following the buyers, whenever you see this stair stepping higher, Susie, whenever you see these order blocks stepping higher, the odds of a breakout are increasing. Starbucks, Roblox. Roblox looking good. I don't have a position. I had a position the last time it broke higher. That was mentioned by, was it Option Hawk, I think. one of those guys, Option Hawk or Jason mentioned it. We took a trade. It was a 2-day trade. It popped up. That was the one back there on like the 20th or 21st. Popped up. It dojied the next day. I was out at that point. So that looks pretty good. All right, we're at the highs of the day. I just keep thinking that the second half of September tends to be the worst part of the month. We have the reprieve in the sense that we bounced after a bearish start to the month. We're managing to reverse. I don't know. I'm just taking probabilities on my side. I want to have, maybe 5 or 6 good positions that I'm swinging, and we'll day trade, 2 or 3 during the day. But I want to have like 5 or 6 swing positions, decent size. Okay, there go Super Micro is just kicking ass. Wow. Wow. Super Micro. $30.
Live today from San Francisco, the Goldman Sachs Communicopia and Technology Conference. Take a look at the markets here. What a different picture this is from where we were this morning. We're at the highs of the day for the Nasdaq and the S&P 500. Nasdaq is almost pushing a 2% gain, and a lot of it has to do with the stock I'm going to show you right now. It's NVIDIA, because it's been trending higher throughout much of this day.
Roblox.
CEO Jensen Huang was here earlier this morning.
Okay, back to NVIDIA. Back to NVIDIA. Look at this sucker, just keeps going.
Weakness there. Now his largest position, as bullish as he's ever been there. Stock's up 7.25%. Joining me now on set with the big takeaways from this conference today is Kate Rooney. It's good to see you.
You too, Scott.
I mean, Jensen, that's a good place to start. But what are your big takeaways from those you've spoken with and the rooms you've been in?
Yeah, so Jensen was a big highlight. I've been talking to a lot of people more on the sidelines, sort of the investor group here. A lot of private equity folks, a lot of venture folks, a little bit of late stage growth equity. AI is the big theme, but interesting, I'm hearing a little bit of what someone described as AI fatigue. So the difference and the disconnect between what you're hearing from Jensen, what you're hearing from some of the CEOs on stage, AWS CEO as well, and all of the bullishness on stage versus behind the scenes, there's a lot of people saying a little more skeptical. They're a little bit burnt out from the AI conversation, and they're wondering about ROI. I know you've been asking people that today. When are we going to see this actually return to investors? And then they also brought up Copilot as one example of Microsoft, and Copilot really being a big example of, oh yeah, that's a tangible thing that people can point to and say it's working. It's not working based on what people are saying here. I would also say the consumer is a big focus. There's a lot of tech investors here. They're not necessarily focused on consumer spending, but they want to know the read-through to the economy. They pointed to Uber, DoorDash, Lyft, and some of the panels here. They said those CEOs painted a pretty rosy picture of the consumer. So they're actually quite bullish on some of the spending patterns, and I would say those are two of the big themes.
I think there's a good amount of conversation too about M&A, IPOs. Of course, we asked David Solomon the very question because they're at the heart of obviously that business. Let's listen to what he told me about that.
It's more thanks report earnings as we go through the fall. You're going to see that there's a material improvement in investment banking activity, particularly strong improvement in debt capital markets activity, and improvement in both M&A and equity capital markets activity. But what I would say, Scott, is I would have expected at this point in time more of an acceleration back to what I call normalized levels, we're still on equity capital markets and M&A running below 10-year averages. I see no reason why we're not going to get back to 10-year averages somewhat quickly. Now, that said, there's nothing that's fundamentally changed that says all this pent-up activity that's been held up won't come through. And when it does, we're incredibly well correlated to it. And I do think it's going to come through. So I do think you'll continue to see it pick up through the fall of 24 and into 25.
Okay, so that's Goldman's Chairman and CEO David Solomon here with us earlier. Does that match up with what you're hearing?
Absolutely. I would also say one of the reasons is mismatch between buyers and sellers and the pricing. The vintage of the fund is really important, especially in private equity. If you're a private company that raised money in 2021, you're not going to make that money back if you look public now. So that's something I've been hearing from investors saying those companies, that cohort, that vintage of companies that raised at the peak, they're waiting. And there is this pipeline, there is this backlog of companies that you talk to people who say the IPO window is open. It's possible to go public, and people are pointing to Databricks as sort of a blue chip example of.
Okay, Supermicro looks like it's trying to hold this level. Probably going to see some profit taking. I don't know. My guess is profit taking. We're starting to see profit taking again in the S&P at a higher level. I don't want to take puts. I'm just thinking that we're going to follow through. So as long as the S&P closes up here above the previous daily high, in this case, we're looking at the Friday high. In this case, we're looking at the Friday high. We want to have a close above Friday's high of the day. That would indicate a bullish bias for tomorrow. Okay. Okay. Nice move. Nice move. Okay, so we had a 4% pullback. Okay, let me zoom out of this a little bit. Let me add a few bars. I just want to make some notations. Let's go 30 bars. Okay, that's better. That's better. Okay. So the way the strategy goes on this, you pay attention to the previous daily high and low. In the case of Friday, it was a pretty decent downside bar. Okay. So you've seen this on another chart. I want to mark this chart up too. Okay. So the way the strategy goes, you can't have a bullish bias. Can't have a bullish bias until you take out Friday's high. And that's right there. You see the Friday candle? That's Friday's candle. So this is something we've been waiting for. We're finally getting it today if we can manage to close up here. It's above the 50-day. Previous daily high. That's pretty big. Don't need it that big. Don't need it that big. Let's go down a notch. Previous daily high. Okay, so the alternate theory also, the alternate thesis, I should say, goes as well. So if you drop below the previous day's low, then you would have a bearish bias. Make sense? Okay, so this is just one strategy. I look at it often. I don't talk about this very much, but people have been asking about it. I know Crimson used to do this too. She used to point out, she had a scan for previous daily high and previous daily low. I still have that somewhere. Okay. So there's a previous daily low, and here's the previous daily high. Okay, so after a 4% pullback, after a 4.4% pullback on Friday last week, we now have a previous daily high where we're closing above it. So that automatically, it doesn't guarantee, it's just a strategy. So you come into the day tomorrow, you come into the day with the idea of a bullish bias. Now, we have to close up here, of course. All right, so that's left to be seen. We are seeing this kind of move here on RSI, so that's good. MACD's turning. Let's go take a look at the triple MACD. Triple MACD setup. S&P 500. Let's look at the triple MACD. Designed by Mr. Gerald Appel. Should always give him credit because it's made us lots of money over the years. known or unknown, unbeknownst to some, that this third MACD is also turning. Look at the histogram bar. The 1226, which is what everybody uses. Okay, that's a little slower. 1226. The fast signal, 514, 55, 5, 514, 515. You can use either one. 15 would be 3 weeks, three 5-day weeks. 5 is the week. So the crossover is today. So that's telling you this is probably going to keep going along with what we're seeing. Okay. So this looks good.
Former President Donald Trump said during last night's face-off that he's, quote, a big fan of solar, but then he also slammed the industry for taking up too much land. Looking at shares of First Solar, leading the pack higher by nearly 15%. Let's take a look at...
Yeah, at some point, these solar farms are going to get more efficient, smaller arrays producing the same amount of output, megawatts, gigawatts, trilliwatts. So, one thing that Elon also talks about, Elon always talking about, oh, it's great. Solar is great. Solar is great. But you have to be able to store the power because the sun's not always out. Okay. So you can go days and weeks without really good, strong power, especially up north in New Jersey and, New Hampshire and those places, Colorado as well. So you get a lot of snow. The way this works is, you need batteries. So who does a lot of mining for that? Well, Albemarle's one, right? Albemarle that popped up. So that might be a play over the next few weeks. Albemarle, along with First Solar, Enphase. Okay, I don't like Enphase as much. I have an Enphase system on my house. I love the system, but this chart's just not speaking to me. First Solar. So any of these companies that mine lithium, and they got to come up with a new battery. They got to come up with a new battery. I have an electric lawnmower. I like using it. It's a Lowe's. Lasted for 2 years. The batteries lasted for 2 years. A couple of weeks ago, I was outside mowing, and then the thing just died. And it wouldn't charge. It wouldn't run. So I went and got 2 new batteries. So $100 for 2 new batteries. But what do you do with the old batteries? There are companies out there who recycle lithium. I'm not sure once the battery, how does that work? The lithium, does it change does it change its molecular makeup? Anybody know? Anybody? Frano, you're a biology person, right? You probably know chemistry as well? How does lithium work? I mean, it's a substance, it's a metal, right? A heavy metal. But once the battery dies and no longer can hold the charge, what do they do with that? Can they reuse it? I don't know. Supermicro is not stopping, and this is the second time, actually the third time we've seen in the evening session. Third time in the evening session we've had a pullback, profit taking, and its stock and the S&P index made new highs. Third time in a row. Wow, this is beautiful. I I can't help but think that you're counting the minutes before we get some sort of reversal. Big move. I'm thinking we're going to open as an inside bar tomorrow, but still be bullish and then maybe start to push back up. Some of these are really way overdone. Could keep going. Could keep going. I don't know. Yeah, they took a lot. They took off a lot. Yeah, NVIDIA took off a lot the previous week. It's like something like 15 billion. Man, NVIDIA sold too much too soon. Always better in hindsight, but I don't care. I mean, I'm making nice profits. I'm reducing my exposure. That's what my plan is. My plan coming into the week, we had 18 bearish indicators. 18 indicators were bearish coming into the week. 18. We had one neutral, one bullish. And the only reason we had one bullish is because everything was bearish. All right. So it wasn't really an indicator. It was because all the indicators were bearish that I thought to myself, okay, that's capitulation on Friday. So I gave us one bullish indicator. We had one neutral indicator because there's room there for some of these to change direction. Little little did I know that this week we were going to like flip the script and we're like at 15 bullish indicators and 15 bullish, 2 are neutral and 3 are bearish. So, yeah, this is a crazy day. So the point is that we've had this nice reversal. We have a bullish bias going into tomorrow. No doubt about it. As long as we close up here, we've got 8 minutes to go, 8 minutes to go. Yeah, okay. So, yeah, you're right. Yeah, my estimate was really low. It was like 300 billion in market cap that Nvidia lost the previous week on that drop. Now they increased a crazy amount today. They added 3 years of sales today. Wow. Even when Nvidia stalled, so here's some things to consider. All right, so let's go take a look at Nvidia. All right, so let's say you're trading Nvidia. Scott, just watch this, okay? Charlie Bolello. Okay, Charlie Bolello's analysis. Let's take a look at Charlie Bolello's analysis of NVIDIA. Okay, these are going to be off. I'm not sure I have them in proper order. But here you go. Okay, so S&P operating, they're looking for 2025 for S&P 500, the dark blue line, to continue to grow. Now, this is in the face of a Fed rate cut. In the past, when we've had Fed rate cuts, the markets have pulled back. So this is what analysts are looking at as far as earnings on the S&P. Okay, so that's the S&P. Okay, here's NVIDIA. Okay, NVIDIA revenues surged to 30 billion, up 122% over the prior year. Consensus estimate was 28.7 billion, so they beat. Okay, their revenue projection for Q3 revenue projection is 32.5 billion, which would be a 79% year-over-year increase. Okay, moving on. NVIDIA net income hit another record high at 16.6 billion. That was a 168% increase over the last year's Q2 net income of 6.2 billion. Again, this is from Charlie Bolello over at Creative Planning. Very smart fellow. You can trust his analysis. He checks and double checks himself. So that's NVIDIA. Now, as far as price to earnings ratios, Tesla is the only one above NVIDIA at this point. Tesla. All right, so at 56, price earnings ratio of 56, Ford, it's a bit rich. So it's got to keep firing on all cylinders to keep this going. Okay, back to the S&P. S&P, you see that peak there over on the left? That peak over on the left was 1997, 1998. We just surpassed the high in 2020, 25.3. We're at 25.6 and rising. The point here is that multiples are getting extremely hot. Oh boy, look at the markets go. Look at the markets go. So we're at peak. Now, what could help NVIDIA? Well, CapEx spending on Google, Amazon, Microsoft, and Meta, they basically said that they have to They have to spend money. Where's that chart? They have to spend money. They cannot afford to stop spending because they don't want to fall behind. So the big four, Google, Amazon, Microsoft, Meta, they're spending. Their trend is up. Okay, CapEx. They would rather spend money and be productive in their infrastructure than not spend money and risk falling behind. They can't do it. So this chart right here is telling you what NVIDIA is going to do. There goes Supermicro breaking out. S&P is at the highs. Holy crap. Okay, so I'll get off of this for now. Just know that the S&P is at peak earnings. Okay. Yeah, looks good. Wow, Supermicro. Shaking my head.
And there are some concern about unpleasant side effects like nausea. Again, it's early, so we'll have to wait to see more, Scott.
S&P. Oh, Jesus. Oh, boy. I feel for those of you that have been bearish all day, or at least that what you would expect to be resistance is not being respected. We're pushing higher. Look at NVIDIA. Holy smokes, I took too much off. NVIDIA took too much off.
And we've been seeing software stocks quietly outperform chips over the past 3 months. IBM CEO Arvind Krishna spoke to CNBC earlier this summer and remained positive about the AI opportunity with bookings up on a sequential basis. He said that remains a big priority for Big Blue, Scott.
All right, Tina, thanks for that. That's Neil Modi. Mike, I'll come back to you. We get that sound effect with 2 minutes left to go in the trading day. A lot of pressure coming off the banks today as well. You know, there was a couple of moments today. By the way, NVIDIA right now, as I look at it, is up more than 8%. Jensen Huang speaking here at Communicopia. David Solomon speaking here to us earlier today exclusively on halftime at Communicopia as well. And really giving some good clarity on how he sees the economy shaping up from here.
So I guess coming after 2 days.
Wow. Look at this freaking market. Ay. All right, so I got to take more off here. I've seen this movie before. You got to take profits off in the strength. Okay, nano nuclear, that one pulled back a little bit. Looking for that to follow through tomorrow. It's running up against supply, so I'm not surprised. Apple, nice move on that. Oh, look at that Supermicro. Beautiful. Supermicro. Oh, right at the closing bell. I missed that. Okay, I was going to sell Apple just now. Okay. All right, folks. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. It is 4 o'clock straight up, Wednesday the 11th. Remember 9/11? Remember 9/11? Have a great evening, everyone. Take care. We'll see you in the morning. We have a bullish bias for tomorrow. That's based on the way we closed above Friday's high. So now we've reversed the downtrend. Okay, so look at this again. Okay, here is what we're looking at. Previous daily high. This marks the Friday high that we've been watching Monday and Tuesday. We're finally above it. And we have a bullish bias for tomorrow. RSI is rising. Okay, so if you decided to swing, you're probably going to be okay. MACD and stochastics turning higher. You know, short-term swing, if you just thought about holding on to it, you're probably going to be fine. Have a great evening, everyone. Take care. We'll see you tomorrow. Ciao.